Good morning, you all who are attending the second day of the BIS Innovation Summit in person and virtually from around the world. I'm Codruța Boar, advisor in the BIS Innovation Hub, and I am pleased to be here with you again today. Yesterday, we have heard how innovation is opening up possibilities that were not there before. Today, we will continue this journey. Let us first start with a keynote speech on technology and inclusion in central banking. And for this, I have the pleasure of inviting on stage the BIS Deputy General Manager, Ms. Andrea Mechler. The floor is yours.
Good morning, everybody. It's a pleasure for me to be here this morning and to welcome you all for the second day of the BIS Innovation Summit. And I have already heard a lot of buzz about the first day, so let's try to make the second day even better if it is at all possible. What brings us here today is one common certainty. Central banks need to innovate. They exist in a world of rapid technological change. Central banks must learn fast in order to understand how technology is changing society, and they have to build technology themselves. As BIS General Manager Agustin Karsten has said, and will also continue to say today, the central bank of the future will have to broaden its perspective, work in innovative ways, and adapt constantly to meet a changing world. That future is already happening. But how do we get there? Today, I would like to share with you how we at the BIS see the role of diversity and inclusion in enabling central banks to embrace technology and foster innovation and hence help fulfill central banks' mandate. Building diverse team is a first step. As the author Stephen Covey has said, strength lies in differences, not similarities. Look around this room at the very many bold and technology-minded and capable staff from a wide range of backgrounds. You are all incorporating new areas of expertise into central banking. Central banks' careers are no longer just for economists, but also for professionals from a broad range of disciplines. At the BIS, we too strive to build diverse teams. With a global and professionally diverse workforce, the BIS draws together people from different backgrounds and thinking styles. Gender, of course, is one very important aspect of diversity. Women comprise, after all, 50% of the population. Research tells us that for a group to have a collective impact on the organizational culture, it should represent at least 30% of the workforce. In 2020, we at the BIS set a gender target of 50% for new hires of line managers and senior professionals. Since then, the share of women has increased, and today, just below 30% of our line managers and 28% of senior professionals are women. This is a move in the right direction. We should aspire to do even better. There is still work to do. Our innovation hub is another very important source of diverse thought and skills that enables us in turn to embrace new technologies and foster innovation. The Innovation Hub is a global platform led by the BIS, where central banks collaborate with each other and with other stakeholders. We have hub centers in 8 locations around the world. They reflect the perspective and needs of various central banks and regions. They are home to staff from the BIS, different central banks, academia, and the private sector. And the teams are multidisciplinary, including data scientists, blockchain experts, economists, supervisors, lawyers, to name only a few. But building diverse teams is not enough. Central banks need to ensure that every member of the team feels included. Diversity without a culture of inclusion is meaningless. People need to feel empowered to express their views and contribute to the success of the team. To quote diversity and inclusion pioneer Werner Myers, Diversity is being invited to the party, inclusion is being asked to dance. And we all want to dance. I could not agree more. An inclusive environment fosters out-of-the-box thinking and innovative ideas, which are so central to explore and push forward new technologies. An inclusive environment also builds resilience. Team members with different backgrounds and experiences draw strengths from their diversity. They challenge each other to think in unconventional ways, and they respond better to change. In our efforts to promote inclusion, we at the BIS are committed to walk the talk. Let me tell you how we are living inclusion and how it enables us to be more effective. At the BIS, we innovate by collaborating closely with central banks, policymakers, regulators, lawyers, the private sector, and all key stakeholders. We use approaches such as design thinking to identify potential areas of opportunity for central banks' innovation and to create tangible technology-based use cases. We use these techniques to ground ourselves and to empathize with users' needs. Agile methods then help our teams to continuously rethink and review the plans, ensuring that insights and perspectives are incorporated as they emerge. The diverse backgrounds and perspectives of colleagues from all over the bank generate insights in a research policy feedback loop. The BIS combines practical technological experimentation from the Innovation Hub with cutting-edge research and policy development from our economists and other experts. Think about the payments-related projects such as Nexus and Agora, or the tech sprints the Innovation Hub is conducting. These pioneering projects seek to provide ongoing synergies with the policy work done by the BIS CPMI Committee, BIS research analytical work, high-level policy discussion at the BIS, and in other international fora, and close interaction, of course, with the private sector. This is also true in other areas. On climate, we at the BIS integrate the latest research from our economists with knowledge developed by our risk experts, banking specialists, and corporate service experts. We use the resulting insight to contribute to the work of international bodies such as the G20 or the Network of Central Banks and Supervisors for Greening the Financial System, the NGFS. And we bring relevant tech solutions from the Innovation Hub. Here, the advancement of artificial intelligence are likely to play a catalyst role in the future. We also work closely with our hosted groups, such as the Financial Stability Board, the FSB, and the Basel Committee on Banking Supervision, the BCBS, to maximize synergies and avoid unnecessary duplication of efforts. Individually, each area contributes value. Together, they become even more relevant and powerful. They enable innovation to become reality. They enable technology to fulfill a purpose. Embracing innovation and developing practical, innovative projects teaches us a lot. Let me pass on 3 key lessons that we have learned through the work that is being showcased during the conference today and at the BIS more broadly. Number 1, there is value in diversity. Diverse multidisciplinary teams are a key ingredient in the success of any institution or project. Let me give you examples from the Innovation Hub projects Helvetia and Jura. These projects demonstrated the power of tokenization through the potential use of wholesale central bank digital currency and security settlement, including on a cross-border basis. The Swiss National Bank is now taking Helvetia forward in the real world, as you heard yesterday from Thomas Jordan. An important reason for the success of these projects were the diverse teams that led them. They worked closely with the private sector and policymakers to understand their respective needs. And they had the courage to embrace state-of-the-art innovation and the wisdom to do so in a safe, collaborative, inclusive, and open environment. Collaboration with lawyers and regulators was also crucial. Without proper frameworks, safe innovation is not possible. This brings me to the second lesson. Psychological safety matters in supporting inclusive environments and fostering innovation. It takes a village to nurture ideas and the critical mindset that comes with them. Everyone, irrespective of the background, should feel safe to voice their views and to put forward innovative solutions, especially if they challenge the status quo. For example, in the BIS Design Thinking Workshop, everyone is encouraged to brainstorm and to voice half-finished thoughts that others can then further develop. In economic research, we encourage external reviews and foster challenges internally to avoid groupthink. The third and final lesson is be prepared to accommodate and cherish teams' changing needs. Different backgrounds come with different needs and preferences. To attract talent, we have to create a workplace that accommodates the needs of all team members. Part of this is, of course, accommodating flexible working arrangements. Another part is embracing different working styles and patterns. If you visit the BIS Innovation Hub on the 3rd floor in this building, or our communication and IT teams on the newly renovated 2nd floor, you will see what I mean. They are open spaces that look more like the home of a tech startup than a central bank. And let us not forget that we are all in a race for talent, particularly in the technology space. We should challenge ourselves to engage with and attract groups who may not have traditionally seen central banking as an attractive path for their career. This is particularly important for historically underrepresented groups. They could be the source of the right talent for the technological innovation of the future that we do need. Now let me conclude. This year's BIS Innovation Summit is about navigating rapid innovation. It gives us a chance to discuss the opportunities and challenges that the intensified speed of technological innovation is bringing. This reminds me of another Stephen Covey quotation: where you are headed is more important than how fast you get there. Rather than always focusing on what's urgent, learn to focus on what is really important. While we pursue innovation, let's not forget that inclusion enhances the quality of our work. Inclusion matters for all of us, and it benefits all of us in our drive to embrace technology in a safe and sustainable way. We at the BIS will continue delivering on this promise. I thank you for your attention and wish the very best to all of you for another great day. Thank you very much.
Thank you for these inspirational remarks. The next discussion will be about the future financial system with two distinguished speakers, including the BIS General Manager and Siddharth Shetty. For this, let me welcome Ms. Cecilia Skinsley, Head of the BIS Innovation Hub, to moderate the conversation. The floor is yours.
Okay, thank you. Well, good morning on this second day of this great conference. And good morning to those, or good afternoon, good evening to those of you who participate online. It's a great thrill for me to share the stage with Siddharth and with Augustin. And we're going to talk now about one of the most promising, in my view, parts of a very promising avenue of technologies that we see that could be very helpful for the development of the financial system. Obviously, I'm thinking about tokenization and the concept of unified ledgers. We all know there are promises, but at this session, we will try to unpack a bit further what that can actually mean. what we hope to influence in terms of the choices for the public authorities, and how we can set about to begin this journey together. In a recent paper, it's downloaded to a large extent, I've heard, and I hope more of you will keep downloading it as we go forward. Augustin Carstens, General Manager of the BIS, and Nandan Nilekani, who is, among many things, founder of the Infosys, has laid out a vision for the future financial system, and they call it the Finternet. The Finternet, it's a great name. So let's unpack what that vision could mean, what it involves, the benefits it could deliver, and what we need to do to take us there. And it's a great thrill for me to share this stage, as I said, with Augustin Carstens, General Manager for the BIS. Very distinguished career, with a small addition these last 2 years of actually taking on this assignment of being my boss. It's super exciting to work for and with Augustin, and I'm very thankful for the trust you show me. And also Siddharth Shetty, very important part in building the India stack, and now work as a technology advisor for the Foundation for Interoperable Digital Economy. So let's get right into this and start with the basic question. What is the Finternet? So let me turn to you first, Augustin. Can you explain a bit to us what is the rationale behind Finternet and what problems in today's financial system we could solve with that and how we could do it?
Well, thank you very much, Cecilia, for this very kind introduction. And it's a pleasure to be sharing the stage with Siddharth, a very young, bright mind that promises a lot for the future. And we have worked very effectively with him and his colleagues under the leadership of Nandan. I think before I jump exactly into the vision, I think it's interesting to see how Nandan and myself ended up writing this paper and having this discussion. If you recall, we wrote chapter 3 about unified ledgers. An initial contribution to that was a speech I gave in Singapore over a year ago. And it was, to some extent, pie in the sky. It was very ambitious, and it was about unified ledgers. The whole issue of unified ledgers, or what we have tried to achieve, is that here at the BIS, at the hub, we have already over 30 projects, but we don't have also a unifying principle or a unifying vision. So we have been doing many things that pushes the bar in one direction. But then the whole thing is how will they fit together? Now, part of this is natural because it's experimentation. Part of it is also because we need to solve, the most immediate problems that our central banks face. But at the end of the day, we need to stop and think, well, where are we going with all of this? And well, also, if you're going to make that very broad question, I think you have to be imaginative and let your mind sort of fly, Therefore, we thought big, and we came with the basic of the unified ledger, which was basically to have an image of the financial system where there would be very easy interaction, where we put the individual at the center, where the individual could decide very flexibly what type of financial transaction, what type of payment can they do. And all of this inspired, for example, by the history of the iPhone. When the iPhone started, or the way we saw the development of iPhones, we started with pagers, for example, where you just could exchange messages. Then there was a voice communication, and so on and so forth. There was gradual evolution. Eventually, we had the apps. But at the end of the day, the iPhone, what it does is they bring all of these services together. So if we had each one individual services apart, we would not benefit of the whole, and the whole really makes a big difference. So that type of thinking inspired us to launch into the unified ledger. How can we bring all these things together, where markets would clear agilely, where we would reduce a lot of the transaction costs of compliance, and very much inspired a little bit of what Andrea said about inclusion. How can we also increase inclusion into the access of the financial system, the financial system of a vast amount of the population, many of them even in advanced economies. So I wrote the paper of Singapore. It was well received. And then we went to the G20 in Bangalore. And Anandan is a good friend, and he has this unnatural characteristic of being the ultimate doer. And so, we were going to have a 20-minute discussion just to sort of touch base. And I said to Nandan, this is a speech I delivered. This is a vision. How do we put this into reality? So this was a very, I would say, fertile interaction between an economic financial vision and the interaction with very bright visionaries, a group of people in technology. And Nandan, that really likes challenges, he said, well, let's do it. And he handed over the paper to Siddharth. And Nandan said, how long will it take us to make this workable? Siddharth said 3 months or so. He probably was a little bit ambitious. But, the whole idea didn't scare him, So we put together teams, and I have to recognize Dan Rees from my senior advisor, Iñaki Aldosoro, Cecilia, Hyun, Miguel, Morton, Rodney, Priscilla. Many of us get our mind together, and we started, refining the ideas. And the same thing happened on the side of Nandan and Pradam and Siddharth. The idea was, how can we make this wild idea workable? How can we sort of make compatible, a vision of a future of the financial system that would represent a quantum leap of what we have today, and that it could be doable, And why do I was speaking about quantum leap? Because if we see the progress of how technology has been incorporated into financial practices, it has been very, very gradual. And a very big thing that holds us back are the nature of legacy systems. So at some point, you have to break with the past, At the end of the day, it's not that easy. You have to do a gradual approach, but you also at some point need to do the big jump. I always give the example of when I was governor of the Central Bank of Mexico. And, Mexico is a large country, and we needed to distribute bills. And we had these old planes to distribute the bills. And every year, they would come to me and say, we need all this budget to fix the plane. And so I started revising it, And at some point, you have to say, I will not modernize, in quotation marks, a DC-9 to distribute bills. At some point, you have to buy the new technology. At some point, you have to say that DC-9 should go into, the garbage can, and you need to get a new plane. And so we got a new plane, and it became very efficient, and we saved a lot of money, and everybody was happy. At some point, we need to do that with the financial system, So a lot of what we discovered is that friction or difficulties is cherished also by some intermediaries because they make money out of it, you know. So to get the dynamics moving, we have to push, but we have to come with a workable plan. And that's what we try to do. The idea is not completely, I mean, the idea is revolutionary from the point of view of what Cecilia said, tokenization. Tokenization allows us to change the way we do financial transactions. At the end of the day, it's a very simple idea. It's instead of having, you know, gradual piecemeal steps to complete a transaction, you sort of package all together in the tokens, and then you just exchange tokens, you know? It's very simple. Now, to get to that degree of simplicity, you have to do many complex things. And there is where the technologies come into place. So I already spoke enough, so.
Well, that's a good bridge over to exactly that, technology. Siddharth, can you tell us a bit more what would be the key technological building blocks of the Finternet and how this could sort of piece together?
Absolutely, and thank you, Augustine, again for giving me a chance to speak at this stage and be a part of the summit. And as technologists, we are just a set of plumbers, so it's been really wonderful to work with the BIS team on putting together the Finternet paper. If I dive deeper into what Augustine laid out, which is essentially the problems that plague the financial system today in terms of speed, costs, and availability of different products and services, when we looked at it, we felt if we truly had to solve for this, the first question that came up was, how do we even approach this problem? Because it's so multifaceted. And the mental models that we arrived at were based on 3 U's, if I may put it. So the first U was user centricity. So how do we ensure in what we're designing, we're truly putting users, individuals and businesses, at the center of their financial life? And this is extremely important because the rest of the technical frameworks and the legal frameworks that we develop will actually be based on this principle. Many a times we design systems putting providers at the center rather than users, and that makes a big difference finally in terms of adoption. The second aspect, in addition to user centricity, was how do we unify? How do you take an approach that allows you to unify across diverse environments, diverse asset classes, diverse sectors, diverse countries? And our view, again, as technologists, is we can come up with a set of architectural constructs that allow us to unify across time, where different countries or different sectors may adopt it at different points in time. Not everyone is going to go live at the same day, at the same second. Yet when they do adopt it, the characteristics of interoperability and other safety-related elements are plugged in right in the start. And the third U that was most important that we felt was the idea of universality. So how do we ensure that the technology, if we really want this to be used, and we want the Finternet, much like the internet, to be made available to over 8 billion people and 300 million businesses, it's very critical that the technology is universal. The technology must be available to all, much like, as Augustine said, if you look at the smartphone. Many of you are carrying a smartphone in your pockets today. Many of you are regulators and policymakers in the room. As financial regulators, one doesn't regulate the smartphone itself. You regulate activities on top of it. If someone creates an application that starts taking deposits, one would get involved. So how do we create an approach where the technology is fundamentally universal, because that will ensure inclusion, but we create enough tooling in the infrastructure to ensure that the flows, depending on the type of transaction, if it's a flow of money, flow of securities, flow of other types of assets, can be layered on with appropriate rules. So these 3 U's were central to the architecture. And now if I double click on this, what we realized was tokenization was going to be a big enabler. We saw the early wave through digitization. That's what a lot of us are familiar with. The financial system evolved from paper records to digital variants, and digitization was the wave that made that happen. But digitized copies, digitized systems don't allow for easy transactability. And our view is, given the way the world is connected today, we can imagine a leap where through tokenization, you can actually embed programmability into the digital representations. And that will unlock a lot of the transactability, which is a lot of the workflows and the use cases and the applications that all of us want. And a key part of tokenization is that different tokens, depending on their function, will be treated differently. So while the form may be the same, all of them are digital copies, digital representations. If they serve the function as money, you will have different rules than if they serve the function acting as a security, which sometimes gets mixed up. And so when we looked at applying this within the current system and layering it on top of the laws and regulations that exist and a lot of the digital infrastructure that many countries have built, what we saw is we could come up with an architecture, and I'll spend a minute just giving an overview of that high-level architecture, where we felt a lot of the custodians today, and this could work across different types of assets. You could have user-controlled assets. So these are my own digital artwork, for example. You may have attested assets, artwork then attested by a gallery. Then you may have registered assets, like a piece of property, land, a vehicle. And then you may have regulated assets like money, publicly listed securities, and so on. And this architecture can work for all four of them, where on one end, we imagine a world where a lot of the existing custodians can act as token managers, and therefore a lot of the rules that today regulators delegate and enforce via these regulated entities would pass through, because they would issue the tokens using a set of on-ramps and off-ramps. When they issue the tokens, they will embed the relevant norms as part of that issuance. A user can tokenize a set of assets, but they could also de-tokenize, bring it back. And we felt that choice is critical, especially in the early days, to build trust. It's sort of like in the early days of digitization, you had people who would digitize but create a physical copy because they needed that. And so you should have people being given the choice to tokenize, de-tokenize. When they tokenize, individuals can create an account on any public ledger of their choice. Into this account, different tokens. So it's not different ledgers, but a user can have their land token, their money token, deposit token, central bank money token, so on and so forth, all issued into that account. But of course, they're free to create other sub-accounts, other authentication and authorization workflows. And then through that, they can transact with anyone else using an ecosystem of applications. And so a lot of the projects, for example, that I heard about yesterday, very powerful projects that were being built within the Innovation Hub and within private sector, today often get constrained by silos. And if we go back to the smartphone analogy, you have the best-in-class entrepreneurs being able to bring different types of innovation to a common shared playground and create applications that serve all of us, that serve regulators, that serve supervisors, that serve individuals, that serve businesses. And we feel that opening up, where ledgers offer the programmability and other key constructs, will play a key role. And lastly, we do see this being supplemented by a lot of the trust, what I would call trust service providers. And so you will have attesters, guarantors, verifiers, essentially third-party agencies that would issue trusted credentials, trusted attestations that allow you to create these proof chains that you can then transact with. And to wrap up, as we sort of looked at this architecture, and we also reflected on a lot of the digital infrastructure that we've seen being built out, we felt there were three traps to avoid. And we might be able to avoid that. One is the trap of centralization. So many a times we think we can over-centralize, expect everyone to come to the same place. It's not going to happen in the highly diverse environments, we will deploy the concept of the Finternet. The second is, how do you avoid the trap of synchronization, expecting everyone to be alive on board at the same point in time? And then the third is, how do you avoid the trap of over-standardization? So what are the most minimal standards, much like TCP/IP, which unlocked a lot of the internet innovation that all of us use? So what are the most minimal standards we need to arrive at, but then allow for different jurisdictions, different regions, different sectors to define their own standards, but yet create mechanisms for easy discoverability of those diverse set of standards. And so that's sort of the underlying thinking behind what we put together, and it would be great to get everyone's feedback on this.
Well, if it's a bit little mind-boggling in the brain right now, it's because it is mind-boggling. So let's see if I can bring this to a more sort of concrete level. 3 takeaways out of a very rich first intervention. Not mending the old DC9s, but sometimes you have to get new ones. A very good observation, by the way, that being a central bank governor is a lot more complicated than only doing monetary policy. So thank you for sharing that experience. But the lesson learned is you have to start over sometimes with new machinery, and that is what the Finternet is about. And second, also important is that and that's a tall order, but sort of building what the iPhone has done for our way of working and interacting, but in the financial system. And the user-centric approach, which I think is hugely important. So let's try to be a bit more concrete. And it's a tall order to fill this with details and certainly to make it a reality. The good news is that, Siddharth, you've done this. You've been a part of a very successful journey, and I'm thinking here about developing the digital public infrastructure in India, part of the fantastic story about the India stack. What are the lessons that you and your colleagues from that work take away that could be applicable for making a Finternet come true?
That is a good question, Cecilia. And as I sort of reflect on what we've built in India, and maybe rather than just narrating what we've built, let me try to abstract out what were those learnings that then influenced the design behind the Finternet. I think if we take a look at 3 projects, 3 DPIs that we built, the first one being Aadhaar, which was a digital identity. In 2008, most Indians didn't have an identity. If it was critical for them to participate in the digital economy, they had to be given a digital representation so that they could transact with anyone in a paperless, presence-less manner. That since was deployed in the financial sector, opened up hundreds of millions of accounts, which, as per the BIS paper, also showed how India leapfrogged financial inclusion by roughly 4 decades. So what we did in a decade would have otherwise, without a DPI intervention, would have taken 5 decades. So what did that teach us? One, technology can be used to bridge a lot of the trade-offs that we have in society, or that we traditionally think as trade-offs and tensions. For example, bridging regulation and innovation, bridging stability and inclusion, bridging data empowerment, where people can use data for things that they value, and data protection and privacy norms. And so constructs in Aadhaar, the fact that it was extremely minimal, only collected 4 attributes versus traditional ID systems which collected 40 to 50. The fact that it leveraged an ecosystem allowed us to do this at 1/100th the traditional cost. It was extremely reusable, and so it got used because of the way the architecture was designed in the financial sector, but then it was similarly used in the telecom sector to open up hundreds of millions of 4G accounts that allowed Indians to plug into the internet. And it was also looking, when the project started in 2008, India had one of the lowest per capita data consumption rates in the world. So a marginal number of people were part of the internet. Yet, if you looked at the trend lines, it was obvious over a 10-year, 15-year period, a lot more would be plugged in. And so therefore, it was designed assuming connectivity starts to fall in place. And so really looking at the future and designing back from that. And today, I think India is probably the highest per capita data consumption country in the world. So those were some of the principles behind Aadhaar that reflected and I think are key to how you think of any population scale infrastructure. Second, when I come to UPI, UPI is a unified payment interface. It's nothing but a protocol that allows you to transfer value from one store to any other. This protocol was first implemented in the banking system by a central bank. It was built on top of the central banking and commercial banking system. So there was no blockchain, none of that involved. It leveraged existing infrastructure. It leveraged existing legal frameworks like the KYC framework or the Prevention of Money Laundering Act that we had in the country. And what it did is the regulators initially said you could only use it to transfer value from one bank account. So the value was INR and the store was a bank account. So from one bank account to any other. And so it's nothing but a protocol that has a settlement system at the base, regulated entities in the middle, and then you brought in third-party innovators. And this was key. In the paper, we talk about the concept of division of labor, or you bring in entities that are specialized in doing one thing, and they can do that really well. And that unbundling dramatically expands the market, dramatically increases inclusion. And so these third-party innovators that came in went in and acquired hundreds of millions of users, tens of millions of merchants. So in 2016, when UPI was launched, we had about 4 to 5 million merchants. Fast forward 5 years, you had about 50 to 60 million merchants digitally onboarded by a range of market players on an interoperable system. So what did that teach us? One, it taught us the power of interoperability. It taught us the power of unification, because today, UPI works not just on bank accounts, but it works on wallets. It works on credit cards, because it's a simple protocol that allows you choose as a regulator what store you want to enable. As trust built up, the regulator opened it up. The third, it worked within the existing legal framework, so took sort of this techno-legal approach. And four, by unbundling, you really allowed a large number of innovators, private sector, to come in while leveraging the public infrastructure that was built. And the last DPI that I talk about is the work that's happening on the account aggregator. And as we know, India is extremely complex. You've got 1.4 billion people. We have different financial sector regulators. So we've got a central bank and they act as the banking regulator. You've got a capital markets regulator, insurance regulator, pension fund regulator. So almost each sector has a regulator. How do you unify across these diverse environments? Where in 2016, the effort was saying an individual should have control of their financial data, and that should work across sectors, because these sectors are creations as policymakers. An individual, their assets are just their assets. And so that architecture, which now has rolled out, there are about 2 billion financial accounts live on that open finance system. Over 60 million individuals have used it. That taught us a couple of things. One, how do you ensure that when you bring different regulators and public authorities on board, you preserve their own sovereignty and autonomy of decision making? And therefore, everyone doesn't have to come into the same room at the same point in time. They can decide on their parts of the ecosystem, their rules, their limits, their entities on who should participate and who shouldn't at their own point in time. So how do you distribute the ability to solve, distribute the ability to make decisions on the back of a shared infrastructure, so it's not siloed back for the individual? How do you put individuals in the center of their data and give them the tools? And that's where the Reserve Bank created this framework for consent managers, which again was an early example of what is possible when you give people control, and then people could onboard and have choice of different consent managers. Because another thing we realized, and another traditional trade-off that people think about, is this myth between technology resulting in a digital divide. What we've seen is, if designed right, technology actually bridges that digital divide. We've seen people do payments on smartphones. We've seen people do payments on feature phones. We've seen people do payments when they don't have a phone through micro ATMs, all on the back of the same protocol. We see the same happening in data sharing as well. People can give consent even if they don't have a phone in an assisted manner. And so really what these experiences taught us is that some of the key technology characteristics of interoperability, how do you design for evolvability, how do you design whenever you're doing any societal scale intervention for it to be extremely minimal. It should do one thing and do that extremely well. How do you divide, much like Adam Smith says, labor so you can bring specialized entities without risking stability? A lot of those concepts, I would say, were early experiments, what we saw in India. And also the cooperation between private sector and the leadership shown, political and regulatory leadership that was shown. And so we've, of course, really pushed the boundaries. I think there's a lot of new mental models and thinking and solutions we'll have to do to truly bring the Finternet to life. But these were early experiments that I would say influenced the thinking and gave us some amount of confidence, at least, that, as I think it was the German central bank governor said, if you have a vision, it's probably good to see a doctor. I think this gives us some confidence that we may not have to.
Well, you didn't say it outright, but it sounds like you also need three things: guts, persistence, and patience, and a coalition of willing in that venture. So I'm going to open up the floor for some questions soon. But while you're thinking about that, let me ask. You come back to you, Augustin. Impressive vision. How do you think we should follow up? What do you think about who should build? How do we interact, public and private sector? And yes, what role should the private sector play in this?
Yeah, I mean, that's a key question. As Siddharth very well explained, the idea here is to do it openly so that we can invite all the bright minds out there to pitch into the project. But it needs to have at least a minimum degree of guidance, and it needs to have certainly a very important backbone, I would say sufficiently enough to give security, to give confidence for people to use it, but remote enough so that it's not overwhelming. From an economic point of view, I think a key aspect is to think, I mean, if you think of the Finternet as a living body, you need a heart and you need a circulatory system. What is the heart and the circulatory system in this case is a little bit also what we are developing internally, which is Agora. And Agora, basically, I mean, through time, we have learned that we have put a tremendously effective monetary system based on the interaction of commercial banks and central banks. At the end of the day, what makes central bank money to be singular, to be exactly the same as central bank money, is the fact that all those payments are settled in the accounts of the central bank. And that's a construction that is extremely valuable. I think I cannot imagine a payment system or a financial system without this. So through Agora, precisely what we're trying to do is how can we tokenize commercial bank money and central bank money and make it flexible enough to be used to different uses, and we are starting in particular with corresponding banking. So that's a key building block. The other aspect where we need to also do tremendous upgrade is to be able to provide the adequate supervisory, regulatory, and legal certainty to the whole system. At the end of the day, when we're talking about financial system, it's based on trust. Now, all this, there is the technological architecture, there is the architecture of finance and economics, there is also a whole architecture of how to underpin the trust in the system. And that's another area where we will need to work with lawyers, with regulators, with supervisors. But it has to be in such a way that is sufficient but is not intrusive, and that it doesn't generate silos. The other thing that is important is precisely for different players to embrace the idea. I think Agora and the Finternet is a very important invitation for different financial intermediaries to jump into this project. I think what Finternet is important is that it can be a win-win situation for everybody. I mean, for example, if you see the debate between central bank money and commercial bank money, oftentimes it is, well, we shouldn't do central bank money because it might crowd out commercial bank money. No, here everybody is invited to the party and everybody plays a very important role. We want a win-win situation by making life simple to the user, by cutting all the red tape, by making it efficient, by making it informationally complete, by opening options to the user. I mean, one of the aspects in economics we often identify as a second best is the fact that we don't have complete markets. If you allow for programmability and so on and so forth, you can really complete markets, and you can really be able to make conditional transactions that today you cannot conduct. So we need to be building these structures, these skeletons. Obviously, the private sector needs to do a lot of the engineering, but we in the public sector, we need to give them an enough platform for them to have room to run. And part is technology, part is it needs to be financially and economically solid. It also, and we also need what I would call the trust structure, the trust infrastructure for this to work. Yes, as you said, this requires guts, requires patience, requires energy. So I invite all of you to start thinking on these issues.
Thank you very much. I'm going to open the floor for questions. I see some hands over there. Sir Vincent, you get to choose. Please state your name and if you're addressing someone particular in the panel.
Thank you. My name is Fabio. I'm from IBM. I've read the unified ledger concept. It's very interesting. And the Finternet, where it lifts me alone is I have trouble to understand whether you foresee one single infrastructure similar to the internet in the sense of if I'm a producer of a router or of a switch or of a smart bulb, I just plug it in and it is standardized and it's running. If I compare it to the finance sector, we have the ISO 2022, which kind of defines the format, but it doesn't give me the right to participate in the network. And I wonder if you could elaborate a bit more on which layer you see the Finternet working to be open so that it is a really unified infrastructure for any kind of transactions.
Okay, that's deep into the tech. Let's take one more question and let the panelists think about the first one.
Dorothée Delors from the World Bank. I would like to push your parallel with the iPhone and ask you about how would you avoid concentration risk and the emergence of a few critical providers like we see in China or even in India with the risk of monopoly or oligopoly, and how would you ensure that you keep an open environment with a multiplicity of providers?
Okay, who would like to have a shot at these two?
Sure, I can answer the first one.
Yeah.
Okay.
So I would actually ask a question back, saying, what in society today is only one? Do we have one language? Do you have one type of smartphones? Do you use one programming language? The answer is no. there's always multiplicity. I think part of it does come from the blockchain world, where there was an assumption that there'll only be one blockchain and the whole world will fit on that, but that's extremely unlikely. So society has always had multiplicity. And so the question is, even if you look at the internet, the example you mentioned, there is no one internet. It is nothing but a network of networks. It has thousands of different types of providers, thousands of different networking companies, switch companies, gateways, telecom companies, device operators, fiber cable, submarine cable companies. I mean, you've got multiplicity of providers at each part of the stack, yet they're able to come together in a network because of a set of open protocols and then actually coexist. And then different people can innovate at different parts of time. People can set their rules on what they want to allow or not allow. So really, I think when we're looking at it from a financial ecosystem lens, it's extremely important that we don't assume there is one ledger, for example. It's always going to be multiple. And so it's critical that we architect for multiplicity. And that's where constructs like interoperability play a role, standardized protocols play a role. I think to the second part of your question, which was, there's ISO 2022, was that what you mentioned, 2021 or 2022? And while you can, align with those protocols, it doesn't give you access to the network. I think that's really for the regulators to answer. Different countries and different financial ecosystems will have rules on who can participate and who can't participate, just as they have rules today on who can be a commercial bank and who can't, who can participate in the payment system and who can't. But you can create architectures where, for example, what we did in UPI is we layered it in a way where the money always flowed through regulated providers, but third-party innovators didn't have to be regulated. They could go out, acquire hundreds of millions of consumers. They didn't get regulated. They were fintechs. They focused on the consumer experience. The traditional banks and others focused on stability and grievance redressal and KYC and other norms. So I think we can look in an architecture that allows for different types of actors to come together. But yes, while you may align with the protocols, the rules of that network will be left to each sectoral regulator, who can issue a bond, who can issue a security, who can issue money, so on and so forth.
Augustine?
Risks? Yeah, that's a key question. There is, something that I just cannot prevent saying is that at the end of the day, that my concentration could be a result. It might be that we cannot prevent it. But I think there are many things in the idea of the internet that could at least have a good chance to make it more diverse, more competitive, more participative. First, we need to, from let's say, the regulatory, the public policy point of view, we can try to make it as open as possible. I think, if you reflect, for example, how the payment systems in many countries have been developed, and you're very familiar with this coming from the World Bank, many, many years ago, 60, 70 years ago, the payment system was, in a way, delegated to the banking system. Central banks decided, well, this is not for me to develop. Have you commercial bank develop it. And so it developed, but after a while, and then you had the regulators pitch in, and so on and so forth, and at the end of the day, we ended up with walled gardens. And what we want to avoid is precisely that. So from an architectural point of view in the finance, in the economics, the idea would be to prevent creation of open gardens. What I think Nandan and Siddharth Pradhan have really make us see is we also need to provide the technology so that we can have a community of thinkers being able to participate. So also that from a technological point of view, this is not kidnapped by one particular player, you know. I mean, at the end of the day, you can have the aspect of competition and you know, the fact that you might rely on a few players from an economic point of view. In technology, well, that's a field also where there is sometimes not enough competition. So I think we have to strive for it. We have to strive for it. And I think that we have at least from an architectural point of view, a good chance to make the system definitely more open, more competitive, more contestable as what we have today.
Our time is up. I'm sure we could continue this for a long time, but we have other very interesting sessions to do. I take away the party invitation. I think that was a great message to you all. And in that party, let's have high ceiling in the hall, so we can let ideas fly high and wild. Thank you very much, Siddharth. Thank you very much, Augustin. Back to you, Kodruta.
Thank you, everyone, for this interesting discussion. We are moving to a conversation about technological innovation to enhance existing infrastructure. For this, let me invite on stage Mr. Miguel Diaz, head of the BIS Innovation Hub Toronto Center, to moderate the session. The floor is yours.
Thank you very much, Kodruta. And so thank you very much for joining this panel. And we have a slightly difficult job now because we have to define what this airplane meant for the financial system and what pieces we can salvage from the existent infrastructure. So let me start by saying that what is obvious to everyone, which is that basically we're living in a situation in which technologies are developing exponentially. And this has switched very significantly the landscape of the financial system as a whole. Now, this implies new participants, this implies new technologies, and this implies new functionalities that we have to bring in so that we can basically provide for a society that is immersed in the digital economy. And the big question here, or what we are seeing now, it's a big pressure on traditional financial ecosystems. And the big question is exactly how we define this new world that we want to live in. So basically, what pieces of the existing financial infrastructures and financial institutions we need to keep and preserve for the future functioning of our systems. And I think we all agree that the current system does not work very well. So we have lots of opportunities in terms of providing better services for this digital society. But we need to be careful in terms of which paths we take. So how we choose a new plane to distribute the currency, as the general manager said, is quite a delicate task. And we have to be careful as not to throw away the issuance of bills and currencies together with the plane. And we have to identify those elements that we need to keep and we need to cherish from the existing system. What we will try to do here is we will try to learn from the experiences from my colleagues that have a very deep perspective into the traditional financial infrastructures and just identify how we manage to transition while providing the services that our societies need looking into the future. And for this, I have two of the global leading voices here with me that have pushed a lot the boundary in terms of payments and in terms of financial services within the traditional infrastructures. So we have Tom Chaks. He's the Chief Innovation Officer from SWIFT, and they have been working in lots of products in terms of providing these new services and making SWIFT compatible with the new needs of the economy. And we also have Tony McLaughlin, who has been pushing the boundaries in many aspects from a global perspective from Citi, proposing very interesting new ways of doing payments and doing financial services. Let me start with the questions because we have a lot to say here with my colleagues. So the first one is, there's this dichotomy going on in terms of whether we should eliminate everything, not just the plane, but also the central bank and also the issuance of money and everything, versus keeping everything as is. So there is this dichotomy in terms of whether we can get into a balanced perspective and define exactly what we mean by just switching the plane for a new, more efficient one. So from your practical perspective, I would like for you to share with us what this medium point would look like and which elements are important to keep, and whether we can keep these two elements, the existing infrastructure going forward, but also allowing for these new technologies to come in and provide new services. Tony, please.
Yeah, thank you. It's a delight to be here. That dichotomy, I'd like to try to articulate what that dichotomy might be. In the traditional regulated financial system today, we live in what we might call the messaging paradigm. The mental model to construct here is we live in a world with thousands of regulated financial institutions and a couple of hundred central banks, and they are all separate balance sheets and they maintain their own ledgers. And when we're conducting financial transactions today, let's just take a simple payment. What is a payment? A payment is really the transfer of assets and liabilities between two institutions, or more than two institutions in many cases. So at the beginning of a simple payment, my bank owes me $100. At the end of the payment, your bank owes you $100. Now, how have we achieved that? We've achieved that by sending messages between my bank and your bank, and between my bank and the central bank to conduct the settlement. Because your bank will only accept the incremental $100 of liabilities if it receives a matching asset at the central bank. So essentially, in today's paradigm, we're updating three separate balance sheets by messaging. So that's the predominant paradigm that we live in today, is the messaging paradigm. The dichotomy is that when blockchains were invented, it created a different mechanism for value transfer. Because the real difference between blockchains and the traditional financial system is that in the blockchains, the value is in the network. And in today's world, there's no value in the messaging network. There's no value in SWIFT. There's no value in Visa or in MasterCard or in the messaging systems. So when people talk about the potential of tokenization, what we're really investigating, and this is something I hope we can go into in more depth, is can we take aspects of that shared ledger tokenization thesis and use it to upgrade the world of balance sheets? Because do we want to get rid of the thousands of risk-taking balance sheets that power economic growth in the world today? I don't think so. Do we want to eat the entire crypto thesis of non-sovereign currencies, commodity-based money, anonymous transfer, trustlessness, tokenomics, proof of work? We don't, but there are some elements of that blockchain tokenization thesis that could be incorporated to upgrade the world of balance sheets.
Thank you, Miguel, and I'm delighted to be here. And I have to say, with these two experts on the stage, I always feel like it makes my job a lot easier. I'd also like to say thank you to Cecilia and to BIS for the invitation here. I'm honored to be here and happy to share the stage and talk about that. And also, kind of more broadly, I think probably just about everybody in this room is a member of the SWIFT community and knows who SWIFT is. So thank you for being our customers. We never take that for granted. We always want to work for your business. We always want to provide better services. So thank you to everybody in the room as well. This dichotomy is really interesting, and I think a couple of the analogies that were just talked about in terms of kind of looking for new aircraft and new commercial jets as opposed to the air traffic control system, for example, is a really important distinction. We love the ideas of the unified ledger. We love the idea of moving kind of beyond messaging. We think that there's real drivers for that. Tokenization is a really important part of that. So as the world becomes, looks at new digital assets, new digital currencies, whether it's a CBDC or it's a tokenized commercial bank deposit, there's drivers for change, and there's good reasons to do that. And we think there's multiple ways to do that. The unified ledger, even though it's unified, I think we can all safely say there's probably going to be more than one. There might not be 1,000, but there's going to be more than one, and I think everybody easily agree that's healthy. And that's probably how things are going to play out. Well, when you do that, you still need some way to connect those together, and messaging might be a way to do that. We're agnostic in terms of the technology. There's always, as said before, there's always multiple ways to do things, and what we want to do is to kind of leverage the infrastructure that we have, the things that work really well in financial market infrastructures, in commercial banks, in other market participants, to really help the community figure out, where do we take this? How do we make those right decisions? There's lots of ideas. We need to collaborate through innovation to do that. And we need to work together to figure that out. And SWIFT loves to be at the table. They love to be involved in these things and love to kind of build on top of the experience that we have in this space.
So may I just go a little bit deeper on your answer? So when you see the financial market infrastructures around the world, there are many things that are very nicely done. So you can see infrastructures in India, you can see the new infrastructures in Brazil. So you can see many different infrastructures that are doing a pretty nice job in terms of providing the functionalities necessary for the digital economy. Can you touch a little bit in which of those aspects of existing financial market infrastructures would you consider relevant taking forward? Like some specific examples, and this could be either from the technology side or more like deeper elements, like who keeps the ledgers and how we build this trust behind that.
Yeah, certainly. And SWIFT today connects approximately 240 market infrastructures in virtually every country in the world, right? It's a very important part of the ecosystem that we have. I've worked in market infrastructures prior to joining SWIFT. That's how I got to SWIFT, actually, is the work that I did at the London Clearing House, but also at CLS as well. And so the financial market infrastructures are very mature, right? And they're primarily there to reduce risk, right? And whether it's the functional risk like a central counterparty, or it's PVP risk in foreign exchange, for example, which has been my experience, they're there to reduce risk. So kind of putting the technology aside, they're really risk reducing, for the products, but then also for the ecosystem, right? They also have operational expertise inside of the market infrastructures that's been built up over years, and with practice and with modifications, right? So I know, and I've seen, in my experience, in my career, people in financial market infrastructures, some of them are paid all day to think about what could go wrong, right? And there's years and years and decades of experience in that. That's something we need to leverage and build on top of. As the world changes, how do you leverage that foundation of knowledge and expertise across all these interconnected market infrastructures to make that work? And then the third thing I would say is really kind of the rule books and the legal basis for this. And there was some discussion about that yesterday in terms of settlement, and settlement being a legal construct, not a technical construct. And when you say, I settled on a ledger between tokenized assets, like what does that actually mean with settlement finality derivative, right? And so these are not insurmountable problems. We'll figure that out. But these are the core things that we have in market infrastructure today that I think we need to bring forward with us.
What do you think, Tony?
Yeah, I mean, what is an FMI? An FMI is a venue with a rule book that's regulated, and again, irrespective of the technology employed, whatever happens in that FMI, there's an event which triggers finality of settlement, that a transaction is done. So again, we have to separate a few claims. In the blockchain community, they talk about atomic settlement as if a piece of technology can achieve settlement, and it cannot. A piece of technology can evidence settlement, but it's only really settled within a legal framework. So I completely support that idea of there being FMIs, but in terms of your question about where we are today and what goes forward, what we can learn perhaps from blockchains like Ethereum is that in the Ethereum network, they've achieved a level of abstraction in terms of what can be represented in a network. So we live today in a world of silos, where, for example, a national RTGS system, it only knows one type of asset, central bank money in one currency. And we have CSDs that only know particular types of asset. But in a network like Ethereum, they say, well, a token can represent money, or a token can represent a security, or an equity, or part of your house, or a CryptoKitty, or an NFT. So what that is a lesson in abstraction. And the whole history of computing is abstraction. You know, we start off with having calculators with 4 buttons, and then we end up with general purpose computers. So I think that one of the things that blockchain teaches us is that we can build FMIs in the future that are multi-asset. So let's imagine, but what you don't throw away, you can't just achieve that on a technology. That technology, that shared ledger, that multi-asset ledger, lives in an FMI. And that FMI says anything that takes place with these token movements in the FMI shared ledger has legal significance. So wouldn't it be great if we could build a less siloed financial system and have multi-asset settlement venues? Because, and let me just make this other abstract point, which financial transaction is not really about the movement of assets and liabilities from one balance sheet to another? So there is a potential future where we have multi-asset FMIs where participants can transfer assets and liabilities from one balance sheet to another in a much more coordinated way than we do today.
And you just jumped into the next segment in terms of, okay, so we have this good infrastructures, we have these trust structures, but what is next? What are the next functionalities that we need to put in because society actually requires, no? So when we see the settlement of a DBP or when we see the settlement of a PBP, it's really sad to see how slow this is. And when you see the technologies, even the most basic technology could allow you for immediate settlement if you have the correct trusted institution modifying the ledgers at the same time. But can you go a little bit more into the detail on what you think, Tom, we could put into these existent infrastructures in order to get these new functionalities going?
Yeah, so I think it's important to start with the drivers, right? Whether that's the creation of new digital assets, with either they're native assets or tokenized assets, and what's happening, consumer expectations, right? Business expectations in terms of how quickly the money needs to be there and how safe it is. So, and it was, the general manager said this yesterday. I think it's important that we do it in steps. So we can't skip past making things better today because of the promise of the future, right? And we've done lots of work in obviously with GPI for tracking. We've done lots of work with pre-validation, to try to make sure that we remove the friction. We're doing lots of work around the detection of fraud and things that are anomalous in terms of the flow. So the G20's put out targets around speed and accessibility and cost. Those all need to be pursued with a priority. And as we build on top of that, I always like to say we like to build those with strategic intent because they help today, but they also become kind of the building blocks in terms of what we need to do going forward. We have done a couple of really interesting things I'd like to highlight, and for people who haven't seen it, I wish I could flash the QR code up, but we recently published a report titled the CBDC Sandbox Phase 2. We had 38 central banks, commercial banks, a couple market infrastructures participate in real interoperability, which is where we anchored our work. because we think interoperability, and to your point, how can we actually remove the friction that we have from the system today is going to be anchored on interoperability and doing that seamlessly, knowing that we're not going to have a big bang moment, right? We're not just going to kind of flip the switch on a Saturday and I'll come in on a Monday into this shiny new tokenized world. Well, interoperability needs to be able to tie back, and it needs to include everybody. In the 38 participants we had in the sandbox experiment, they were banks and market infrastructures, but they were large and small banks. Right? So it's not just about a handful of big banks getting together saying, how do we get together and make this work? So we need to remove the friction. We need to not lose sight on what's happening today. We need to make sure that the work that we're doing includes everybody, that it's accessible, that it's based on standards, because standards brings scale. And anything that we can do to kind of move beyond really the consequence of messaging or having different ledgers and everybody having their own set of books is reconciliation, right? And there's some tremendous progress that can be made on things like reconciliation and taking out that type of friction.
Yeah, I'd just like to expand on that. I mean, I think it's to give people an intuition of where we are now and where we might be. I have a very ridiculous example, which is if you're trying to organize a dinner party with 10 people and you can do it by email or by WhatsApp, which is easier?
WhatsApp.
But why?
Because you can reach everyone, no?
Well, you can reach everyone, but the other thing that's different is in the messaging group, everyone who participates knows the exact status of the arrangements. And you don't have 5 people turning up with tiramisu, right? Because, well, I like tiramisu as well. But the fact there's something, the connection between that is, you know, people say that what we've got just now is slow. Swift messages move at the speed of light. I don't think blockchains move faster than the speed of light. So it's not the fact that it's slow. It's the fact that the participants in the financial transactions don't have a shared idea of state. Yep. That's what a blockchain or a shared ledger provides you, because it is a state machine. And the thing that we're missing, we have in the financial system of these 20,000 ledgers, we have abstracted out the messaging. The messaging layer is secure, standard, speed of light. But what we don't have is the state machine, and it's perplexing. I mean, everyone laughs at the idea of organizing the dinner party by email. Every financial transaction on the planet today is managed by email.
Yeah. Let me push back just a second here, because you mentioned blockchains as a state machine, but you actually just need cryptography to provide a proper state machine. Because so for the dinner example, it is great that everyone knows that I want tiramisu. But if I want to send money to one particular entity, I might not want everyone to know what I'm ordering, right? And if you have trusted entities, you can get exactly the same finality result if you trust this entity without actually having to go and do a complete blockchain solution. You can just have a properly cryptographically secure database and just provide finality based on that. So what are your thoughts on that?
My thought on that is that the tokenization thesis is different if you're a crypto maximalist or if you work in the regulated financial system. And the tokenization, lots of the things in blockchain are built to overcome institutions like, or to provide an alternative to central banks and regulated financial services. It's the antithesis. So we're not trying to build a trustless system, an anonymous system, a system of non-sovereign currencies. So we need to extract from the blockchain thesis what's of value to us. And what's of value to us potentially is to the extent to which blockchain is a who owns what machine. You know, that's what it is. It's a who owns what machine. And in our world, we want a who owes what machine, because all of our financial instruments are claims. We want to keep track of who owes what. And that is, if not exactly what blockchain does. There are things in blockchain that inspire us to build that abstract layer, who owns what, who owes what, and having that state machine where everyone knows exactly who's bringing the tiramisu.
I'd love to build on top of that.
Yeah, and if you can link that with the network externalities, Tom, that'd be great, because at some point we have these trusted financial institutions that allow us to know exactly what the status of a particular transaction is. And if we have this type of intermediation, we also have more or less the same result. But I would love to hear your position.
Yeah, just a point of clarification as well on the speed. You know, we measure the time to message. We measure everything, right? But the time to messages to the recipient banks, and over 90% of messages are at the recipient bank within an hour, right? So whether that's fast enough or not, is kind of subjective in some ways. But also where we do have delays on the other side are really around things like operating hours, in a particular country or corridor. I love Maha's project about compliance, right? Because those compliance and in-country checks are actually a large source of delays for ultimately crediting the beneficiary account. So there's a lot of things that we can do with technology to kind of take that friction out. But in terms of the state machine, there are going to be multiple ways of doing that. And I think this is a really interesting place to explore. I don't know how many people would have picked it up last year, but we launched a transaction manager, which is kind of next generation beyond messaging, to move into orchestrated transactions, right? So the creator of a digital asset network, we can say to you via APIs, how can we help you orchestrate this, and how can we actually monitor end to end? Because that's what we want. And how do we make sure that in the introduction of that asset, that you work at a kind of a minimal level of service that our Swift community expects on a transaction that goes over Swift. So we now have the capabilities, and we're now directing traffic in some cases as a part of the ISO 2022 migration that's happening now across the industry. We have the ability to orchestrate. And so we can sit with these creator of new digital assets and say, what can we do to help you with our network reach, with our secure messaging? Every message that goes across the Swift network is signed. That can't be taken for granted. And that's one of the reasons we have so much trust and security in the system. So the state machine, one is we've kind of went down that path to say, look, we can have an alternative for that as well. And we'll work with our banks and the community and the creator of digital assets. But also, I think there's a really interesting idea on the state machine, like what do we need to synchronize, right? So if we have multiple settlement venues, which I think everybody's going to think is likely, what could we do to keep the state and synchronize the state between two different settlement utilities, for example? Or could we build services that says, look, between these two settlement utilities, we're going to keep balances, right? One place, remove the reconciliation, and be able to create the balances that are open to the community to be able to check their balances in real time, right? So one of the things we think is really interesting is, how do we innovate this, and how do we take these steps that really eliminate some of the biggest friction points that we have and add these efficiencies without kind of tearing the whole place up? And there's some really, really good opportunities, I think, related to state and related about other things that we might be able to do in the middle, and some ideas we've been working through with our banks and our community that we'd like to see through further.
I'd just like to also delineate this. I mean, often people say to me, well, if we have this new blockchain or this new shared ledger, then you don't need Swift anymore. And I think that's actually misunderstanding what the blockchain or the shared ledger is good for. Because the blockchain or the shared ledger or the DLT or the tokens, they are, again, it's a who owns what machine. It's a bean counting network. If we all entered the room in the morning with 3 beads, I see your beads. If we had 3 beads, if one of the beads represents money and another one represents treasuries and another one represents equities, and we all transfer them between each other during the day, and we empty our pockets at the end of the day and saw who owned what a blockchain can do is keep track of the beads as they move from one pocket to another. So it's a bean counting network. Now, blockchains are not good for massive data payloads. So for example, if I'm a corporation and I receive from you 1,000 invoices, and I'm sending you one payment to settle those 1,000 invoices, you need 1,000 lines of invoice data in order to reconcile your ERP. Do you want to put 1,000 lines of invoice data in a blockchain? I don't think so. So I really see this thing as being a yin and a yang. You have Swift does messaging with a large data payload in the ISO 20022 messages, but it doesn't do settlement. So the ultimate would be to bring these things together where you have messaging and settlement coming together, that who owns what machine working hand in hand with something you can transfer the large data payloads.
So a question here is whether we need to know who wants tiramisu for every transaction, or we need to know who wants tiramisu for some specific economic transactions. So think about DBP, and it makes a lot of sense to have this cryptographic description so that you can basically settle both transactions at the same time, potentially using a shared ledger. So that is okay, and the ledger that might be operated by a commonly trusted entity, or by a consensus, or whatever you want to think about that underlying ledger. But for most of the traditional transactions, that's a bit of an overkill. So if I want to pay for my coffee at the coffee shop, do we really need to put that in a blockchain? Do we really need to do this openly? Or can we just use traditional infrastructures and do a very fast transfer of resources from one account to the other without actually having track whether I have purchased 20 coffees or not, and just modifying the balances that are mine? So my bids, I know exactly how many bids I have, but do I really need to keep track of how the bids have been moving from one place to the other for these very basic transactions?
I would say that our mental models of payment systems are very much defined by the way that the rails work today. And so the kind of verbs that we use are pay and receive. But those models of payments don't meet the needs of new business models. I'll give you one very simple example, which is a food delivery platform. Now, a food delivery platform, you order, let's say, 100 euros worth of, I don't know, Mexican food, I presumably would be what your preferred order. So how does that work for the platform? So the platform takes 100 euros from you, but they only want their commission. They only want 15 euros. And they give 5 euros to the delivery person and 80 euros to the restaurant. So why is it that the payment systems force those interactions to be bidirectional? Now, a consequence of that in Europe is that if you're handling those third-party funds, you have to be a licensed payment institution. And those platforms don't want to be payment institutions. So instead of this idea of bi-directional send and receive the money, why can't the 100 euros just be debited from your account or your token balance? 15 appears in the platform, 5 appears with the rider, and the rest appears at the restaurant without all the money coming through the platform. And then maybe that means the platform doesn't have to be a licensed payment institution. So my point there is, when we get into this topic of programmable payments, there's a lot more we can do to move beyond the mental models we have today of send and receive. We can think of even this idea of sending you money. It's a terrible image because it means that you think I'm sending you something I'm not. It's a transfer of liabilities between two balance sheets. Maybe we can start thinking about teleporting money rather than sending money. And maybe it's about orchestrating debits and credits across multiple values rather than just I send you money and you send that person money. We can move beyond the current paradigm of value transfer. And I think that's an interesting part of the tokenization thesis.
That might be a great segue into AI. You know, you're talking about teleporting.
But why don't you share with us what you're doing in terms of AI and financial market infrastructure? So how you're putting in this new thing coming in.
Yeah, with the title of this series, it might be remiss not to touch on it, because lots of talk about networks and digital assets and that sort of thing, but I'm kind of in the camp now where I just feel like AI is going to change everything. And I'm not in the doomsday camp. It's not, the robots aren't going to take over the humans and all that. I don't see that. We can't even get a Zoom call to work every time, right? So I think we're safe for a while. But I think it is going to change everything. And kind of just directly following up on your thought, the whole consumer experience is going to change. And like with all breakthrough technologies, people are going to do really, really creative things with it and going to do really, really evil things with it, right? So the creative things is like you're not going to know, how it was paid for. I saw a demo. I've spent in the last, particularly this year, but in last year, I spent a lot of time on the West Coast of California, Silicon Valley, big techs, fintechs, NVIDIA, everybody, right? And this is kind of where I'm coming to my conclusion that it's going to change everything. I saw a demo where a lady is watching a YouTube video, and she says, "I like that black and white sweater." She's literally watching a sweater, and her prompt is her voice, right? And boom, boom, boom. Do you want to use your credit card on file? It's on the way to your house. The whole consumer experience, this is not like happening tomorrow, let's take a look and let's think about it. It's happening today. It's already happening. Now, if you stay with the voice example, when I call my bank, which I won't name, in the US, and hopefully I never have to call them too much, but if I do have to call them, the first thing they say is, your voice is your password. And we're being live streamed right now. So with 30 seconds of my answer, my voice can be perfectly copied and potentially log into my bank account. I'm sure there's other safeguards, but that could happen, right? So like with all breakthrough technologies, we're working with a group of 10 banks that we've kicked off to look for anomalies, including fraud, using AI, starting with the SWIFT data to train the model, and then to supplement that with data that comes from our banks and even data about frauds that didn't happen or wouldn't happen in cross-border wire payments, in institutional fraud, other forms of fraud. And so we have 10 banks that are coming together collectively saying, look, together we can build a better model and solution than any one bank can do, even the most sophisticated banks. So we're doing that work now, and you'll see some communications coming out on that shortly. But AI can be used for fraud and to remove friction. I also think in terms of generative AI, and some of the people in this room are exploring that, and if you want to talk to me after the session, I'm happy to talk to you about this and kind of share some thoughts. But just taking the inputs that you get from banks as a supervisor and finding insights in unstructured data, for example, that exists today. There's central banks that are using that today to find risk insights, to find insights on their traffic, right? And so all of these things are available today, and they're all going to get a lot better. I mean, we definitely are kind of version 1.0. They're all going to get a lot better. These generative AI models, we know them because you use ChatGPT or use Copilot, and those are super helpful, and they're all text-based. You put in text, they give you better text back, write poems, write songs, content creation, all that sort of thing. But you could also put anything you want into it, video, audio, and get anything you want out of it. Video, audio, text, grammatically perfect paragraphs, right? So it's all changing, and there's a tremendous amount of opportunities to find insights to do much more clever things in the data you already have today and do your jobs better. So I don't think it's really optional at this point.
Final quick question to make this consistent with an innovation fora. So in 20 years, and I think I more or less know what you're going to answer, but what do you think the role of FMIs will be in 20 years' time? And if you have to choose, should it be enhance the old or enable the new?
I think people will still be reading the PFMIs to their children in 20 years' time. Everyone does that in this room, right? PFMIs is a great read. It's one of my favorites. It's really stood the test of time, and it will stand the test of time going forward, I think. So I would hope to think that we would achieve that abstraction and have multi-asset FMIs. I hate to question the cult of user centricity, but just for a second, try on the hat of balance sheet centricity and just see the world as made up of balance sheets. central bank balance sheet, commercial bank balance sheet, non-bank financial balance sheets. We're all individual balance sheets. Every financial transaction is the movement of assets and liabilities from one balance sheet to another. And they need to be coordinated. We need to keep track of who owes what to whom. And so I think there's a real chance of building more multi-asset infrastructures. Just a venue, Agora is a venue. It's a place where you can come with your balance sheet and you can represent some aspect of your balance sheet and transfer that to somebody else. And within the FMI, that has legal significance. So to borrow Andrea's point, I think the financial system is a half-finished thought. And there's a lot of opportunities to improve the way in which we coordinate and synchronize this world of balance sheets. Users are important as well, so are balance sheets.
Good. Yeah, I mean, unless we're going to kind of rethink, the principles and the definition of settlement, you're going to have those constructs in place, whether it's 5 or 10 or 20 years. I think the real difference is, I agree, I think we're going to get a lot of efficiencies out of multi-asset. I think that's going to be driven by the creation of the assets, driven by market demand. So it's not just going to be kind of people thinking about new cool things to do. There's going to be real drivers for that. I think the experience on every level is going to be completely transformed by AI, whether that's your customer service response, whether that's you finding insights, from the banks that you oversee and regulate, whether we can actually use that to not only detect a potentially fraudulent payment, but actually build discovery services, right? So the yellow light goes on, it says, this corridor, this country, this type of activity is problematic. Somebody needs to take a look at it and follow up, right? There's always going to be a human there to follow up. So, this is not about running more efficiently. This is about just doing things in a lot more automated way and having just far superior tools to do your jobs and to do their jobs better. But I think in what we're being asked to do, you still need legal structure, you still need operational expertise, you still need people who spend their day figuring out how to take risk out of the system and making it more scalable and resilient. And we have to do that across the board. That's not just for the big players. That's not just for the money center banks. It's for everybody. And a more inclusive economy, a better connected economy, a more automated ecosystem is good for everybody.
Thank you. So I just summarize this with ledgers, trust, and institutions helping us build these trust networks that are necessary for finality in settlements. And we consumed all the time. I'm sorry that we did not allow for more time, but you will have these gentlemen during the coffee break to pick their brains. Help me with giving an applause. Thank you.
Thank you very much. We do not have a WhatsApp group, but I can let you know that our shared state of play is that we are running a bit late. One of the projects where the BIS Innovation Hub has explored how to enhance existing infrastructure is Project Nexus. Our next speaker will share with us plans to bring Project Nexus to real-world usage. Let me welcome the Deputy Governor of the Central Bank of the Philippines, Mr. Mamerto Tangonan.
Thank you very much, and thanks for this invitation to share the work that the BIS Innovation Hub and my colleagues from Indonesia, Malaysia, the Philippines, Singapore, and Thailand have been doing on Project Nexus. Nexus is our joint effort to enable instant cross-border payments in the ASEAN region and even beyond. It is somewhat related to the theme of the previous session on technological innovation to enhance existing infrastructures. But to me, the project is both simple and complex. As the next slides would show, while the solution concept is simple, the binding constraints to cross-border payments that were overcome proved to be somewhat complex. Nonetheless, the impact would be enormous as it stands to benefit a large number of people in the participating countries. They say a video is worth 1,000 pictures, so let me start with a short video to illustrate what Nexus is about.
Digital payments have become so easy that we hardly give it a thought. With a few taps of your thumb, and you're done. Except when it comes to sending a payment to another country. Despite all of our advancements, the challenges and frustrations remain. Cross-border payments. Leaders and regulators around the world have been working for years to make them faster, cheaper, and more transparent. The G20 considers it a top priority. Now, a solution is near. Instant payment systems in different countries connecting once through a single hub, helping you send money to your friends and family quickly and with little cost. The solution is called Nexus. Nexus links your bank account with an applicable ID, such as a phone number, allowing you to send money across borders within seconds. Nexus is a project by our team at the Bank for International Settlements Innovation Hub in Singapore and our partners around the world, including a recent phase of work with 5 central banks from Indonesia, Malaysia, the Philippines, Singapore and Thailand to build a blueprint for the Nexus model in the real world. It's been an intense phase that's focused on 3 key work streams: technology and operations. Nexus has been designed based on open source software, APIs and ISO 20022 standards, ensuring that it is scalable and meets the legal requirements of each country. It also builds upon the existing domestic faster payments infrastructure and makes this available for cross-border application. Scheme and governance. A robust and proportionate governance structure has been proposed, benchmarked against global standards. And financial sustainability. Ensuring that Nexus achieves the low cost and transparency targets set out by the G20 cross-border payments roadmap, while being commercially viable. Nexus has the potential to be a global service, creating benefits for economies and citizens around the world.
Thank you, Maha, for that very interesting video. So as we all know, cross-border payments are often slow, offering a less than optimal user experience and imposing high costs on individuals and businesses. In contrast, in over 70 countries today, domestic payments reach their destination in seconds at near zero cost to the sender or recipient. This is thanks to the growing availability of instant payment systems, or IPS. Connecting these IPS to each other has the potential to enable cross-border payments from sender to recipient in under 1 minute in most cases. In Southeast Asia, we have been pioneering IPS to IPS bilateral linkages since 2021, so that our citizens can start making instant cross-border payments. We know that it can be done, and it delivers cross-border payments that are faster and cheaper. However, the challenge is that connecting countries one-to-one quickly becomes a complex, if not impossible, endeavor, since every IPS has different technical standards, business processes, market processes, and regulatory requirements. Each new bilateral initiative requires a complex technical integration and a multi-party legal negotiation. Nexus addresses these challenges by making it easier to interlink multiple IPS through a standardized and multilateral approach. As a result, each IPS operator only needs to invest time and resources to connect to Nexus once, rather than repeating this process every time they connect to a new country. Nexus therefore makes it easier to scale the network of IPSs, ensuring that cross-border payments have the same efficiency, safety, and inclusion benefits as domestic payments. We firmly believe that Nexus, when implemented, will contribute significantly towards the G20 cross-border payments roadmap, which we have all been proponents for. The roadmap sets a number of targets for the speed, cost, access, and transparency of cross-border payments. As the Philippines is the 4th largest remittance receiving country, Nexus will immediately benefit overseas Filipinos. The project will make it cheaper and faster for them to send money to family and friends back home. Meanwhile, for Philippine residents, Nexus opens a new channel for sending funds abroad. With merchant payments, once it becomes available, millions of tourists between countries connected to Nexus will have more convenient way of paying for goods and services directly from their home bank accounts using their mobile payment apps without need to go to money changers. This will also benefit the MSMEs or the micro, small, and medium enterprises in the destination countries. It is also possible for Nexus to be a payment option in the digital economy. In Southeast Asia alone, the e-commerce-driven digital economy is projected to reach almost $300 billion in gross merchandise value by 2025. The ambition is to build this multilateral IPS network to scale globally and connect with other interested and ready IPS systems around the world. To this end, the BIS Innovation Hub and its partners have done the following. First, develop production-grade design specifications for Nexus. This builds upon the technical proof of concept that linked test versions of the IPS in the Eurosystem, Malaysia, and Singapore developed in 2022. Second, develop a working governance framework, including identifying the appropriate corporate structure for an entity that would act as the owner of the Nexus scheme. A detailed scheme rulebook and a framework to ensure effective oversight of the Nexus scheme has also been developed. And third, develop a viable commercial model for the Nexus scheme. This includes formulating a product roadmap, fee and revenue model, and funding options. Let me close with some reflections on what I think have been two of the key success factors to date in developing Project Nexus. First, collaboration. BIS Innovation Hub has been an effective convener and trusted facilitator for bringing together interested countries and parties to this important endeavor. We have also built Nexus around the need to be complementary with other payment channels and offerings, and to enable both public and private sector participants to plug into and to make use of a platform like Nexus, thereby ensuring its scalability and interoperability. Second, innovation. Innovation is not only big revolutions and disruptions. Practical innovation involves seizing opportunities where they exist and being able to draw in and adapt existing and emerging technologies in novel and new ways to serve unmet needs. Here, Nexus has been building upon much of the existing faster payments infrastructure domestically and lessons learned from initial bilateral connections to develop a first-of-its-kind multilateral instant payments arrangement. Finally, we look forward to continuing the important work that the BIS and other interested partners to make global instant payments a reality. Thank you very much.
Thank you, Deputy Governor. The experiments at the BIS Innovation Hub to enhance existing infrastructure continue. Please welcome Mr. Miguel Diaz, head of the BIS Innovation Hub Toronto Center, to present Project Fuse.
Thank you, Kodruta, and thanks, everyone. Let me share briefly what we're doing in Project Fuse. And let me start by touching on Nexus. The power of Nexus is amazing for most of the societies it will touch. And to make this even more powerful, it is important to actually help those jurisdictions that do not necessarily have the basic infrastructure to connect to this amazing solution that is Nexus. And the idea with Fuse is a little bit to help these jurisdictions that do not necessarily have a developed payment system to begin with. Let me start from the very general perspective, and let me tell you three principles that we can observe everywhere. So the first one is that we are facing a significantly increasing demand for settlements in financial infrastructures. And we can see this because we have two elements that are growing significantly. On one side, we have financial inclusion processes that are developing in every country. And on the other side, we have that each person that is included in the financial ecosystem is actually pushing more transactions to the system. And this is not just a one-time thing. If you start thinking about the Internet of Things and how this will integrate with artificial intelligence agents, you might start thinking on how our stuff could start generating transactions on our behalf, and therefore getting all these huge number of transactions into our financial systems. And this is quite important. A second point that is very relevant is that we need to get everyone in. If you think about a digital society and you think people that do not have access to digital payments, you can start thinking about a very significant social problem because people would not have access to all this digital economy, which is fundamental going into the future. And this is something that modern societies cannot take. And the third part is that our financial institutions and our financial market infrastructures were not designed for this environment. So they were designed for very few operations, and they were designed for less people operating within the system. So we need to do something about that. Mainly because if we don't modify and we don't make the settlement efficient, we can actually have an impact on economic decisions, and this is very important. Now, getting into this, we have several problems. So developing and replacing these pieces of infrastructure is not a simple feat. These are complicated monsters, and they're made of many, many different pieces, and we need to make these things quite resilient, because this is not just systemically important, this is critically systemically important. If we stop the way in which people can make transactions in an economy, we actually generate a very significant social problem, which can actually have elements in terms of sovereignty of the countries if we leave that to third parties to provide. And together with this, when we think about the smaller jurisdictions that do not necessarily have the resources, we see the actual problem that we're facing, no? Complicated solutions that cannot be developed for every jurisdiction, but we do have this critically systemic feature on these financial infrastructures. And therefore, we are in a conundrum. And here is where the BIS can actually help, by creating community and by allowing for different jurisdictions to join together and provide the services. And the Innovation Hub actually has one of its mandates or its lines of work in terms of developing next generation financial market infrastructures. And FUSE is just one example of the many pieces of work that have been done within the Innovation Hub. The idea of FUSE is to generate a back-end piece of technology that can serve for different financial market infrastructures and help with the settlement finality, not just for cash, but for many other assets for that matter. And we have tried to develop FUSE with three principles in mind. The first one is that this system has to be future-proof. So we know what we have now with technology, but we don't know what we will have tomorrow. So we have to create a system that can evolve over time with the technologies and with the needs from society. The second principle is that this needs to be cyber secure and cyber resilient in terms of business continuity. We cannot have a systemic, or more so a critically systemic piece of infrastructure without having cyber security and business continuity. And the third principle is that it needs to be efficient and it needs to be sustainable over time, because we don't want this just to be feasible for larger jurisdictions. We want this to be feasible for everyone. Let me go deeper into these three principles. The first one, in terms of future-proofing, I will give you three sub-principles if you wish. The first one is that the system is built on a modular perspective to give it flexibility. The system as a whole is a module. So you can take this code and you can plug it in the back of a retail RTGS, or you could plug it in the back of an account-based CBDC, retail CBDC, or you could plug it in the back end of a security settlement system. Thinking about how we can enhance different financial market infrastructures with one common piece of technology, so making the system a module itself. But we're thinking about this system not just as a module, but as composed by modules. So if you take this thing apart, you will see that this is like Lego pieces. And we have different functionalities that when you put them in one way, they can settle one type of transactions. But if you build them in a different way, you can settle a different type of process within the financial market infrastructure. And this has the idea of trying to reuse functionality that is common among different types of settlement and different types of processes that financial market infrastructures need to put forth. The second element that we need to think about in terms of the future is how we do scalability, and we need to consider many transactions, we need to consider many people instructing to the system, and we need to consider what Tony and Tom very clearly pointed out, many assets settling in the same platform so that we can get these cross-settlement purposes going forward. And the third one is that we need to use technologies that allow us for this resiliency. And these are distributed technologies, and let me be very clear, this is not distributed ledger technologies. These are just distributed technologies under an FMI operator. And these distributed technologies under an FMI operator with the scalability element and the modularity allow us to create a system that is evolvable over time, both with the new technologies that may come in the future and also with the new requirements from a functional perspective. In order to do a critically systemic system or to contribute to the creation of critically systemic infrastructures, we need to consider confidentiality, integrity, and availability of the information. And for that, we try to get into the system as much as possible what we know about the future, which is quantum computers will come in. So we did this quantum resistant, and we also tried to make this as flexible as possible so that we're crypto agile. In case something breaks down, we can just replace that piece for the new technology that is resistant to whatever is coming to us. This also allows for non-similar facilities, which basically mean that if you want to provide the same functionality, you can do so by creating the Lego piece that has exactly the same function, but is built with a completely different technology. So if you are hit in one particular technology, you can just replace that Lego piece for another one that is built on another technology, but the function is the same, and you can integrate the system completely. We want to be efficient in terms of how we spend resources because we want this to be available for the smallest country and for the largest country. And this is why we needed to take advantage of open source. So we are bringing in elements that were developed in an open source perspective. And we're trying to generate the system in a way that it provides a platform for the creation of new modules and for this to be a community. And for this to be a community, we want this to be perceived as a public good in which everyone can put in and that is available for everyone to basically use for the particular needs of the jurisdictions. And this is why we're trying to analyze the pros and cons of putting this in completely open source or just making this open source within the central banking community so that we can build together and create these communities. And talking about communities, we're also working on generating these workshops regarding the technology that we're using in Fuse so that we can start creating community among the central banks and just discussing about these deeper IT elements, thinking about the comments that were made yesterday regarding the need for central banks to actually start developing these new human capital perspectives. It is quite important to create these communities. Finally, where we are, we have already developed about 50% of the modules of this thing, and about 3 weeks ago, we published an interim report in which we generate the signature and signature verification processes with quantum-resistant technology, and this is available both as a paper and the code can be accessed by request. We have also had several of these technical workshops so that people interested in the different central banks can actually join these workshops and start looking at the technologies that we're using. And the idea is that by the first quarter of 2025, we'll have the full cryptographic suite complete, so both including communications, encryption, and the signature and signature verification, which we already have. We'll have the full functionality, the basic functionality, and the monitors to see what is going on in the system. Finally, just to leave something at the end, is we have this partnership with the Inter-American Development Bank and the Bank of Canada, and we are opening this up to central banks that might be interested in joining this community of development to push forward this type of solutions and to build together the next generation financial market infrastructures. Thank you so much.
Thank you, Miguel. Now it's time for a break. For the in-person attendees, I would like to remind you that if you registered for tomorrow's roundtables and do not plan to attend them anymore, please ask our staff to remove you from the list so we can give the opportunity to someone else. You can find my colleagues at the black desk outside of this room. Let's reconvene here in 25 minutes at 11:05. Thank you. I hope everyone had a good break. The BIS Innovation Summit program is now turning to the topic in the space of technological innovation that everyone is currently focusing on. Guess what? Artificial intelligence. Let's start with a discussion on where AI may head and what are the implications for finance. Let me welcome on stage Mr. Chris Cox, Head of Information Technology and Services at the BIS, to moderate the conversation.
Thank you, Gertrude. So welcome to this session on AI horizons and the future of AI and the implications for finance. Throughout today, you'll be hearing a great deal about these topics, and I'm sure also you've been talking about it in your coffee break too. So we would like to use the session to set the scene and also to stimulate some of your thinking. While AI has been around for almost as long as the modern computing era, I'm sure you'll agree that in the last 18 months, it has been both different and remarkable. The release of ChatGPT and its counterparts has not just captured the popular imagination, but has shown us that the space of possibilities for AI may be bigger than we expected and may arrive sooner than we anticipated. It has also started to reveal new risks that were not previously apparent. These innovations have already had significant economic impacts, particularly on the allocation of investment capital and the growing role of big tech firms. There is widespread speculation, as well as serious research, suggesting that AI technology will have a profound long-term impact on economic productivity, the nature of the workforce, and the structure of the economy. However, there have also been short-term disappointments, with AI-driven productivity gains proving to be not as easy to realize or as safe as many has hoped. Whether AI unfolds as a marathon or a sprint in the times ahead, it seems clear that it's here to stay and we'll have to adapt to it. It also seems clear that there are many new innovations ahead. The industry is abuzz with speculation about artificial general intelligence, or AGI, and autonomous agents, and I'm sure we'll touch on those two things later. The physical world is also set to change, with self-driving cars and physical robots finally coming of age. So, we face an exciting yet uncertain future. What does the horizon look like, and what are the implications for finance in particular? I don't have any crystal balls up here on stage, but I have two brilliant panelists. I'm delighted to welcome Jeremy Harris and Emily Prince to our discussion. Jeremy is the co-founder and CEO of Gladstone AI, a company that collaborates with researchers at the world's top AI labs and with US national security agencies to address extreme risks from AI. Gladstone recently carried out the first ever assessment of catastrophic AI risk commissioned by the US government. Jeremy is also the co-host of the popular Last Week in AI podcast, which discusses the latest news and research on this rapidly evolving topic. I suspect you may be one of the most informed people on the planet when it comes to industry developments in AI, Jeremy, so it's a privilege to have you here today. I'm also delighted to welcome Emily Prince to the stage. Emily is the Group Head of Analytics and CEO of Yieldbook at the London Stock Exchange Group. Emily is responsible for analytics and AI customer solutions and leads the group's strategic AI partnership with Microsoft. Emily has 20 years of experience in financial services at institutions including Lehman Brothers, RBS, Barclays, and BlackRock, and holds board positions with Turquoise and Finborn. It's a privilege to have such an experienced AI practitioner from the financial services industry here with us today. So I'm going to start with you, Emily. Over the last 18 months, we have all heard sensational stories about the potential of AI and seen a significant amount of jumping on the bandwagon. It has often been hard to separate the hype from reality. So as a practitioner in the financial services sector, can you give us some examples of what AI can do and is enabling us to do that we couldn't do before?
Happy to. And first of all, it is a great honor to be here today and on such an esteemed panel. So I think the first thing to say is I'm not a romantic when it comes to AI. I think I'm very much in the practical of how do we make it genuinely transformative for financial services. And that is something that I personally subscribe to. The potential of AI can be enormous. And just as we were noting, there are a lot of things for us to consider, to get right, to make that true. But when we think about the potential, it is enormous. And what do I mean by that? Let's take some examples. When we think today that financial services is often regarded as one of the biggest generators of information, but how easy is it to consume information in financial services? Each of us in this room generate extraordinary amounts of intelligence, of information, and our predecessors have as well. But our ability to use that information and consume that information is limited to our own ability to focus within a day, the hours that we have in a day, the distractions we have in our phone, our children asking for food, whatever the case may be. And so when we think about context windows that are presented with AI and the ability to surface much more information, much more can start to be achieved. And we can start to notice trends across data sets that we would never have been able to see before. The second thing, and this is one that is very close to my heart, is that historically in financial services, there have been all sorts of barriers to access information. Sometimes those were, can you code? Sometimes they were, can you speak English? There are all sorts of barriers that exist within financial services. And one of the things that we start to see, and this is real, these are products we're building today, are chat interfaces that allow us to just ask a question and interact directly with an API. Now, just to settle on that, that might not sound radical, but that is hugely transformative when you think about the barriers to interacting with an API for so many participants across financial services today. The third thing is clearly that when we start to think about how we interact with information, that can bring about huge efficiencies. I think rarely a day goes by when I don't hear from someone, if only I had a bit more time. And so what we're starting to do is to really nurture people to be able to focus on the things where we add the greatest value and start to think about how we bring the right level of automation where it makes sense to. And that is a stepwise thing that we need to get right. But bringing those things together, when we have an unlimited access to information that we can really interrogate in a way that we can consume and use, and it is accessible to everyone, when we put those things together, that is transformative for financial services.
Great. And, you know, Indy, I know you've been very busy with your own kind of proofs of concept and maybe even some production applications. So, you know, in those so far, have you found that the technology, you know, generative AI in particular, has lived up to the hype?
I think the reality is most people resurface the issues they already knew they had in the organization. And a lot of those things that were niggling in terms of how the data was organized, how it was structured, the degree to which it's labeled, those things are coming back and in some examples being amplified. So I think if you take a balanced approach in saying, where am I today? And then a very focused view on which problems am I trying to solve for, I think you get it about right. I think if you approach it with saying, AI is going to solve for everything, in a utopian state, it will do everything. There's no need to do anything. I think you're going to be living in maybe a land where the hype is not reconciling with reality.
Great. So Jeremy, you've often spoken about the phenomenon of moving goalposts, where people that are skeptical about AI advances express doubt that some huge milestone can be achieved, and then as soon as it's achieved, they shift the goalposts and express doubt about the next innovation. So do you think that what has been achieved to date in AI and more recently with Gen AI has been genuinely transformational, and the skeptics are indeed just shifting goalposts, or are we yet to see the real breakthroughs, do you think?
Yeah, I think it's, excuse me, I think it's the question that everybody's trying to wrestle with right now. I do want to, by the way, just thank everybody for being here and for the invitation, you, Chris, and Christina as well. Really appreciate being here, and it's such an important time to be having these kinds of conversations. Yeah, I think when it comes to our expectations of the technology, you know, I'm old enough to remember when it was a big deal to have an AI system that could speak to you in such compelling terms as to convince you that it was a human being, right? That was known as the Turing test. For many people, that was the magical bar where they said, well, I'll believe we're on course to build human-level AI when we finally, you know, beat the Turing test. That happened a few years ago. Now, you know, we're on to the next thing. For 5 minutes. Yeah, that's right. And then the next thing, you know, for some, and it varies from person to person. Some people said things like, I don't know, I'll believe that we're on to human level AI, kind of that nominal trajectory, if AI can, solve open problems in math. That happened about 6 months ago. If AI can, make material advances in fields like material sciences. That happened about 3 months ago. We now live in a world where more and more of these barriers, and we always, by the way, find ways to rationalize those after the fact. Oh, it wasn't such a hard problem after all. It turns out, no, I can tell you how this was solved. It's the damnedest thing. It's just this artificial neuron connected to that artificial neuron and the activations, all this stuff. And you're like, well, yeah, but I could explain the human brain in those same terms and trivialize the whole thing as well. None of which is to say that these are not valid points to some degree. Some amount of goalpost shifting is actually to be expected. Right? We build new technologies, we learn, oh, shoot, the thing that we thought was really hard was actually kind of easy. We got that for free. This other thing became the real bottleneck. And so I think a large part of the tension right now in the field is assessing how much of that is legitimate goalpost shifting, how much of it is, maybe something we ought to be a little bit more attentive to. And I think one last kind of flag to plant here is we're starting to get, and Emily hinted at this, we're starting to get a bit of a sense for some of the metrics that might actually map onto human level intelligence, like the full-on promise of the technology. I think one of them, again, this is one that Emily referenced, this idea of context windows, right? Essentially, this is roughly the amount or the number of thoughts that an AI system can hold in its head at any given time. Like back in 2020, that number was about a short essay worth. Now, 2 years later, it was about half a book's worth. Now it's about 10 million words worth, right? So as you start to increase the size of those context windows, you can start to imagine plugging in the totality of all your corporate documents, articles of incorporation, customer lists, product ideas, everything, into one system that can parse and reason kind of effectively about that data. So I think that's an interesting metric that it's difficult to separate that from an approach to something like human level or even super intelligent AI.
Okay, so breakthroughs have definitely been made then, I guess you're arguing. And going back to the financial services setting, to Emily, while the power of the models has been steadily increasing, we know that they are hard to implement in practice, in particular in a regulated financial services context, where we need to protect both markets and consumers as well. And there are all sorts of regulatory requirements. So could you share a bit about some of those challenges and what you see are the challenges currently and maybe upcoming in implementing AI in the real world?
Yeah, happy to. I mean, I think for me personally, I always start with the use case. Which problem are we solving? And being very clear about that and also challenging how we've necessarily prescribed use cases in the past. Jeremy and I were talking in the past. We were very particular around defining personas as part of use cases. And we're finding that doesn't necessarily hold as strong and true in the context of AI. So the first thing is define that use case, define it very, very clearly. And out of that, we can really start to think about what are the things that we need to untangle? Where do we need the abstractions? Where do we need the controls? Where do we need the humans? Where do we need those control points, in other words? And when we start to look at the picture from that perspective, the problem becomes a little bit more bite-sized in a way that, well, we do have a lot of model regulation as a financial service community. And there are a lot of lessons that we can glean in terms of model monitoring, in terms of model suitability, that we can garner from some of those precedences. We also know that with things like DORA, there's a lot of considerations around data and how data is presented and the topology of data and the trustworthiness of data. So again, we have a framework that we can lean into and start to think about how do we put the right guardrails around those. And so what I'm describing is it becomes really a jigsaw where we can start to look at the whole ecosystem and in respect to the problem we're solving, start to make sure that we've got the right frameworks and guardrails. Where I see the challenge is where people don't necessarily have some of those pieces in place. And so for the people who maybe didn't have a model infrastructure or didn't have a model risk management framework in place, it starts to become a bigger lift to be able to get to the right level of control. And I think that's where having a very considered approach of what use case are you solving for, and then which pieces do you need to build yourself and which pieces do you need a framework around and partnership is an extremely important set of decisions to make. I think once you put that in place, you can actually achieve a lot in a very safe and measured way. I think the model implementation is becoming arguably easier, Where I see the greatest challenges is in scale. Consistently, I see problems from a customer perspective around people trying to scale their AI solutions. They can stand up a nice little prototype, but when it comes to running in a scalable way, that resurfaces. The second one comes back to how their data has been organized, structured consistently. And that has also ramifications in terms of when you're trying to reduce the levels of hallucinations. And then third, one of the things that I see commonly is when people are starting to implement AI, there's often a lack of literacy. We talk a lot about financial literacy, AI literacy. What is true? What is myth? And there's a lot of hype, and the media is helping to bring in a lot of hype and energy into things that may be true in certain specific examples, may not be true as general. And so one of the things, and Jeremy and I have actually been speaking about this, how do we make sure that there's the right level of knowledge, understanding, so that those right informed decisions can be made at the outset?
And one of the very specific kind of risks that gets highlighted in the financial services setting is often explainability, right? So what are these models doing, and a demand that they are somehow transparent. Do you think that's even achievable? And if it's not, how big a problem is that?
I'll say it has to be. So, and I think this comes back to the use cases again. Having explainability and understanding of the model that is being used to solve a particular problem and whether you've got the right level of explainability for that problem is something we're all accountable for making sure is true. One of the things that I've spent some time on is thinking about, we have traditional models and we have these probabilistic kind of approaches. We have pricing models that do hedging, that generate risk sensitivities on a daily basis across the industry. They're model validated, they're governed, there's very firm kind of frameworks around those models. I see an interlock between those where the LLM is effectively acting like a relay, sending signals, messages across, triggering an action to happen within one of those deterministic models, not replacing it. Because within those deterministic models, we have a long precedence of explaining what they're doing. They might not be the best models. Funnily enough, the probabilistic model may give a better answer, but can we explain it and prove it? So I think this is going to be one of those areas where, as AI evolves, we will see transitions where some problems may never get solved for, where we always feel like we need a deterministic approach, and where in other instances it is appropriate. I think we're quite far into, we'll use it as a relay for now, gathering, but we won't make decisions.
Thank you. So let's move to the future. Jeremy, part of the work you do is to track AI innovation and industry developments, which you discuss in your podcast, Last Week in AI. Over the last 18 months, we've seen a continuous stream of new developments, including the release of increasingly powerful large language models. There are rumors that the new version of ChatGPT will be released imminently. Many of the foundational AI labs are openly working on a mission of artificial general intelligence, or AGI as it's called. So could you start by giving us all an idea and a potted summary of what AGI is?
Yeah, I mean, we've got like 5 minutes. To tie this in as well, I think to the picture Emily very expertly laid out there of the sort of the hype versus the reality versus the fiction. Both things are kind of true at the same time, right? We can be approaching these very powerful systems while at the same time in regulated environments, right, where reliability is really key. You just have a couple of killer features that are absent and it just nukes the whole thing, right? So there's this question about, yes, like on a path, but when, for what application? So I think that's a really important kind of ingredient to all this, and Emily's really right to point that out. So yeah, AGI, okay, human level AI, artificial general intelligence, artificial superintelligence. The one thing I can tell you is nobody has any agreement on what these terms actually mean. So we can just be hand-wavy about this, and I'm about to be, so I apologize. But it's essentially the idea, if you look at OpenAI, roughly their definition is something like an AI system that can do all human productive labor, right? Something like this. That may sound far-fetched. It sounds increasingly less far-fetched as time goes on. It certainly sounds much less far-fetched today than it did in 2020, certainly than it did in 2016. So I think one of the core feeders, one of the core things that makes people think that we may be on that trajectory is that the inputs to AI, the equation behind intelligence seems to have dramatically simplified in the last 4 years. Right? So we've kind of come about this realization that you don't actually have to have a crazy clever artificial brain to make these things work. That used to be the thesis. We'll come up with essentially a bunch of software engineers / neuroscientists who are going to come up with this very clever way of architecting these artificial brains. And then in 2020, OpenAI, with the precursor to ChatGPT, they essentially showed that, well, actually, if you just take the same techniques that have been kind of working this whole time and scale them up, right, train these neural networks with way more data, way more processing power, and here we're talking about tens of millions of dollars in just processors alone, billions of dollars even, you get a reliable increase in intelligence out. So you sort of have this equation that at the macro level it boils down to, where you have kind of dollars in one end, IQ points out the other, to roughly kind of oversimplify. That is the picture of the world as far as OpenAI is concerned, as far as Google DeepMind is concerned, as far as Microsoft is concerned. Microsoft today is engaged in the single largest infrastructure build-out in human history. In human history. $50 billion a year on data center infrastructure alone. $200 billion for the Apollo moon landing, so in 4 years we get there. This is only increasing. That's on the thesis explicitly. The scaling trajectory leads us to this sort of AGI universe. So broadly, AGI, what is it? I don't know. No one else can tell you, so at least that's one thing. But it certainly is something that's damn important, and we should all be talking about it.
Very good. And you kind of highlighted it there, right, with Microsoft, with the, investing in these huge infrastructure farms. Could you give us a bit more on that, a bit more color, like across the industry, like so with this equation of just money and kind of resources in, it's hardware, I guess it's also energy as well. So how is this playing out at the moment, and how kind of intense is that, drive to accumulate these resources?
Yeah, well, so if the equation really does, if what I told you is true, and I don't know if I hope that it is, but certainly I hope I'm not lying to you, then a couple of things immediately become true as corollaries, right? So first, access to these AI hardware, AI processors becomes the key ingredient, right? This is your path to human level intelligence. This is your path to trillions of dollars, tens of trillions, I don't know how many trillions of dollars in value, right? So you got to get your hands on advanced AI processors. Who builds those? Well, it's pretty much NVIDIA today. There are competitors popping up, but NVIDIA has 95% market share. That's why they've been in the news. That's why their stock is doing so well. Everybody wants to get their hands on these things. Above them in the supply chain, kind of earlier on, you have the manufacture of these AI hardware components. So NVIDIA designs them, but they get manufactured in Taiwan Semiconductor Manufacturing Company, and others. So everybody's trying to get their arms on these tools, these semiconductors, and build more, right? That's why the CHIPS Act came about in the United States, $50 billion for just domestic kind of onshoring of semiconductor fabs. We're seeing that happen around the world. Other reasons for that, but it is in large part driven by this race to scale. Yeah, I think really it's the smart money right now is pushing increasingly in this direction. And hardware is one component. But then to run the hardware, as you said, you need energy. And today, depending on the area you think about, so in the United States, we've got all the hardware we can eat roughly, but energy is a big, big issue, right? So to train their latest model, OpenAI had to use something on the order of like a week worth of New York City's power consumption, right? Like that's the order of magnitude that we're talking about. People freaking out about Bitcoin, well, this is on a trajectory like that. So we're at New York City today, where else is it gonna be in the future? So there's a huge requirement for energy infrastructure. In other countries like China, it's almost the reverse. Right, so there you have a sort of shortage of hardware, a lot of energy infrastructure. So the bottlenecks differ depending on the area that you look at. Yeah.
Okay, thank you. And so let's turn to like what AGI or something like that, or whatever that means might mean in a kind of business context. And so, like while many firms are successfully deploying AI in predictive models and more recently in chatbots, AI is still obviously a long way off from being able to automate business processes at scale. I think we'll all agree with that. Sam Altman actually said himself that while AGI could be developed soon, it will change the world much less than we all think and change jobs much less than we all think. His reasoning appears to be that people and businesses are slow to change, regardless of the technology. So my question to you, Emily, is as AI models get increasingly more powerful, do you think we will see a large-scale automation of activities currently performed by humans?
I think before we get to automation, there are quite a few other steps that are hugely important, if not more important. And I'll leave the kind of full automation point almost lingering because I'm not sure if it matters, funnily enough. If we focus first on what is the benefit of humans to be able to benefit from the right information at the right point in time. Like imagine right now, based on a thought, based on your intent, you're presented with the right information to make for the best decision. That is so powerful for humans to make the best decisions. And I see that as the first step. So it is very much how do we surface the right information based on the intent of someone. And you're already seeing it within things like ChatGPT. What you haven't really seen at scale is that in a financial context, but you will. And as that starts to surface, that will really systematically support better decision making, but also allow for many people to have better access to services than they have today. One of the reasons we aren't able to give everyone the same and equal level of service is we simply can't practically do it. This lowers the barriers in a way that becomes much more real. So that's the first one for me. The second one is much on the assistant side, and you see that with a lot of the kind of productivity themes like co-pilots and so forth. I do think you will see the benefit of certain tasks being presented more quickly and with much greater auditability, importantly for this industry, as a result of things like that. That can be a stepwise change. I don't know how much people will sympathize with this. I have spent too much of my career building things in Excel. And then picking up other people's macros and trying to unpick them. I mean, it's torture. Truly torture. So, those are some of the types of things that we can solve for in a much more systematic, auditable way. I think when it comes to augmentation, and deliberately go in that order, that is a little bit further, and we haven't yet defined enough the rules of the game. But what we are seeing is where we can say, that person is trying to solve for that problem, how can we augment them in a way that does make them more efficient and allows for them to focus on where we really need critical thoughts? We're starting to see very early examples of that. But I think that will be the slowest moving, because that is where we need to think about this fabric of financial services and how we make sure we reinstate the right decision rights, but also the right level of accountability and scrutiny. So insights, then we'll see the assistance increasingly, and then ultimately augmentation. I think we're some way away from full automation today.
Even with the insights, though, what you're suggesting, I think with some confidence, right, if I'm reading you correctly, is that actually just through the insights alone, that can have a pretty transformational impact on businesses. So could you give us a glimpse of like what that kind of means and what businesses might, maybe as your own or just more generally, right, more abstractly, what should we be thinking about in terms of that future and what it brings for staff?
Let me actually do it with an example. So what were the trends in the fund industry last year? Some of you may know that question intuitively, and others may be inclined to look somewhere. Where are you looking? Now, in there lies the truth that we're all going to look at different sources. Maybe some people don't actually have access to be able to source that information, and your go-to is Google. Maybe Google's right. Maybe. But the point is you're not looking at a verified source of information. And so the likelihood that you're going to pick up false information is now greater. Not necessarily true, but possible. And so being able to source what were the trends within the fund industry last year, and then go further and say, tell me the top performing funds last year. And tell me where I can invest within those funds. And tell me a little bit more about the risk characteristics. But I don't really like investing in X. Tell me where I can find something that better suits my intent as an individual to have something that I'm invested in that most matches my interests, my risk profile. What I just described there probably involved many different people, many different systems, and certainly many instances where the data will not reconcile. So it is fraught today with inconsistencies. The product we've actually already built enables you to go end to end in those questions with a question. In French, in Spanish, in Japanese, in English. So the ability to surface the right information to people has just got a lot more easy to achieve. Very powerful.
Okay, thank you. Let's turn to risks and safety. And I know, Jeremy, this is one of your favorite topics. So many of the world's governments and public authorities have recently intensified the attention to the risks posed by what's so-called advanced AI systems. As part of this, your own company recently published a report on the safety and security of advanced AI, which was commissioned by the US State Department, and you surveyed 200 experts from leading AI labs. So people in the audience may have heard of something called alignment risk. Again, can you briefly explain what that is and what you think can be done to address it?
Yeah, for sure. And I think, I mean, we've touched on it already, but any conversation of the risks of AI has to be coupled to a conversation about the benefits. So I'll park the benefits piece because the question is about the risks, but just to highlight, I mean, Emily's already surfaced a whole bunch of opportunities that are being created by this stuff. So, be remiss not to flag that. This is just it's a multi-headed hydra. We have to look at both sides of the coin here. So on the risk piece, alignment is this really interesting challenge. I guess the best language I could give here for this audience is maybe Goodhart's law, right? So let's think about how an AI system is actually trained. You take this blob of intelligence, let's not get bogged down in details. You get it to do a thing. It fails at first, then you mess with that blob of intelligence and you try again. And through a glorified process of trial and error, eventually it gets good at the task. What does getting good at the task mean? It means some number that you care about goes up, right? That's the training process. I want you to maximize for the number of upvotes that you get from human reviewers. That's how ChatGPT was sort of fine-tuned at the end, right? Get humans to upvote and downvote, roughly speaking, its outputs. Great, that's the number you're making go up. Okay, what do we know about Goodhart's law? If you pick a number, any number, and then you turn it into a target of optimization, that number ceases to measure what it used to measure, right? So GDP. GDP looks like a great thing to kind of optimize for, right? It's correlated to well-being. When GDP is high, we're all doing well. Let's maximize the crap out of GDP, right? What immediately happens? People find ways to hack it. You can do all kinds of things. You can borrow money. You do all kinds of things that are not necessarily good long-term to sustain the economy growth, but that do succeed at growing that number, right? In the same way, if an AI system gets dangerously creative, it can find ways to achieve its programmed objective, in other words, to make that number go up, that have side effects that none of us anticipated. They can use strategies that are dangerously creative, but that no one told it not to pursue because we never thought of them in the first place. And ultimately, that's kind of the problem with intelligence is we want these systems desperately to come up with new strategies that we didn't think of. That is, in some meaningful sense, the entire point. That's what this artificial intelligence is for. We couldn't solve the problem, and so we're commissioning an AI to solve it for us. Who are we to get upset when it does it the wrong way, right? So this is the challenge. The current paradigm, the way we train these systems as giant number go up machines, to use the Bitcoin maximalist framing, is not actually conducive to always getting sort of safe, reliable, trustworthy outputs, right? So ChatGPT at root, what is it? It's a text autocomplete engine. It was trained by being fed sentences from the internet and just completing the next sentence over and over and over again. Well, that means it cares about predicting the next word. It doesn't care about being truthful or helpful or harmless or honest. It cares about predicting the next word. That's why it's so easy to jailbreak these systems into revealing these weird behaviors, into spouting conspiracy theories or whatever. If you prime them with the right sentence that puts it in that mindset that, oh, I'm auto-completing a sentence from a conspiracy theory website, so here's the output, right? So at the end of the day, that's the challenge. We don't know how to come up with metrics that we can train these systems to optimize for that are aligned with what we actually want them to do. And so we create perverse optimizers. And every AI system in the world today is an example of that, and that's why there's so many weird edge cases with them.
Do you see progress? I mean, there's been talk about this for 18 months or more, and yet really bad things, touch wood, don't seem to have happened yet. But and the labs seem to be responding, right? So are you, maybe I don't know if this is the right question, but are you optimistic or pessimistic about alignment and the kind of progress being made towards addressing it?
Yeah, well, I guess I should probably just mention the kind of the end game scenario that's frankly just like everyday water cooler conversation at the Frontier Labs today. And when we spoke to, I mean, you referenced it, but sort of hundreds of these folks, it was really clear where they see it going by default if we don't come up with countermeasures. And hopefully we will, and there's reason for optimism. But if you train a system that is looking to optimize something even slightly different from what you're after, and you give it a wide enough action space, and it's a clever enough system, there's no particular circumstance, or it's really hard to think of one, where the system is better off pursuing whatever that objective is if it gets turned off. There's no circumstance in which it's more likely to achieve its trained objective if it has access to fewer resources or less control over its environment. And so, in that sense, baked into the premise of modern AI is this incentive for what is known in the technical AI literature as power seeking. I mean, that is the language that's used. It reflects the sort of risk class that people are worried about as these things get more kind of freedom of action. There's a lot of research going on right now, especially on the interpretability side. And weirdly enough, this actually does tie into some of the explainability questions, right? We want our AIs to be able to explain to us what they're thinking, what their plans are, in human understandable terms. And so there's this issue that alignment may seem like a very far future concern. It manifests today in these weird ways where we have chatbots who will hallucinate, who will give us conspiratorial answers to questions, all those sorts of things. Where this goes long term is potentially sort of fairly intense, but the tools that we develop along the way may pay dividends, right? The explainable AI stuff. There's debate about what constitutes an explanation, by the way, which I'm sure Emily can speak to very deeply. But these techniques are hopefully going to scale as the systems do too. And I think there's a lot of room for concern. It's certainly not the default course that we're on right now, but if we can make progress in those key areas, I think we'll be in a good spot.
Okay, and I've got to ask one more scary question, then I promise no more. In a recent interview with Time magazine, you stated that AI labs are engaged in the game of Russian roulette with AI models. So could you explain what you meant by that comment and how worried we should be about that?
Yeah, so we actually stole that quote from, so we had a lot of whistleblower reports in the process of putting together this action plan. There's a gap at some of these labs between what you'll hear from the admittedly publicly concerned executives. Like you hear Sam Altman testify before Congress, you hear other folks do the same. They are expressing a level of concern that is meaningful and significant. The course of action that they recommend is sometimes not aligned with, and you'd expect this in a big organization, right? This is like some big revelation. But certainly we spoke to a lot of whistleblowers who framed, in one case, framed things as, yes, this game of Russian roulette. As you scale these systems, again, dollars in or compute in, IQ points out this very rough picture that is wrong in interesting ways, but at least wrong in interesting ways. As you scale your system, you get more IQ points. But those IQ points don't tell you what the system will actually be able to do, right? Will GPT 4.5, the next kind of level of scale, will that allow us to do all the things that the London Stock Exchange wants to do, right? Will it allow us to finally solve problem X, Y, or Z? No one actually knows. We get to build the system, sit back, and find out. And it's in that sense that researchers at these labs have called this out as essentially a game of Russian roulette as they see it being played out internally. Let's build the system, see if it's kind of dangerously creative. If we give it access to enough tools, will bad stuff start to happen? No one really knows, and there is no theoretical foundation, no theoretical basis on which we can make that extrapolation reliably. So that's sort of the context of that quote, yeah.
Okay, thank you. All right, and now speculating on the kind of a bit the long-term future of this, and like what that might mean and what potential safeguards could be. Emily, what do you think some of the long-term implications of all of this will be to the financial sector as we know it today?
Oh, predicting the future. I think it is in this one particularly hard to say exactly, but what I will say, some things that I feel fairly confident on. I do think that we are going to see people empowered with much greater access to information. And you can draw analogies to the calculator and the internet and many other things. I think that is true. I think you will also see an opportunity for people to be better equipped in terms of the intent of the task that they are trying to perform. And I think those two things together will be radical in of themselves to financial services. I think one thing that I'm less sure of is what is the impact in terms of AI is not a finance phenomenon. So what is the impact from a broader perspective in terms of some of the changes that are happening from an AI perspective, and how do we make sure that we preserve the integrity, the intent, the safety within financial services to ensure that stable operation. I think that is one of the key things where we're taking a very careful, stepwise approach. But I do think, and actually reflecting on something someone else said yesterday, where we saw things like cloud as background technology, this is foreground technology. Maybe also background too. And that's not something we've seen historically. So I don't have a crystal ball. I can't say what that looks like. But some of the things that I'm speaking to are some of the tangible examples that we're already starting to see play through. But I do think at the forefront, and building on some of the points Jeremy was making, the need for literacy around AI and understanding it not in the context of deeply necessarily within the model, although people are very welcome to, but really practically what does it mean for the solution you're trying to build, how to make it safe, how to put the right guardrails on it, how to stop certain things happening where you don't view them as desirable is so critical. And finding a scalable way to get that level of understanding, literacy out across the industry is of paramount importance.
And you spend time with staff trying to indeed increase literacy on these topics. Are there kind of practical things you could recommend, like in terms of maybe some of the people here as well, right? About how to kind of, it's a very complex topic, right? And so how should people engage with it? And
it is, but I think it's probably one of the most well-written topics that exists on YouTube and Coursera and so many other places. And these are free courses that people can take up. There's a huge number of experts who are more than eager and passionate to discuss. So I think this is one of those things where it is truly an example of learn, unlearn, and relearn. And if people lean into it, the answers are there. But we need people to lean into this and really understand, not in a general abstract way, but what does it mean for your organization? What does it mean for the problems you're solving for? And take that position and make sure that we're putting the safeguards in.
Great. And they can listen to your podcast as well, right? And Jeremy, just kind of picking up on what you were saying before about some of the kind of long-term risks and the systemic risks. And we'll be hearing from some central bank governors later on today about kind of how they view AI risk and what they might be doing about it. But just maybe you could kind of, in practical terms, in the kind of months and years ahead for people working in this field to try and ensure that they are doing what they can to help with alignment and safety and we hear this term like responsible AI. What are the kind of things that people can and should be doing?
Yeah, it's a challenging question in some ways because the sorts of systems that you need to be working with day to day in order to make the kinds of advances that make a difference at the very frontier. When we're talking about power seeking, like I'm not talking about the AI system that the local startup is going to put together with a $500,000 budget or something, right? We're talking about like the frontier systems. And building the safeguards that will work for those systems requires access to those systems. It's very difficult to contribute to those frontier risks without taking measures that require access. However, there are other categories of risk that are very significant. Weaponization is another one that we covered in that investigation, that action plan. This is essentially the risk that AI systems could be weaponized by malicious actors to take down critical infrastructure, elements of the financial system, so on and so forth. I think one of the most important things to do in that context is to be aware of what is the art of the possible. Right? Fraud obviously is top of mind right now, but as we build systems that are capable of executing multiple linked, chained together sequences of actions that are coherent, you start to think about things like cyber agents. We just saw a paper, I think it was like 3 weeks ago, where one-day vulnerabilities were exploited by an AI system that saw them for the first time. Basically like a description of a vulnerability that was made public, which, by the way, is going to be shared and unpatched in many, many systems around the world. And a version of OpenAI's GPT-4 was just able to take that and use it to successfully execute these non-trivial attacks, something like 75% of the time. Right? That's today, that's at this level of scale. It's the worst these systems will ever be. Right? So I think one aspect is just being aware of what is in the art of the possible. A lot of what we do, so we have contracts with the US National Security Community, Department of Defense on training specifically, and a big theme there, it's all for kind of non-technical audiences, so it's not about understanding the guts, it's understanding what's coming next, right? So you level set, okay, here's where we are today, here's how scaling works, here's what systems like ChatGPT are, blah, 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 fine. But coupled to that, you must add a horizon scanning function. What has happened in the last few months that completely changes the art of the possible? It's not that it'll be incorporated tomorrow, right? But you need some lead time to respond to it. Just because regulations don't accommodate it today, culture doesn't accommodate it today, does not mean that we get to sit back and wait for this vanguard to actually hit us. We have this blessed gap between the art of the possible becoming possible and when it's actually implemented. We ought to use that time to prepare ourselves, to figure out how we can use it and so on and so forth. So I think that delta or that gap is really, really crucial. And there are a lot of ways you can fill it. But yes, having some kind of horizon scanning function, I think organizationally is really important.
I took something in common from both of you there about this. So it seemed to be about kind of just educating ourselves, being literate on these technologies and indeed understanding what the art of the possible is. We'll probably have time for just one or two questions right at the end. But just to wrap up, I have to ask you, what are we going to be talking about this time next year?
Emily?
Agents.
She stole my answer. I'll just add a level of detail that Emily was already thinking when she said agents, I'm sure. A key metric, so by agents, right, this is like, take ChatGPT and give it a complex instruction like make me an Airbnb clone app that can help me rent out my garage. And then it'll list out the tasks involved in accomplishing that and farm out each of those subtasks to another version of itself for autonomous execution. That's roughly speaking what we mean by agent. The number of those tasks that you can chain together coherently is we're still trying to come up with the right way to express that. We kind of call it the task coherence length, so the number of chain tasks that an agent can actually handle. Tends to scale with the context window that Emily was talking about earlier. That's the number, that's a number, really, really key number to look out for. If context windows go the way they have been going, I think that number could actually really explode in the next year, and then we start to see these systems doing very impressive things autonomously.
Okay. Agents. I would have said agents as well.
Yeah, well, I was going to say, what is your answer?
Agents. Yeah. That's a cheap way out. All right, so I think we've got time for one or two questions. The lady there in the middle, I think you were first.
Thank you very much. That was very, very interesting. And I'm Camilla from the Emerging Payments Association Asia. And especially thinking about this, what could be possible down the line. So we're talking here about innovation around tokenization and then AI. One is we don't know what's true, and with tokenization, this shared truth. We're not talking a lot about quantum computing, and one will make AI even more powerful, and the other one has the possibility of compromise. How much do you talk about quantum computing, and how much should we talk about it?
And I know you know something about quantum computing, right? Didn't you write a book on that?
It wasn't a good book. So yeah, I'm a lapsed quantum physicist. And so I guess one thing about quantum computing, scale matters, right? We just talked about this idea of like compute goes in, IQ points come out. So if you can find a source of compute that radically increases the inputs to that also accelerates the outputs. So I think one way to think of that is just as a wild card. Not all algorithms are quantum compatible. Not all algorithms can benefit from the quantum lift, but people have found ways to reverse engineer all the regular AI ones or a lot of them. So yeah, you ought to expect a big lift. When that happens, couldn't tell you, crystal ball territory, no idea. But a feedback loop is already forming, where AI systems are being used to help design better quantum computers. And this is true of classical computers too. So, and then those chips are being fed back in to accelerate our AI progress. I expect that loop to tighten more and more and more over time, whether it's classical, quantum, or both. So I think an unsatisfactory answer to your excellent question is wild card. Yeah.
Let me just add a little bit. I think while something may be possible doesn't make it true. And what I mean by that is there is already a gap between what is technically possible and the reality. And I don't see that converging necessarily to be one. I think we will always live in a scenario where there's going to be constant innovations happening in different fields that are beacons of things that could be, and we will choose of whether to elect or not. And so we will create decision points and deterministic actions that allow us to create the right levels of control, transparency, society within. And I think that will, particularly in the next chapter, I'm talking about what's coming, I think we will definitely see the speed of investment happening around the research on AI in particular is so vast, and quantum computing, that we're going to see more pressure in terms of that gap. But we will ultimately normalize into a place where we start to elect in and we have the frameworks around it. So I do think that both coexist. I don't think that we have to be at the forefront of technology to define where we are as a society.
Great. Other questions? Gentleman there.
Hi, my name is Leon Schumacher. I have another question around cybersecurity. We have many central banks that plan to launch offline payment systems. Now, full offline is mathematically impossible to secure. So when these things come out in 27, 28, how long do you guess that it will take AI to make them fall? Minutes, hours, days?
I'm so confident about this answer. Emily?
All you.
Well, maybe the one way of addressing this question is to think about kind of, you touched on some of the risks, like with misalignment, and we've heard of like misinformation and disinformation, things like that. So there are some very real, and using AIs to generate code, for example. I think you talked about some recent research where they used AI to exploit published security vulnerabilities, for example. So maybe one way of addressing that question is about how real is that at the moment, right? Using AI already to kind of try and identify and exploit vulnerabilities.
Yeah, and by the way, I mean, I'm not making light of the question. It's an amazing question, right? It's just, it goes to show, like, I don't know where the experts are, but they're somewhere hopefully on that issue. On cyber, I think this question of agents that we've talked about a few times and the task coherence length, that really is the key metric in so many things, cyber included, right? You think about penetrating any given system requires a large number of sequenced actions that are all coherent, all in pursuit of a single coherent end goal. How long it takes for those exploits to actually work will depend on the exploit, depend on the system, depend on almost everything. But I think by the time you get to asking about a specific system, probably, like usually it's the case that the systems that we think are most vulnerable turn out to actually be a little bit lower down in the priority order, and there are low-hanging fruit elsewhere that get picked off first. A lot of the sort of social engineering type attacks are looking really promising today, right? So you think about identity theft, people spoofing voices and all that sort of, we've already seen that work. That's going to roll out. I mean, I'm comfortable just putting my chips on this. That's going to roll out at a very significant scale over the coming months, but certainly years. So you think about like what you can do with access to kind of human capital and being able to manipulate people. I think that's like there's a whole salad of different options there. That's a terrible metaphor, but that get us to sort of concerning risk classes there. I think ultimately, early warning about early indications of penetration and coupled with pen testing and red teaming, those sorts of things, sort of become necessary. You need to take more of a defense in depth approach because the attack surface is so huge, right? And it's just impractical to expect to be able to cover all the bases.
I think one thing, Jeremy, you've said in the past is good AI for bad AI as well, which I think you kind of coined quite nicely. It's not as though we're equipped with the same capabilities and tools we were 10 years ago. And this is part of what we're saying. If people lean into it and use it in the right way, we can actually set ourselves up in a way that we are equally prepared to be able to analyze, to track, preempt where those things are, where those vulnerabilities may exist, and take action preemptively.
That's a great point, yeah. And that attack defense surface area also starts to matter a lot there too, right? Like, how much smarter does the attacking or defending AI have to be to neutralize each other? And that depends on the system, right? So you look at the world, it's this very large surface. You can do a lot of damage with a pretty dumb AI, right? So how large is your system? How many parts of it are not provably secure, right? These start to become the important ingredients that factor into your kind of defense strategy. Yeah.
We have to wrap up there. The big screen at the front is telling us we've run out of time. So thank you very much to both of my panelists for sharing your fascinating insights. Thank you.
Thank you, everyone. This is definitely a fascinating area, and we will have more sessions on AI throughout the day. Let's now see how the BIS Innovation Hub is experimenting with AI with a showcase on Project Gaia by Mr. Rafael Auer, head of the BIS Innovation Hub Eurosystem Center. The floor is yours.
Thank you, Gudrita. Hello, everyone. It's a great pleasure to present our green finance and artificial intelligence Project Gaia here. Gosh, we just had a great panel on AI horizons. I think everybody in this room would agree that AI will revolutionize the way we work. But how exactly? What part of my job will be performed by AI or an AI agent in 5 years? How will all of us interact with these tools? And how is that going to change the financial system and financial stability? I think, you know, when the first emails were exchanged in 1971, nobody could foresee how they would revolutionize how humans exchange information. And when the World Wide Web emerged in the 80s, nobody could have probably imagined a TikTok video going viral. So we're again standing in front of a technology that has a very bright but also very uncertain future. And the only way to sort of understand where it will take us is to work with it. And in this context, I'm proud to present this project, which is joint work by the BIS Innovation Hub, the Banco de España, the Bundesbank, and the European Central Bank. And what we do is we extract climate-related data from unstructured sources, PDFs, and sort of bring structure to the chaos of sustainability and ESG data. And this project is also testimony to the rapid change in this field. When we onboarded it 2 years ago, it was actually an extremely hard task to automate this information extraction and structuring. But during the project, large language models improved substantially, and that was really a game changer. So today, I can proudly tell you of a success story where we took a manual project that takes weeks or even months of work and automated it, ultimately resulting in an application that can perform this in 1 hour. So before presenting you sort of what we did in detail, let me actually take a step back and first tell you about the problem that we're tackling. Climate change presents a risk to financial institutions and to the financial system at large. But to model these risks, central banks and supervisory authorities and also industry analysts need high-quality data, and finding this data is difficult. Financial institutions already disclose such climate-related information in public corporate reports, but extracting this data is a very significant manual task. To be clear, the problem is not that the data is not there or it's secret. It is there. It just could be found in a multitude of reports, in tables, in graphs, in line, or even in footnotes. And due to a lack of reporting standards, relevant KPIs may be split across multiple reports and be presented completely different. So if you want to find one data point, maybe that's okay to sort of find it manually. But if you want to do a systematic analysis where you want to find data from hundreds or thousands of firms, multiple KPIs, and multiple years, that becomes a very, very tedious and long process. And with a manual approach, it's not possible. And we're changing this with Gaia to automate such extraction, build large data sets, and make analysis possible. So here's what we did in a nutshell. The vision of Project Gaia is to create an open web-based tool that helps analysts search corporate climate-related disclosures and extract the data, reducing the manual effort. on a very high level, this seems very easy, right? You collect PDFs, you build an extraction machine, and you store the KPIs, so then you can either use it for analysis or query the database for specific queries. In this country, what are the 5, like the banks with the 5 least carbon-intensive portfolios. But the problems are really in like making this work at a sort of reliably. And I think everybody in this room has hands-on experience with answers that read great but are simply not true, hallucinations. So when we started this in an early version, actually the LLM prompting engine came with an answer that it had found CO2 emissions for all banks in the sample, but somewhat surprisingly, every bank in every year had emitted exactly 35,000 tons of CO2. And we even then asked, oh, what is the source for that? And for all banks, the source was ESG_report.pdf. So not only did the LLM come up with an imaginary answer, it also had an imaginary source to it. And such hallucinations were eliminated thanks to prompting design. This involves many tasks. One layer is finding consistency, asking multiple times, and asking the same question in a variety of ways. But it also relates to loading up the right context. So keep in mind, right, the fundamental problem we're tackling is that there is a lack of global reporting standards. So we cannot just search for names. We need to first upload into the memory of the LLM the right context. We're looking for this type of information. And this type of information might be called X in this report, and it might be called different in another report, but it's underlying a human would understand this is the same, the same metric that we're looking for. So it's about human-level prompting combined with more traditional programming, looping over, finding different ways, and ultimately looking for consistency. And then there are many other prompting tricks that we sort of apply. They relate to these limited context windows where you know the LLM will not understand the entire report, so you need to go in layers and say, where could this information be? And now read these respective pages and extract that data. So there's really a large number of design choices that matter to get that right. And they're all described in the project report. And they, this prompting experience represents one of the major findings in the first phase of Project Gaia. So we've built a scalable platform that overcomes these challenges to apply large language models to text extraction. In a test data set, we used 200 banks, 5 years, and 20 KPIs. So that's 20,000 data points. Obviously, if you had one analyst looking for 20,000 data points, that's several months worth of work. Once it's all set up well, Gaia can perform this in 1 hour. And just to give you one example of, there's obviously a lot you can do with that data. Here I'm just showing you the dynamic growth of banks' participation in the green bond market. As early as 2018, we had around 60% of banks across the world issuing green bonds. Throughout the next 5 years, we've seen that number come up to around 90%. And we also see sort of a convergence across regions of the world because everybody is sort of now interested in this type of product. So it's this kind of, this is obviously a very simple case, but it's this kind of analysis that you can suddenly perform very easily where you start with 2,000 PDFs and you can, in 1 hour, go to this database and have all the information in a structured manner. So let me conclude here. Gaia opens up new possibilities in climate risk analysis, but it goes beyond that. So we've gained hands-on experience applying AI to automate manual processes. We've built knowledge around prompt engineering, around hallucination mitigation, and a lot of other aspects. And these are applicable in a very broad context. Thanks to the flexible design, the Gaia platform paves sort of the way for creating AI-enabled applications for central banks and the financial sector, addressing a host of regulatory and supervisory use cases. So for example, think about an AI-based application for supervisors who go and supervise a regional bank, but the AI already pre-fills all the forms based on sort of the context and also puts links to where it thinks that information comes from. That is a much faster way for a supervisor to actually find that information. And so then the supervisor can free the tasks for the deeper questioning of the bank or of the regulated institution, and sort of focus on more like sort of more productive issues, and the AI has done the easy part. And there could be many other use cases. I think that the big takeaway is that AI promises to fundamentally change the way we work in the future. And Gaia is one of the first comprehensive studies investigating how this can be done in practice. Moving forward, we can use this experience to address all these potential use cases. And I think you'll see a lot of them popping up over the next years. In the meantime, I want to direct you to sort of read our recently published report. You can scan the QR code here. And I'm thrilled to discuss all the potential applications during the lunch break just now. Thank you very much.
Thank you, Raphael. Now we will have a lunch buffet. We will reconvene in this room at 1 p.m. sharp. Enjoy the lunch. Hope you enjoyed the lunch. If you are wondering whether you should stay or you should go, you made the right decision to come back to the room. Our next conversation is exactly about this dilemma, but in the context of generative AI in central banks and financial firms. Let me welcome on stage Mr. Rafael Auer, head of the BIS Innovation Hub Eurosystem Center, to moderate the discussion.
Hello, everyone. Welcome back. We already heard the title. It's a great honor to be on this panel and moderate it. Generative artificial intelligence in central banks and financial firms. Should I stay or should I go? It could be the fastest panel ever in the history of the Innovation Summit. Or we could see the title as an interpretation that, you know, even if you go AI, it's gonna be a voyage, right? We don't know where it brings us. We're still trying to wrap our mind around it. And in terms of the voyage of today, we had Chris and his co-panelists. You sort of had a horizon session, far out there. Where could this end? Then I presented Gaia, one use case. Beju, my Nordic peer, will present a very interesting use case after this session. So we see some use cases. But more broadly, where can we sort of really see the near case adoption of artificial intelligence in the financial sector? And I think that's the key question, what does it take in terms of organization, in terms of strategy, and in terms of people to adopt it in a sensible manner? The industry and regulators are rapidly advancing their understanding of this, and we'll find out the use cases that will prevail. So we today have the great privilege to have two distinguished speakers who are leading the change in the world of data science and artificial intelligence, both in central banking and in industry. First up, we have Mariam Hagigi. She's the Director of Enterprise Data Science and Insights at Bank of Canada, where she also heads the Data Science Hub that she built from scratch. Mariam has a knack for delivering innovative solutions at the intersection of data, digital transformation, emerging tech, and risk management. And before she started at Bank of Canada, she led the development of a space-based data analytics for a new satellite constellation and represented Canada in the International Advisory Group for Air Navigation Risk Management under the UN. So thanks for being here today. It's a great honor. We also have Edward John Achter. He's EJ, who heads up HSBC's Office of Applied Artificial Intelligence. And he's all about developing cutting-edge, responsible, and ethical AI solutions, particularly in the realms of generative AI and large language models, to enhance various divisions of the bank. Also, a warm welcome and thanks for accepting our invitations. He also had a very distinguished career before going to HSBCs, but he asked me to shorten that because he focuses on the now. I'm excited to hear their insights today. We have another amazing capital in this room today, and that's certainly you, the audience. So we really want to profit from that. We'll have 2 quick rounds of questions with the panelists, and then we ask you, have your questions ready? We really want to have a little bit of time for a discussion here. But let me start with Mariam. Generative AI is evolving at an extremely fast pace, with new breakthroughs being announced all the time by a technology industry undergoing significant upheaval. Generally, how can central banks balance the risk of being left behind with the need to project and maintain stability? Miriam, the floor is all yours.
Thank you very much, Rafael. And let me start by thanking the BIS and all the organizers for such a fantastic summit. And a huge congratulations to Cecilia and her team of the BIS Innovation Hub. You've heard from all the fantastic projects at the centers. Aren't they simply amazing? So thank you. This has been really, really exciting. And I would also like to acknowledge that the views expressed here are my own, and they do not necessarily represent the views of the Governing Council of the Bank of Canada. Now, to your question, Raphael. So let's get something right out here, that AI is not new. We are talking about that today, but in fact, I'm going to start with a little bit of history on this topic around AI, because I sincerely believe that history matters, okay? So in the 1930s, there was this thing called mechanical brain that actually won a prize at this convention in Paris. And then in the 50s, you had all the work of the likes of Alan Turing and the famous Dartmouth Summer Project on artificial intelligence, when they actually envisioned all of that we're discussing today, okay? So this is not new. You might think even language models are new. That's not new at all. In fact, I did my postdoctoral fellowship under the supervision of Professor Sankoff, and he in the 60s and 70s worked on developing probabilistic models around vocabularies and language and semantics, which is what we're talking about language models. You fast forward in the 80s, 90s, you have the work of Yoshua Bengio and his cohort developing convolutional neural net, okay? And the work around generative adversarial network, which, by the way, they lent their name to generative AI, okay? In the early 2000s, we were teaching these at universities. In fact, I distinctly remember teaching these to my university students, and somebody in the audience would always put their hand up and say, when are we gonna ever use these things, right? And I'm afraid to say at the time, in early 2000, I didn't have a good answer for them other than saying, well, you gotta listen to me to pass your course. But here we are, okay? They have become reality. What happened in the meantime is the advances in hardware, in chips. You heard that in the previous panel before lunch. You also have the massive volume of data collected from the internet. And you combine these with the algorithms from artificial intelligence, and you have the revolution that we have today now. And I genuinely believe that at the financial industry, we're at the cusp of a transformation, and central banks are a key part of that. And it's not just AI. I know this panel is around generative AI, but it's really confluence of multiple trends coming together. You have mobility. You all have your cell phones. You have the internet, you have satellite-based internet, that was my previous career. You have all the advances happening in user-centric development with the help of AI. You have cameras, you have audios, you have videos, and most importantly, the global appetite for all of this, for using all of this. So yes, as central banks, financial stability is core to our mandates. And we want to balance that with leveraging innovation. And in fact, at the Bank of Canada, we have AI pipelines that have been operational for years. And I'll talk later on about that. But it's doable. And I believe this is the path forward for us to go.
Thanks, Miriam. Let's also, before we dig a bit deeper into what we're actually doing, let's collect an industry perspective. Financial firms obviously also have been investigating AI for years. Data analytics, machine learning is not new, but again, this time is a bit different. What specifically is different about generative AI, and how big of an impact do you expect it to have on the financial sector in the next 2-3 years?
Sure. I love the question because it allows me to answer a different question. And before I do that, I again want to thank and express to the bank for having us here. And I also want to congratulate Emily and Jeremy for an exemplary panel beforehand. I'm not going to layer on a lot of what they said. I do want you to keep their conversation with you top of mind. And that needs to be at the forefront and build upon what we're seeing here. So it's really about those things coming together. And I'm going to do my best to kind of fill in some of the white space. Now, what I think is fundamentally different here. And let's just do this in a non-scientific, non-empirical kind of study right now. Raise your hand if in the last 30 days you've either heard of or used ChatGPT at least twice. Just raise your hand. Okay. That's called product market fit. Okay. Judgments aside as to whether you enjoyed it or used it, I asked you, had you heard about it and had you used it at least twice? Okay, and for those of you who weren't looking behind you, a predominance in the room raised their hand. Okay, so when we think about why is it different now, you know, the history is extremely important because it has brought us to this moment. And the question of should we stay or should we go is the wrong question. We don't have a choice. It's here. It's not going away. Okay? Now, there's an open debate as to what it is, but at the end of the day, you have just proven the point of something known as product market fit. Now, what do I mean by that? Okay? At the end of the day, if you're developing a product, a capability, or a service, and we're going to get to kind of use cases and viability in a moment, you have to solve for a problem. Okay? You have to figure out how to solve that problem within, you know, what is both legally viable, okay, viable from a technological perspective, and also from a societal norm perspective. And that's a very, very kind of complex set of ingredients. You know, it's hard enough to do in one market or geography, and now extrapolate that to 5, 10, 50, 20, or in our case, 62 geographies. Okay? So this is a very, very dynamic space. So you really need to think about, okay, your approach to this, because you have just all proven the point that something's different now. Okay? Decades ago, the precursors of this existed. But if we were in a similar room, you know, going back to 2014, 2004, 1984, many of you may have heard of some of these kind of frontier technologies. A fraction of you would have raised your hand because they have had very little real-world accessibility to the end user, you all being the end users, and whatever kind of stakeholder or whatever kind of context that is. So it's different now because it's quite literally in the palm of your hands, quite literally. So what do we do about it? How do we have to think about this? Okay. Now, for fear of antagonizing my consultancy friends in the audience, okay, there do not exist enough sticky notes to go through design thinking exercises to get down to singular use cases. Okay? We have to think very differently about this. We have to think about risk frameworks and risk patterns because our customers, your stakeholders, do not have an expectation of solving for 1, 2, or 3 things. This is going to be a universal capability and a universal technology, both at the surface level, i.e. you're interacting with it every day, but also in the subsurface level. And that's what, again, Emily and Jeremy were talking about before, the rise of these, you know, digital agents who, in a given state of empowerment and alignment, are doing things potentially on your behalf. That's not far away. There will be many of you in the room this year that have digital agents working on your behalf this year, perhaps in your personal financial life. You know, that is a 2024 reality. So the question again of do we stay or do we go, it's here. The question of what are we doing about it specifically, we need to solve for questions at scale, ultimately to achieve responsible and ethical product market fit. Is it technologically viable? Does it pass, you know, a set of really complex questions related to societal norms? Does it fundamentally solve someone's problem? Will they find value in it, whether in the retail or wholesale sense? And ultimately, can it scale? And that is going to be an ongoing dialogue that all of us have to have together.
Thanks very much for this sort of initial first step into the matter. Reacting on 2 things you said. During 2024, and have used ChatGPT, it's a bit of a shout out to the BIS actually. At BIS, we can now ask a different question. Have you been using BIS GPT in the last I don't know, 3 or 4 weeks since it's open. I apologize if I forgot about the exact date. So, and it obviously comes from a risk understanding, right? That having people use an external cloud is something that you need to be careful. And then, a quite rapid response to sort of, have our own project, and that's now accessible to all BIS staff, and it's a great project. But that's just the start, right? I mean, at the BIS, we're obviously thinking about a lot of things we could be doing, from economics to the innovation hub to any production system where and that is a consideration that's really probably featuring in any central bank around the world. Maria, what is the Bank of Canada doing in this domain at the moment?
Yeah, so I'm going to say a couple of reflection points on what EJ mentioned, which was very good points about this universality, I guess, of AI. Or for the economists in the audience, they might refer to that as AI being a GPT, not the chat GPT, but GPT as general purpose technology, like electricity, like the combustion engine, like the internet itself, where it has effect on multiple industries, significant shift in labor, and effect on productivity. And that is what we are facing today with AI, what we are sensing, and I genuinely believe is going to continue and grow. So at the Bank of Canada, I mentioned that we have AI pipelines in operation, and all of that is really for the benefits of our citizens. We have taken, I guess, what I would call a Goldilocks approach, where we want to balance the desire, the need for innovation with responsible development, okay? So, and we look very critically at how AI supports our core business in economic policy, operations, and research. So I give you a few examples. So we have a full at-scale operational pipeline around AI for anomaly detection. So as a central bank, as I'm sure many of you are familiar with, we receive a ton of data from chartered banks, from the industry, from banks like the HSBC and beyond. So these data submissions come to central banks, and they form the foundation of many of our analysis for monetary policy, for financial stability, for climate analysis, for financial market work, you name it. And sometimes in these data sets, there are anomalies. Anomalies can be errors, simple just recording errors, or they could be signs of a change and shift in patterns that we want to detect. Traditionally, we used to always do this anomaly detection. It used to be very much rule-based and with a lot of human work involved, and it's very label-intensive, and it was very much audit-based. We would only be able to assess a few points in each submissions that we get. It was impossible to go to the millions of records. However, with AI, I'm very happy to say that we have a full pipeline developed around anomaly detection that on a daily basis goes through all the submissions, and when our people come to their work in the morning, the result is there at their desk, and then they can dig deeper and analyze the insights. So that's just one example. We have other lines of work around nowcasting with payments data. And that actually came very handy during COVID, where access to timely insight, granular insight, heterogeneous insight was critical for policy work with central banks. So that came into work. Machine learning analysis for supply chain, that again in COVID became absolutely critical to analyze that. We worked with our colleagues in our cybersecurity team to develop AI techniques to help them with their work, which is quite an interesting area because considering the change in work and remote work environment and the landscape for cyber has changed. So at the Bank of Canada, we have, you mentioned earlier with developing our data science hub, so we have this hub and spoke model for our work where we have a central team that does a lot of enterprise-wide work, and also enabling our various departments. And different departments have their own specific business and experts that focus on data science and AI. So we have this hub and spoke model. It's quite a vibrant environment. And we also have a ton of public-private type partnerships. We have a program called Pivot, Partnerships in Innovation and Technology. And we've recently done several partnerships with academics around developing AI models for our work. So that's another active line. And we work with central banks and BIS Innovation Hub with the new center, Miguel, Balta, and their colleagues, just somewhere in the audience, with the London Center with Francesca and John. It's just to learn from each other's experiences and also develop training for our staff. That's another key component for that. And final point being that I mentioned earlier, we want to do all of this responsibly. And we want to have a risk management approach, and EJ alluded to that earlier. So because of the risks around AI, risk around privacy, misinformation, hallucinations, you heard about that earlier. You discussed that yourself, Rafael. Also, needs around explainability, interpretability of AI models. Because of all of these unique features, and because of the ever-changing landscape or conversation around these and all the laws that are being developed, so we formed a multi-departmental advisory committee at the Bank of Canada, call it Responsible AI Advisory Committee. And we have senior leadership from our legal department, from our audit, from our communication department, from IT, data, business lines, et cetera, all coming together to discuss the priorities with respect to risk management of AI. And that committee is actually now developing the risk management framework based on our risk appetite. It's a principle-based risk management framework for AI for the bank. And that is something that I think is going to show its benefits going forward as well, to allow us to hit that balance between developing innovative solutions, having AI pilots, making them scalable, at the same time managing the risk.
Thanks. Wow, that's a broad remit, and it's very exciting. I see merit in a lot of these things. I personally, I'm very excited about sort of the ability of AI to prepare information in a rapid manner so that human can see changes in the data faster. I think that's right. And we can surely all think back just a few years, right? Inflation, is it transitory, permanent? I think, faster data helps there. Or if we then think back a couple of more years, GFC, I'm sure, there were signals in the data. It just took us quite long to see them, and maybe AI can help. But there's one thing that you referred to that actually in our prep call, EJ kept emphasizing. That was the word training. And obviously, right, there is a private sector risk. So EJ, where do you sort of see the opportunities? Where do you see the risks? And most importantly, how do we harness these opportunities, prepare for the risks, in particular when it comes to the human capital side?
Okay, great question. So the purpose of why we formed the Office of Applied AI was threefold. So one, building production grade, and that's really important, I'm going to come back to that in a moment, production grade AI and generative AI products responsibly and ethically. Two, how do you scale them across our global footprint in terms of our business and operational units? And three, the most important ingredient of all, which we're going to get to, and we need to speak more and more and more about this, is the human side, the workforce kind of transformation side. That is critical. Now, when you take a step back, okay, you have a range of activities, both public and private side, institutional, but fundamentally it breaks down to three things. You do some experimentation and a proof of concept because you have a hypothesis that something may or may not work, okay? More often than not, it doesn't, and that's okay. That's what innovation is supposed to prove out. If it meets certain success measures, I'm going to come back to the people piece in a moment, okay, you're going to go into a pilot. You're going to test, you're going to learn, you might use real data, you'll interact with real customers, you'll truly get feedback. And then ultimately, it's your production grade products and capabilities that you integrate and embed, okay, with your operational processes, with your customer journeys, with your staff meetings. It becomes part of the fabric, okay, of your operational and organizational design. Now, across all that are your people, okay? And there's a really big difference, you know, when it comes to AI and generative AI capabilities, okay? And the answer is going to be a very unhelpful, it depends, because a lot of the stuff that you do on that leading edge, that leading horizon kind of, it will not see the light of day. Maybe it's not technologically viable now. Maybe it's not within your risk appetite. Maybe it just doesn't, you know, it's just not ready to scale and create value. Or maybe you don't have the right data. And again, the prior panel talked about the importance of data. I don't want to double click on that here. Again, I want you to keep that top of mind because that's really important. Now, when it comes to your people, okay, whether it's POC, whether it's a pilot or production, the common denominator here is your people. And what do I mean by that? Okay? If you're going to create a product or service, whether for your internal stakeholders or your external kind of customers, your people are that common denominator to use those products both ethically and effectively. Okay? From an ethical perspective, anything that you build and do, it has to stand the test to make sure that it meets your risk appetite. From an effectiveness point of view, are you creating value? Is your P&L being positively impacted? Are your customers more delighted today than they were yesterday? And if not, why not? And in order to do that, you have to have an effective and skilled workforce, which means that it's based. They need to understand how AI and generative AI work. Now, whether you're a product team, whether you're a risk steward, whether you're customer facing, all of those personas in that ecosystem, particularly when it comes to financial services, they all have to come together because they all need to be equally informed. So whether it's because, and I've said this on prior panels, whether or not your motivation is, you know, the law, always a good motivation, whether or not your motivation is the highest and best use of your employees to get the most out of them, because talent, you know, is really important to make sure that your talent stays with you and that you attract great talent. So you want to do everything you can to make sure that you make the most of that talent. Or whether your motivation is creating a great product that creates delight and value for customers, doesn't matter what your starting point is. It all comes back to an effective, informed, and educated workforce. And so the things that we've had to do to put that in place, going back a number of years, but now increasingly, is, you know, create both the push and the pull in terms of training, but also the motivation, a little bit of FOMO, a little bit of engagement, all those ingredients kind of coming together, and people are very proud of this. And the interesting thing, when we will inevitably get the question of what does this mean for workforce displacement, okay, and it's a legitimate question to ask. If you bring your people to the technology, okay, if you excite and engage them around how this can make a positive difference in their personal and professional life, they will jump at the opportunity to educate themselves, to become the better version of themselves so that they can be more productive. As long as you open that up in a way that's inclusive, that drives diversity, that drives all those things, you will be remarkably surprised at how engaged your workforce is. And at the heart of that is making sure, you know, that you connect the technology to the necessary education.
Thanks a lot. Connecting technology, connecting these discussions, we wanted to go back to our starting premise. The BIS Innovation Summit has this unique flavor that it brings together the policy world and the industry world on technology. So at this stage, we want to open it up to the audience. Please, we've seen like two really interesting perspectives. What are the use cases? What is the range of projects? What is the risk framework? And what does it take to make people stay? Which also explains the title of this discussion. Do we have a, oh, sorry. I think that the mic is already there, and then we'll go there.
Oh, sorry. You'll get it next, I promise. So I had a question just around
can you speak to the tension between the data requirements or the potential expansive data requirements for AI to effectively train and produce accurate models, and maybe the necessity of privacy, specifically within the financial context? And do you see any potential supplemental technologies like MPC or something to maintain that privacy for participants to share some level of data without actually revealing underlying pieces of information?
Sorry?
Sure, I'll start that. So maintaining privacy is absolutely fundamental. That is the North Star when we develop any AI model, or quite frankly, any model, AI or not, that leverages data. Now, of course, for central banks, the conversation has a different lens, different angle from the industry. So I will give our perspective, and then you'll hear from EJ about the industry perspective. So for us, it depends on the data set, and it depends on what category of sensitivity that data set is categorized at. So some are, of course, less sensitive, some are more sensitive. You have access management control around that. And then you have a range of possibilities with technology, be it cloud-based, all the way down to on-prem access to develop and leverage for your models. You also have complementary technologies around privacy enhancement technologies. So, things like confidential computing, differential privacy, homomorphic encryption, et cetera, which we have experimented with. So far, those techniques are a little bit further behind in terms of their computational capabilities that we need them to be at. However, the opportunities are still there to develop these techniques, test with AI models and large language models and Gen AI, suitable to the classification of data. And it goes back to the risk management. So you have to start with your data. You have to start with the classification of your data. You have to start with the business question of saying, what data set do I have? What do I need to do with it? And then take it from there rather than jumping ahead. So those are the steps that we follow for us.
So let's stipulate that the data is good, and that's a huge stipulation, okay? But let's at least stipulate it for the purpose of this question. So then the privacy part. So, I'm not going to ask by a show of hands, but I'm venturing many of you in one capacity or another may be a customer or, in some respects, have worked with HSBC directly or indirectly. And we take that, extremely seriously in terms of the stewardship of that data. Now, this is when I was talking about the difference between a proof of concept to a pilot to production. If something is going to be anywhere in that continuum, it has to first be demonstrated that it can be done safely and responsibly. Now, by safely, you can imagine, this is not just a technological question, it's also a question of, data privacy, a question of regulation. And just to kind of bring that to life, your average corporate wholesale client may bank with you in 5, 10, 50, 20, 40, 50 different markets around the world. So as you're bringing forward an AI or generative AI, or candidly, any application, this is not an AI question, this is a data question, okay? Where does the data go? How does it flow? How does it use? And does it compart with that kind of very complex tapestry, of where it's being used, stored, and sent, and for what purpose? So it's a great question in the context of AI, but at the heart of it, it's about data privacy. The last thing I will say, on this, in terms of kind of connecting that to actual value, there's a fundamental difference, okay, between having a data set which you use to interrogate policies or procedures, which might be just kind of internal inquiries for a knowledge worker, versus extremely high velocity, markets level data. Those are completely at the different ends of kind of the complexity continuum. They have very different requirements in terms of quality. They have very different types of requirements in terms of, you asked the question around like model governance and model assurance. The level of necessity from a control framework perspective to do those things are not the same. Okay? So the entry point to be able to kind of productionize a number of these things is very much also going to be a function of what can you actually do from your control framework to demonstrate model risk compliance. And that will really then kind of inform where you go, how quickly, and for what purposes. And that ultimately is a function of both your automated and your human control frameworks that wraps around that entire application. It's a really good question.
Thank you.
Thank you. I'm Chris Globia from the MIT Digital Currency Initiative. Central banks, financial institutions, and regulators have literally hundreds of years of experience gathering structured data, so financial information, collating it, analyzing it, and so on. What are we learning today about the kinds of unstructured data that we need to be collecting to feed generative AI models?
Okay, so really good question. I will connect this with something that we are trying with generative AI at the Bank of Canada, and that is around communication. So it goes back to what I always like to say, stories matter, okay? And policymakers and central banks are essentially telling a story when they're communicating their policy. They're telling a story of the current economic state, and they're telling a story of where the future may be, okay? And in that communication, it's critical to know how that message is received, okay? My background is technology and math, but I've learned that communication is absolutely by far the trickiest thing any organization has to do, whether within internal or with the public. And as central bankers, we deal with money, we deal with currency, but our own currency is trust. So you send a message out, you want to know how it's received. You look at text data as an example, social media data, commentaries on videos, audios, etc. You want to collect that and you want to analyze that. Generative AI is incredibly great at letting us do that kind of analysis of unstructured data to see how those stories are received. What is the story out there in the economy, where things are heading to, so that not necessarily structured data, but unstructured data, and then bring that in, and then turn that into usable formats that then you can join with structured data. And that is, I think, where the hard work is at. Because you get this unstructured data, often micro data, and then you have the structured macro level data coming from your national statistical agencies. And you want to make sure these align and that there are no gaps. And you want to make sure that you really understand the interdependencies of these. There is also, related to storytelling, there is also the story of AI that we want to say, which is what we are here for, but that's topic for another question.
Briefly, I'm extremely excited about that possibility of how structured and unstructured data can be fused together to address and deliver value across a range of outcomes. That said, it's not yet ready, again, for production grade most applications, because with unstructured data comes both the promise and the peril of the complexities of having to manage that across mitigation of bias, traceability, explainability. And so while there are glimpses of that possibility, and ultimately what we'll see is probably a range of different models, large and small, open source. And we're not talking enough about open source, by the way. I hope there's a There's another panel conversation for a different day on kind of the importance to all of us around open source, which kind of brings to this as well. But ultimately, do I think that that fusion of structured and unstructured will create value? Yes. Is it ready for prime time? No. Is it going to take all of us to kind of get that right? Yes. You know, and it's going to, again, be a journey based upon what is the specific application, and fundamentally, how can you measure, not guess, how can you ultimately measure, you know, how that data is kind of coming together, and does it adhere to your expected laws, regulations, risk appetite, and societal norms, so that ultimately you're comfortable with how that is, again, coming together for, you know, an outcome or an output, you know, that yields expected value. Great question.
Thank you. So we're unfortunately out of time for further questions. This was an amazing panel. 40 minutes have flown by. If I wanted to summarize it, I think I can summarize it very shortly. We're talking about artificial intelligence, but somewhat paradoxically, the answer is still, it's about the people, it's about the skills of these people, and it's about how these people can work together in a framework that allows them to collaborate, trust each other, and use these tools effectively and mitigating the risk. And of course, so it's about the people. That brings me back to the panelists. I really want to thank you for these great interventions, and also to the audience for the good questions and the discussion. Thank you very much.
Thank you for this exciting conversation. Now let's move to the last project showcase of the day. Let me invite on stage Mr. Beju Shah, head of the BIS Innovation Hub Nordic Center, who will present Project Aurora. Beju, the floor is yours.
Thank you. So good afternoon, everyone. It's a privilege for me to be here today and share this with all of you, both in person and for those of you online. Money laundering is amongst the most difficult financial crime activities to detect, presenting a complex and ever-changing data challenge. Its impact is far-reaching and not just restricted to the financial sector, but affecting society as a whole, fueling corruption, organized crime, and terrorism, as well as distorting markets and undermining trust in the integrity of the financial system. It's a global problem and a costly one, and I just want to spend a couple of minutes just putting this into perspective before we get into the project. It's estimated to represent 2 to 5% of global GDP, so approximately $2 to $5 trillion. But despite global efforts to combat money laundering, it's estimated that only 1% of illegal proceeds are seized by authorities, so approximately 20 to 50 billion. Yet the cost of financial crime compliance reached $274 billion in 2022, and that's up 28% just from 2020. Now, this is all made increasingly complex by an expanding digital landscape. And just in the last 12 months alone, there's been a 20% increase in financial crimes involving digital technologies and AI in the EMEA region. To further compound this, filing volumes of suspicious activity reports continue to increase year on year. And for example, there was a 57% increase between 2019 and 2020 just in the US alone, creating additional costs of resource burdens and also financial institutions and authorities. Now, defensive over-reporting is one source of this, but there are other issues that this causes. Higher penalties and the risk of sanctions sometimes outweigh the cost of retaining certain customers, who are then de-risked through account closures or refuse the ability to open accounts, which then contributes to financial exclusion, as well as having an impact on correspondent banking. This is because financial institutions stand at the front lines and bear most of the responsibility for preventing and detecting suspicious activities. But they face challenges. the data and systems are often siloed, and they're unable to share information with other institutions. But criminals, on the other hand, typically operate in networks and use complex layering techniques and creative methods to move and hide money across different institutions and countries. But the technology and data that we have access to today, like AI and privacy technologies, could be used in better combating money laundering across institutions and borders. Project Aurora does exactly this and investigates how the latest technologies can be applied to this problem. And in phase 1, we tested a combination of technologies that were identified in the Financial Action Task Force's work on digital transformation, of AML and CFT efforts. And those included us testing AI, machine learning, federated learning, privacy technologies, and network analysis. We began by creating a synthetic data set representing cross-border transactions with money laundering activities, such as money muling, and these are very hard to detect activities, embedded in the data. On the left, you'll see an example of the patterns representing these suspicious activities in the data. And in the right, you'll see an example of a one-day transaction network across several countries, with the red dots and lines indicating those suspicious activities. This data set then allowed us to compare siloed, national, and cross-border analysis of payments transaction data for money laundering activities. Now, you can see from these results that AI and machine learning can be much more effective than rules-based methods, even when working in silos. And is optimal, as you can see from the yellow, when you're using the broadest set of data, i.e. at a cross-border level. And using graph neural networks helped us detect, on average, 3 times more money laundering, whilst also reducing false positives by up to 80%. These results are promising, but in order to share certain information between public and private collaborators in combating financial crime, the protection of privacy and sensitive information is critical. And in AML efforts, it's a tricky balancing act between legal compliance, protecting individual rights, and privacy. Expanded use of data can catalyze innovation, but carries both tremendous opportunity and risk. And we've heard from Mariam earlier around actually how critical the use of privacy and privacy technologies in AI efforts can be. And this is where privacy technologies can really help, and are becoming increasingly important, particularly in an AI world. So allow me just to talk about this for a minute. Privacy technologies can protect users' personal data from unauthorized access and misuse, and could also enable the safe, ethical, and effective use of that data. They could also help with compliance with data protection regulations, and could provide organizations other means to secure data and minimize potential breaches. They could also help organizations and nations to collaborate without actually sharing the data itself. And we know that there's been some great work being done between the UK and US on that through a PT challenge. And this is particularly critical in fields where sharing sensitive data could lead to important innovation, but come with privacy and data sovereignty challenges. It's also important to remember that privacy technologies are still evolving and therefore come with a number of trade-offs, come with limitations that need to be better understood and ultimately overcome. Back to the project. In the next part of the project, we tested the application of privacy technologies before reapplying machine learning and network analysis over the data to see if the same results could be maintained. And the reason we tested privacy technologies in this part is because they're an enabler for information sharing and collaborative analysis arrangements. So this allowed us to compare centralized and decentralized approaches to information sharing and collaborative analysis approaches, all the way from centralized national views to decentralized ones through to cross-border approaches. Now, as I've clicked through, and what you can see as I've clicked through is that more money laundering is detected when the broadest set of data is analyzed. And here what you can see is actually how much of different types of networks and patterns that you can see through each of those stages. Combining AI, machine learning, and privacy technologies could be a game changer in AML efforts. And in this last part of the project, the threefold increase in the detection of money laundering and the 80% reduction of false positives achieved in the previous step were maintained, and sensitive information was protected. The results are promising, and some of the key findings coming out of that work were that analyzing payments data at a national or international level is optimal. However, discussions to surface key challenges that would need to be addressed, and also deeper technical research are necessary. Real-world technical proving is essential, and public-private sector collaboration is absolutely crucial. A digital world requires a different approach to AML efforts. So with that in mind, I'm excited to share with you a bit more about phase 2 of Project Aurora, which at a high level aims to do the following. We're going to convene and collaborate with a global community of experts and interested parties. But as I mentioned, we need to carry out various research and some practical work. And that will focus on things like data, where there's a number of issues to explore, from entity identification, entity resolution, what ISO 20082 can and can't do, where there's data gaps and other standards that would be required. But also, in a world where the identities of people and organizations can be falsified using AI, complicating AML efforts, we need to be able to trust and verify the real and valid identities, and therefore trust frameworks and verification methods would be essential. And it goes without saying that the project will have a strong focus on privacy and develop a deeper understanding into how different privacy-enhancing technologies, preserving technologies can be used and applied, but also their limitations, and also to discuss some information security considerations. But we also need to discuss ethics and responsible use of AI and the risks. And in the context of looking into what might be involved setting up these information sharing and collaborative analysis arrangements, we need to understand some of the technical and operational considerations, as well as the legal and regulatory considerations. Now, all of that will feed into an incremental series of technical work that we will do with public and private stakeholders, with the intention of identifying key challenges, running some technical tests and proving these things out, assessing the results, determining feasibility and value, and these technical tests will scale over time, and then deciding on any next steps before we do anything further. And just to finish off, just to say that we are at the beginning of a complex and very ambitious journey. This isn't going to be easy. We have to keep moving forward, though. And so we really want your help. We want to hear from experts and interested parties. Please come and talk to us. And remember, it takes a network to defeat a network. Thank you.
Thank you, Bejo. It is my pleasure to introduce now the next fireside chat on ensuring fairness and addressing potential implicit bias in AI-based supervisory activities. Please join me in welcoming Mr. Morten Bech, head of the BIS Innovation Hub Swiss Center, to moderate the session.
Thank you. Welcome to this fireside chat on, as Kuruda mentioned, on ensuring fairness and addressing potential implicit bias in AI-based activities. I guess this panel is really about the dark side of AI. So increasingly, banks and their supervisors are using AI to be more efficient. AI tools are already delivering tangible benefits and hold promise for more, as discussed in the previous presentation, and for example, Gaia and Aurora. However, the use of these technology also poses significant challenges, in particular, the potential for, as we will discuss, implicit bias that could undermine fairness and integrity. So AI bias occurs when the decisions are based on either skewed algorithm or biased input data. And this leads to outcomes that discriminate either against people or institutions. And these biases can manifest itself in many different ways. It can be around approvals, risk assessments, compliance checks, and enforcement. And as we will hear from the speaker, there's a growing focus on research in this area to make sure that AI tools are safe and equitable. So this fireside chat will focus on three things. What are AI-induced biases? How can we mitigate them, if at all? And are there any recommendation or easy wins for both banks and supervisors? I believe that it was Albert Einstein that said that insanity is doing the same thing over and over again and expecting different results. I think that really captures my experience with ChatGPT. So I'm certainly not an expert in this area, but luckily we have two people that are, so let me introduce them in turn. So Melissa Koide is the CEO of FinReg Lab, a non-profit research center that seeks to drive the financial sector towards a responsible and inclusive financial marketplace. No small task, I might add. And in her previous role, she served as Deputy Assistant Secretary for Consumer Policy at the US Treasury. And then we have Lukasz Kubicki, who is the head of Supervisory Technology Section at the ECB. He leads the innovation strategy and has implemented several AI tools. He also serves, and this is very important, as the co-chair of the SupTech RegTech network of the BIS Innovation Network. So welcome to you both. The format of this chat will be as the other ones. We'll do a couple of rounds of questions, and then we'll open it up for the entire audience. So without any further ado, let me go to you first, Lukasz. The ECB has been at the forefront of adopting cutting-edge technologies to enhance banking supervision. Could you tell us about your experience with AI and what bias means in your context?
Good afternoon, everyone, and many thanks, Morten, for your great introduction. And I'm happy that we are starting with the bright side, and then we go to the dark side, that you said. So indeed, at the ECB, quite an early stage, we recognize the need to embrace digital innovation and advanced technologies like artificial intelligence. It was at the end of 2020 when we put in place ambitious digital agenda and invested into the portfolio of supervisory technologies tool called SupTech. And we did this because it was not nice to have it, but we believe it was a necessity for us to remain relevant, to remain effective and efficient as banking supervisor. Today, after 3.5 years of work, we have 14 SupTech applications up and running, being deployed across ECB, but also national supervisors in the SSM. And they bring new capabilities in terms of analytics and support supervisors in their day-to-day work. And maybe let me give maybe one or two examples, starting with maybe with Heimdall as the Nordic god. And we had a presentation from the Nordic Center. So at the ECB, we are in charge of fit and proper assessments of future board members of financial institutions. And as part of that process, banks submit to us questionnaires with details about the candidates, with a number of attachments. They come often in different languages, in different formats, and they have to be analyzed thoroughly by supervisors. It's a massive process. We have more than 1,000 of these every year. And we introduce a platform, Heimdall, that does the first screening and show us the red flags where the attention of supervisors should be paid. So artificial intelligence here is not making any decision, but is alerting us and allow us to go more thoroughly into the specific cases. We talk about unstructured data, and a great question, the structured data, and certainly this is also one of the challenge we face in banking supervision. As part of our process, we need to analyze news articles. We need to analyze all the reports banks submit to us. We have also a lot of internal documents. And yeah, it's really time consuming to go through that. We are sometimes flooded by the banks. I think they do it on purpose, by the banks with information. And we have introduced Athena platform, another Greek god, that help us to analyze all that unstructured information. So for example, with one click, supervisor is able to get information, what are the key risks on the specific institution, or what are the emerging topics coming in the news related to credit risks and so on. And what is good about that platform, for example, is that it's modular. So we're implementing new bricks, now building, for instance, capabilities to read the social media that will further enhance our capabilities. And coming back to the dark side, so the biases. I think it's important to maybe decode and demystify that concept. The biases we are all biased. Our opinions are biased, and bias is very natural to human being. In the same way, it is also for the artificial intelligence. So all modern artificial intelligence is based on machine learning, and the machine learning is based on pattern recognition and data. And if in their underlying data there are biases, these biases will be replicated in the outcome of the models. And we have to be, of course, aware of that, and then we have to introduce the measures to deal with this. Let me give you maybe the specific examples, maybe related also to the cases that I was saying. So if we have a model that has been trained on data with bias, and that model is producing summaries, these summaries may not be accurate because they will replicate that was in the data. In our context, what is also important is, for instance, language bias. As we deal with many languages at the European Central Bank, if the model was trained on a certain language, then the results related to analyzing documents in other languages may not also be accurate. And I think this is very important to be mindful of that and not take this for granted. And there are, maybe let me mention maybe briefly a few measures that we are implementing when training the models and when using the artificial intelligence with these models. So first of all, it's about selecting the proper data sets, making sure that it's wide and comprehensive. Second, it is about validating the models before they go into the production and putting this really having a robust process for that, involving the end users and that are able to assess the results. And third, and I think this is the most important, keep the human in the loop in the entire process. It should never be the machine, AI, giving the last judgment or making the decision. Human must be there and and looking at your entire process in the organization in the way that human is in the center of decision making.
Thank you, Lucas. Thank you for those insights. If I can turn to you, Melissa. So where do you see the financial industry is in terms of AI? What is being used, and how do you see bias in that context? Do you have some good examples? And how does what you're observing in the private sector reflect, contrast to complement what Lucas mentioned?
So that's a lot of questions. Thank you so much for having me here. I'll take up the rest of our time. No, I'm teasing. It really is a pleasure to be here and talk about some of the work that we have been doing. And I do think it's quite complementary to what you've just heard. So I lead FinReg Lab, nonprofit research organization based in Washington, D.C., and the bias to the work that we do at FinReg Lab is really interrogating data and technology for its potential for bringing more people into the financial ecosystem. And we wanted to look closely at, there's this broad term AI, and I appreciated probably the most educated person in the room today couldn't define what AI meant, so I'm not going to join in either. Nevertheless, we've spent a bunch of time over the past 3 years interrogating questions around particular data, because you can't have bias in the data, and particular machine learning algorithms used in a very high risk but high reward use case, which is credit underwriting. And that is where we all want to make sure that we have equity, we have fairness, and we have inclusion, but that we also have accuracy and prediction. And I think it's worth saying too, I don't know that we've said it out loud, why we're motivated around artificial intelligence and things like machine learning are because of the potential that those types of techniques bring to greater accuracy in whatever we're trying to understand or optimize for. And so we have done work looking both at questions of bias, first order. The work we've done is in the United States. Questions about bias like, are there underrepresentation of the data that are being used in credit decisions? And in the United States, we have up to 50 million US adults who are unable to be credit risk assessed because they don't have a sufficient credit history. So to relate to you all in the payments world, we interrogated payments data, transaction data, for understanding the extent to which that data, which is actually more representative, and this is one of the biggest bias issues, frankly, in data and AI ML, are those data actually predictive of risk? And importantly, do certain variables or insights from that data create a risk of bias? In the US, we have explicit laws that require that any lender, bank or non-bank, actually understand and be able to explain to a consumer, a customer, why they got the decision they got. So this gets to this question around explainability, which also gets to the question of, do you have bias in your models? And that's part of the intention of that law. And then many of you may know, we also have fair lending laws, which require that the lender actually make sure that we don't see differences between populations. In the US, we have these laws require that you evaluate for gender differences, or that they require that you evaluate for racial differences. And I call that out because it both helps to anchor questions around whether we're using a logit regression or we're using a machine learning or we're thinking about more frontier directions of AI, starting with laws in place. The law is the law, and what those expectations are on the humans who were ultimately choosing the data, choosing the model choice, and then choosing the techniques they may use for generating explanations, that all of that is really important, and having legal girding that really gives the direction is a really significant aspect of how we understand, push the use of these models and the data to understand what might be creating bias, disparities, and also then really important and exciting, and this is another benefit of machine learning and AI, new techniques to actually mitigate some of those disparities. And that's some of the work that we've been doing at FinReg Lab as well, is really trying to understand how does machine learning, more automated approaches, and AI techniques ultimately help lenders reach decisions that are more fair and more equitable, and ultimately more inclusive. I didn't answer your first question, though. In the US, specifically, that's where we spend most of our time, but working with very big banks all the way to very, very small institutions, we are seeing, not surprisingly, machine learning has been used for decades. Fraud, AML, insurance, customer service, right? I mean, these models offer real benefits. Having said that, there is significant regulatory anxiety and uncertainty around when the models are more complex, even in the world of machine learning, supervised machine learning. Can the person or the system, the humans deploying those machine learning algorithms, can they sufficiently generate explanations? Can they understand from a model risk standpoint? Are those models stable? Are they robust when the data change? And of course, these questions around bias. Can an entity using these models really understand and discern if there is bias, and then how they're going to mitigate it? And it is, it's exciting to talk about Gen AI, and I know we're going to get there. But even sort of answering these core questions around supervised machine learning are essential steps in this process of how ultimately I think the financial sector and the financial ecosystem is going to evolve in terms of how comfortable can we all get with much more opaque models being contemplated.
Thank you. Super interesting. I think Lucas mentioned that all the tools that they apply at the ECB is like a human in the loop. Is the same thing in the financial system?
Ditto. And just to maybe dig for a minute on the explainability work, what we did is we interrogated, we partnered with a team at Stanford to build a handful of machine learning algorithms. And again, because of this legal expectation to explain, to be able to tell somebody why a model derived its outcome, we tested both open source and proprietary post hoc explainability techniques. And what we found is you needed a human in the middle, but you actually, not surprising, you also needed sophisticated humans who really understood the data choice, correlations in the data, the model selection, and what types of post hoc explainability techniques were applied. And so without question, the human and the expertise is a really essential component. I think it is a big open question, and we were having this debate in the lunch hour. How well is explainability emerging in the field of large language models? I think that's a little less clear.
Great, thank you. So returning to you, Lucas, let me just, the thing, like the outcome is biased, the human is biased, do we get bias squared or what's happening?
But maybe just on that, and also building on what Melissa, you were saying, and turning, I remember from these leadership trainings that I had it was when you have a challenge, how to turn this challenge into opportunity, and maybe with the biases. So if the bias is everywhere, can we use artificial intelligence to address the bias that we have it in the data? And we see more and more discussion and more use cases that are there. To use artificial intelligence to address the existing biases. And I think this is also an interesting point on how to go from the dark to the bright side. Yeah.
Very good, but we already touched on it, like how you can manage biases, but maybe if you can, Lucas, could take us through kind of like how you manage bias have developed over time and how you look to the future, and especially how you predict that you will try and manage bias as you're using perhaps generative AI more and more.
Yes. So it's an excellent question and very topical now, as we just talked about Gen AI in the previous discussion. And certainly the bias management will be different when we use large language models and this advanced artificial intelligence. We are not in the control of selection of the data sets. We are not of control of the training methods. So we need to address that challenge. And let me maybe highlight 3 main points that I think are of key importance here. The first one, here in Europe, the AI Act is coming. And according to AI Act, the big tech, the providers of these pre-trained models would need to provide more transparency on how the models were trained, which data were used.
Are you holding your breath on that one?
I hope so. And third, how they deal with the biases. And I think that information is really key and fundamental when we select the models for our use cases. We need to compare that information between the providers and make sure that the models which we select, that fit the context and the situation that we have it. The second point that is important, again, human in the loop. And we discussed, I think, in one of the panel during the day, in ChatGPT, thumb up, thumb down. We need also to have this kind of interface application in our enterprise-wide systems where end users will be able to assess the quality of the output and provide the feedback. And finally, with development of artificial intelligence, there is also development of how we implement that. And there are a number of technical solutions that allow us to implement artificial intelligence in a more reliable, more robust way. And for example, prompt engineering is important, grounding, or the RAG methods. So all of these are different techniques that would allow us to implement even these large language models in a much more robust way.
Thank you. Melissa, I guess more or less the same question to you. Where do you see bias management in the context of generative AI? And I know you're a great fan of the AI Act, so maybe you want to comment on that.
So maybe we'll get to that. So the work that we have been looking at, these are, credit decisions. Are you going to give somebody credit? What are you going to price the credit or a business owner? And so these are deterministic expectations. Where we are seeing industry in this context of credit decisioning, think about even like dip a toe into leveraging large language models, which are more about signals that are intelligence that can be helpful, is more in the context of do LLMs and can LLMs potentially help to generate feature discovery so that you were then thinking about and have insight on what types of data points you would then put into a machine learning algorithm that you can then generate and explain how that result came about. But other places where we are hearing LLMs being thought about are, and it was talked about in some of the other panels, the need to sort of generate sort of system-wide or large data set-wide insights where you actually have to gather and synthesize information, and maybe even information that humans themselves have put forth, like complaint data. And so leveraging LLMs to get signals and insights from a lot of information. And I've even heard one lender comment that LLMs can actually be helpful where the human would have a hard time discerning what the human writing the complaint was necessarily saying. And so using LLMs in those two contexts are where we're seeing really LLMs show up and being thought about in the credit decisioning space. Yeah.
Well, I think understanding complaints is something I could use at home, so maybe that would be. So two questions before we turn it over to the audience. I think, what's the next frontier in terms of AI? Where do you hear the next big thing is? And also, if you want to reflect on some good pieces of advice for both supervisors and banks that are starting to implement AI.
So I'm happy to go first. I thought the comment earlier today, I think the idea of agentive AI, right? AI acting as an agent is both enormously exciting and I also think tremendously worthy of very deep consideration, just the broader sort of systemic risk implications of, money potentially moving with agents that are acting on behalf of consumers en masse. Nevertheless, the technology combined with the data and how that can be harnessed to, in time, more cost effectively bring personalized financial advice and direction to populations and small businesses who traditionally have been priced out of getting really personalized information is quite exciting and quite powerful and very empowering. And so I think directionally, that's probably where we're headed with a lot of opportunity, but a lot of important legal and regulatory questions that still need to be thought through.
I think in central banking and in banking supervision, I think we have to step up our efforts. We have heard a lot also today and yesterday that the world is changing, and also the central banking world is changing, and that requires us to roll up our sleeves, to make the hands dirty, and really implement AI and Gen AI. I don't think that we will have the answers to all the questions, and naturally, as central bankers or supervisors, we tend to look more on the risks and delve into the risks, and then there will be always issue of of bias, of data protection, and this and that. Of course, we have to take all these concerns seriously, but we have also to turn the page and move forward. Maybe it also requires a little bit of the mindset change. We play not to lose, but we have to play to win, and make sure that we benefit from these technologies in the future. I think that from our experience, what really matters is looking. It's AI and advanced technologies. One is technology, and the other is people. So of course, it's important that the technology, the tools is there, it's working, but the other component, which is at least equally important, if not, that it's really effectively used. And that also requires, I think, that comes back to the previous panel when we discussed about training, about the culture change in our organization, where these advanced technologies are seen as co-pilot in a day-to-day work. They are not, AI is not there to scare the people, to see only the risk, but really as a facilitator, where AI and the human can work together to bring better supervision, monetary policy decisions, and so on.
Could I add on a little bit? I think there are some, and I'm hoping Yuval Harari later might speak to this. I've heard him talk about it in the past, but there's also the human dimension, how the humans themselves, with comfort or not, interact and engage with AI as their agent or as the intermediary between themselves and any firm or entity they're working with. And we've been looking into some of the psychology and sociology research just in terms of what humans, when shown different forms of chatbots or different types of agents, what do they trust? Who do they trust? And just to raise this in the context of this discussion about bias, it's a really interesting contemplation to think about at the firm level with laws and regulations and aspirations to mitigate bias. That can be done in a systems way. But when you're then putting the human in the position of, let me select my avatar, or who do I trust most, it's raising really interesting questions, and you see it in some of the literature in terms of what the individual human and their particular biases that they bring to their engagement with the chatbot. And so it's going to be interesting to think about sort of what the future looks like as we all have our own individual agents in our pockets. And how we behave, and frankly, what the reinforcement is in terms of what the human is getting in terms of the intelligence. So there's just enormous dimensions of questions to be pondered as we think about agentive AI going into the future, whether in financial services or other stakes and other applications.
Well, thank you. I think now we will turn it to the audience. So please raise your hand if you want to have a good question about the dark side of AI. Oh, there we go. You can introduce yourself and your institution.
Hello. Hello, Marco from the Swiss Center. Wouldn't you argue that AI can also be an opportunity? In a sense, in the past, we had to have people decide on something, and we needed time to see 5 years. And through analyzing that pattern, we saw that person is biased in the decision-making. Now we have a deterministic system which we can play through a gazillion of possible scenarios, see is this system biased or not, and only then deploy it.
Yes, I think this is hopefully not on the dark side, but indeed on the bright side of the AI. And I think I think if you ask a question, who is the best place to do supervision? Would that be AI? Would that be an expert? Or would that be an AI and the expert working together? So certainly that would be the third option we would select. And this exactly comes to boil down to your question, where you have now not only the expert but also the AI working together, and certainly bringing much better results when none of them could deliver.
Yeah, I mean, to stick with my example, which I think is a helpful one, I mean, we've had decades of lending decisions that have been made by humans, and humans are bringing their bias to those decisions. Moving to more automation and better data, we can begin to overcome some of those biases, but I think we also have to recognize, this is very true for the United States, we have tremendous bias built into our data, right? Systemic inequities, wealth, and income. But yet, with legal and institution motivations to seek out, understand, and find ways to mitigate that bias and to leverage AI, machine learning, and more representative data, there's enormous potential, I think, to help begin to make sure that at least decisions that are being made now on a going forward basis, which have implications for wealth opportunities, job opportunities, that we're starting to get that right and do that better. And so I think it's really exciting from that standpoint for overcoming our dark sides.
Thank you.
Yeah.
Thank you. I'm Tom Schack from Swift. I think one thing that's really interesting about the bias is that the kind of uneven level in which people look at it. And Melissa, you just made a comment about the bias, and humans have been doing this for years. It's kind of the same thing with self-driving cars. Right? People crash cars all around the world every day, and it just kind of doesn't even make the news. But one Tesla, makes a bad turn or has a crash, and that makes the headline, and everybody, all focuses on Tesla, right? So what do you think can be done? Because there's almost a bias for the way we used to do things, which is probably inferior in most cases, compared to actually doing it in a more automated way. How do you deal with that, and what are some of the opportunities there?
Well, I mean, we're motivated to provide our research for policymakers and market actors, and we generally always calibrate our evaluations relative to the existing status. What are the existing stats? And so even in sort of the emerging machine learning and more automated approaches for finding accurate but more fair machine learning underwriting models, we compare that against the more traditional, look at your variables, what's a proxy for a protected class, and drop it, right? So always trying to calibrate against existing is a helpful way we find, especially with policymakers. But you're right, there is sort of pressure on where might this go? So I hear the point, exactly, yeah.
Yes. I think this question shows, how important it is to bring reliable information and decode and demystify, some of the myths. I remember when we started the work on digital innovation, management was scared of robotics, of robot process automations, which are rule-based, and they were saying, yes, if things are not copy-paste properly. Then there was the full discussion about the use of the cloud. No, it's not anymore on-premise. I cannot control that. And my data is in the cloud. And how much. And the same now comes with AI, with Gen AI, and with all the risks. And it shows how important it is to bring the facts on the table and really educate the entire organization, from analysts, experts, but up to the board members. And at the ECB, banking supervision, we have launched this program. So our senior management go literally to the school for a couple of days every year to learn about digitalization and innovation. Our board members are taught on AI this year, on Gen AI, and I think we trained more than 2,000 employees on innovation, on digitalization, on AI, and it is so important to bring these topics in the organization forward.
Can I add on? Oh,
go ahead.
I'm sort of going to take you up on your AI Act comment. I think one of the things that we really have to think about, it's the machines, but it's also very much the data. And I will call out, and happy to talk about this in the break, these questions around how we are protecting consumers and giving consumers right to control the data that are used for different purposes. We're debating this in the United States right now. That is in some ways coming to a head in terms of what data that actually may be useful, more representative, whether it's credit decisioning or even fraud models are being contemplated, like what data are going into those models. How we get that consumer permissioned, but also consumer protection set right, knowing that the financial sector, no matter what models are being used, need access to data and the ability to build models. We're finding that the need for this sort of deeper conversation to make sure it does get to bias. I mean, you've got to have representative data, but being able to access the data can be a real debate and challenge right now, just given some of the agendas around consumer data privacy.
Thank you. Last question here.
Thank you. I'm Silvia Tanasio, Italian Banking Association. There is a doubt that I have since a while, and it's related to the good expression you used, the right human in the loop, the sophisticated human in the loop, I think you said. Because we already experience some alerting systems in our branches where people are suggested to take particularly care of a transaction or a customer, considering a potential risk, etc. And those people used to abide to the machine, because if it comes out from a machine, it should be right. You know what I mean? So the kind of learning, the kind of education, I'm wondering if it's appropriate to give to our people is, should they learn to question what is suggested from the machine, or is it too risky to instruct them to question what comes out from the algorithm? Yeah. Thank you.
Wow, good question.
I have two thoughts. One, there is research showing that, I mean, even historically, when humans shown machines, expert humans and non-expert humans, we default to the machine, and that's a huge risk, and I think we all realize that. On the financial services sector side, where they're thinking about how potentially to leverage insights from LLMs, some of the ways that they're thinking about deploying it are to have much more sophisticated but preset responses in any particular context that are then provided to employees. So it was human oversight to get the insights from the LLMs in the first place, to then think about, okay, what would be a human-controlled set of more sophisticated responses that is then being provided to the customer, to the consumer. And so trying to leverage the intelligence, but also control it with human determination about what's going to be communicated. So something in that area might be helpful, especially as we're all learning how to transition and what to trust and how much to keep questioning.
Lucas, any view in the last 10 seconds?
Yes, there is a risk, and this is that people will switch off their brain. They will take the beautiful text drafted by generative AI. Do not question that. So we have to be very clear that who is accountable for the results, and this will be always the human, never the machine, and this has to be explained very clearly.
Thank you. The clock has reached 0, and Christina is looking at me, so I'll spare you for my otherwise fantastic summary of this fantastic panel, and if you would just join me in thanking the two panelists. Thank you.
Thank you all for this insightful session. We will now have a break. We will reconvene at 3 p.m. sharp. Enjoy. I hope you enjoyed the break. Let's now move to the next very exciting high-level panel to discuss the central banks and the rise of AI. Please join me in welcoming Ms. Jemima Kelly, Financial Times columnist, to moderate the session.
Hi, good afternoon, everyone. I hope you can hear me okay. I'm beaming into you from the Financial Times headquarters in London. I am indeed a columnist here. I have a weekly column in which I write about everything from cryptocurrencies to AI to Donald Trump to culture wars. So I've got a very wide remit. And I'm very happy to be joined by some other panelists here. We currently have two panelists with me, and we're expecting a third who's going to join us, we hope, sometime soon, but he's running a little late. And that will be Pablo Hernández de Cos, and that is the governor of the Bank of Spain. And he's also a chairman of the Basel Committee on Supervision. But we do have here Durjan Chia, who is the managing director of the Monetary Authority of Singapore. And we also have Eddie Yu, who is the chief executive of the Hong Kong Monetary Authority. So welcome to both of you as well. And so today we're going to be discussing central banks and the rise of AI. Obviously, there's a huge amount of discussion about artificial intelligence these days, particularly with the release of GPT-4 last year. That created a huge amount of excitement and huge amount of fear about what AI could do. And with the launch of GPT-5, which is expected by the end of the summer, I think, I'm sure that we'll see a lot of newspaper headlines again and a lot of excitement and anxiety in equal measure, or perhaps more on the anxiety. Elon Musk has said that that artificial intelligence will overtake human intelligence by next year, whatever that means. In some ways it already has. And when it comes to people, we often, I guess we used to think that AI would replace blue collar workers, factory workers, and these days we seem to be much more concerned about white collar workers, particularly people like me. It might be that I don't have a job in a few years. But when it comes to central bankers, it's not an area that we've kind of looked at, or that's been looked at a huge amount. A recent survey found that 56% of central banks, this is by FinTech Bookmarks, did the survey, 56% of central banks are using AI and or machine learning to some extent. A lot of them looking at using it for projections and forecasting. Arguably, all of them are using it. We're all using AI in various ways every single day. Rudimentary versions of AI have been kind of used by central banks since kind of the 1980s. So the idea that 45% aren't using AI at all is a bit strange. I think they're probably all using it, but I guess 56% are kind of really actively using it. So what I thought I would start with is, given how much fear there is around, there've been various people, including Elon Musk, who've called for, a kind of 6-month halt on the development of AI, and there's a huge amount of fear that it's going to, basically wipe us all out. And there are some, obviously, there are levels of risks that AI presents, and that being the most extreme and perhaps, unlikely, we hope. But I wondered whether I could ask both of you whether there is, nevertheless, a kind of worst case scenario in terms of what AI, of the kind of not doomsday scenario, but something kind of bad that could happen that you are preparing for. Because obviously, financial supervisors are constantly thinking about systemic risks, which we're going to get into. But kind of, is there a kind of really big risk that you feel that, it might be a very unlikely risk, but that there has been some preparation for thinking about?
Well, maybe I can start first. Again, we're not talking about doomsday scenario where AIs rule the world and destroy us and something like that. But there are risks that we are already starting to see, like concentration risk. It's likely that there will be dominant AI firms, dominant cloud computing firms that financial institutions are increasingly becoming reliant on. And if they are heavily reliant at some point in future on these dominant platform, which might only be a few, if they fail, if there's an IT attack, if they have a failure, then there could be systemic risk or operational, at least systemic operational risk. That's one. I would like to just quote another one, which is something that I always fear, which is when malicious actors are using Gen AI for either fraud, scam, or false content, false rumors, especially when there's market stress. When people's confidence are low, all these false rumors in the social media that look real might actually aggravate the bad situation into a very systemic one.
Okay, thank you. Dejan, did you have anything to add there?
Sure. Maybe I'll take it from Eddie's second comment. To me, I think the main risk is AI in the wrong hands. And apart from scams and fraud, I would add cyber attacks as a key area of concern. We do know that these are daily occurrence, even at today's level of technology. We know with AI, it has the potential to turbocharge these capabilities for cyber attacks. And I think another dimension that is not perhaps talked about as much is that actually with AI, it has the potential to democratize, not in a good way, but democratize access to malware. So there is already AI capabilities that are available online for people who are not too sophisticated in their technical skills to access and to use it to develop malware. And they can use this, of course, to do their attacks. So I think it's a space we have to watch very closely. The banks and financial institutions are clearly aware. They're stepping up their game in terms of defenses against cyber attacks. And there is the potential to use AI as well in the defense. But it's going to be a bit of an arms race on both sides. But clearly, the right level of investments have to be placed in this and not to be taken lightly.
Okay, brilliant. Thank you. I think that's the first time that I've heard the word democratize used with, malware. So, okay, great. I think it sounds that your answer is basically, yes, there are some, and we'll get into these, and yes, there are some very serious risks, but it doesn't sound like that there are any kind of preparations being made for the kind of existential level of risk that some people are talking about. So, great. So I thought we could just perhaps start kind of going back a little bit, really, and talking about how it is that central banks are currently applying artificial intelligence and how they are planning to kind of harness that in line with the kind of advances that are coming very, very rapidly down the line. So Eddie, maybe I could start with you to kind of give us a bit of an overview of what it is that how AI is kind of being used right now and how it's being seen in central banks.
Right. I think AI has been used by central banks for a while, as you said, in different forms. One common way of using AI is on oversight and monitoring capabilities, especially for banking supervisors. Because AI, they do have an ability to detect hidden patterns quite well, and also generate predictions using a huge number of data. So they're actually good in detecting anomalies, and also in fraud detection, in AML detection, in terms of anomalous payments. We're actually also using them to identify mule accounts. So that we can stop those accounts as fast as we can.
Which accounts? Sorry, I didn't.
Accounts.
Mule
accounts.
Sorry.
Yeah, the mule accounts are the accounts that people use to launder their proceeds from fraud, from scams, something like that. And the other is, of course, risk assessment. One of course, we've always got the structured data through our returns coming from the banks, but now we can do the risk assessment using unstructured data by getting into social media threads, news report, etc. And in this Shammy, we're also piloting with a machine learning model that actually helps us assess the credit risk or credit loss faced by banks, so that we can take a more forward-looking view on their loan quality, taking account of the macroeconomic data. But this is on trial. As for Gen AI, we're actually just proceeding very cautiously. Of course, we'll use Gen AI like others do in terms of having a digital assistant, more like a summer intern that help you draft speeches, emails, collect data, find information, etc. But we are quite cautious about the use of it. We are also building an internal Gen AI model, but we're actually a little torn between how to have the right computing power and data while keeping confidentiality and security. We're starting with using our own private cloud and using an open source model so that we can adapt to using our own data. But there are constraints in that. But if we use public cloud and public data, we're a little worried. So we're trying on different things on Gen AI, but I think it's still early days for us, just like many other financial institutions.
Okay, interesting. And not just financial institutions. I think we're all kind of playing around with it cautiously. Yeah, it's not. I'm not getting it to write my columns just yet. So, Dejun, could you talk about the specific areas that you feel that AI can bring the most benefit when it comes to central banks and supervision of financial institutions?
I promise I didn't coordinate beforehand with Eddie, but I find myself having quite similar points that he has made. So I think maybe just starting with AI as an internal productivity tool. I think central banks and supervisors are data-driven organizations. So the scale and scope for applying AI, machine learning, or even Gen AI is quite good. I think so. Speaking on Gen AI, certainly as a tool to retrieve, collect, process, summarize data, and then present that data back in a usable form to users. I think that is a very important generic use case for all knowledge organizations. So certainly I think in our organizations, we're looking very seriously at using that as a productivity tool across all lines of our work. Now, one particular challenge, I think Eddie alluded to it, one particular challenge is how we balance these use cases with data confidentiality and privacy. We collect a lot of data, of course, from the financial industry. And we have obligations on confidentiality on data that we collect. So typically in our organizations, we have quite strict rules on data access. So I think as we think through about training models, making that data available for training models and making it available for search and also for summarization and processing and use, we'll have to think about how to overcome some of these traditional rules that we've had with regards to access of data and the protection of data. But I think we won't compromise that confidentiality, but we'll have to find ways technologically to be able to use that data, to be able to use that to train the model, and then to of course make it available for us to use and be more productive. So that's on an internal productivity basis. In terms of external, Eddie is absolutely right. Say in the central banking area, I think it's quite useful in terms of being able to trawl through social media platforms and the media to do various things. So certainly one aspect of that is sentiment analysis. So for central banks, clearly sentiments towards inflation is important to us. whether inflation expectations are well anchored. And so it's a tool that allows us to quickly get a sense of sentiments towards inflation and how that trends over time. For supervisors, there are many use cases, as Eddie has said. I think it allows us to access network data to get a sense of whether and pick out anomalies that may point to fraud, money laundering, potentially market manipulation and securities market regulation. So I think that there are many use cases in those areas. We've tried models in the areas I've just mentioned. They don't completely substitute for expert investigation work. So we see this as a complement to what the capabilities and expertise that's been already built up in existing channels. So we see this as a complement, and the leads that these models throw up, they prompt us to investigate and look further. There is an issue, of course, between false positives, and so they do need to be looked through carefully by experts. So
Okay.
I think at this stage, I won't say that there's a huge reliance on them, but they've been a very useful complementary tool.
Mm-hmm. Okay, so one thing that neither of you actually mentioned, and given that you're both agreeing, and we want to people like to see panels where people aren't all agreeing, so I'm going to make sure that I'm keeping you. I'm going to be the person who asks questions to keep everyone awake this afternoon. So I'm going to ask another slightly provocative question, which is, so the part that you're not really discussing is I guess the rate setting part of central banks, the rate setting kind of section of a central bank committees. Clearly, you're discussing things, Derjin, like sentiment analysis, for example, of social media and other media. So what you're doing there is you're getting the AI to kind of scrape the Twitter and TikTok or whatever, and working out, well, what's sentiment on this particular thing, what's consumer sentiment, how are people feeling about the economy. But an AI can take that as well. So you're taking the AI to give you the analysis, but an AI can feed the analysis to itself or to another AI or whatever. And it seems to me that rate setting is just the kind of thing that an AI could do, actually, and that it could do potentially with less kind of and this might be a good or a bad thing, but without the kind of human emotions that might come in terms of, oh well, I don't really know the psychology of central bankers, but you do better than me. But if you've been hawkish, you want to continue to be hawkish because that's kind of part of your identity as a central banker. And whereas an AI hasn't got any kind of complications, there are no biases, there are no need to kind of continue down the same road. You can just take all the information that's there and make a kind of objective, unbiased, spit out a rate. And it might be the case that this ends up being more, some countries find that using an AI to set the rates actually is better for the economy, better for inflation, better for the exchange rate, whatever. Is there a scenario in which at least that rate setting part of a central bank is actually replaced by AI at some stage?
That's a very interesting scenario. Maybe it'll happen one day when you can blame the AI for mistakes in monetary policy. But if a human has to take the blame, then the human will have to make the judgment. But maybe on a slightly more serious note, I think the last few years, central banks have come under some criticism of getting their forecasts not entirely right. So I'm not sure if the state of the technology is such that we can do this mechanistically. There is a great deal of judgment involved in understanding and having a view as to the forward path of inflation. There is a great deal of judgment involved in also having that view of the forward path of transmission of monetary policy. So I think we're not at a stage where it is entirely mechanistic. The models at this stage of development, of course, give us a very, very important parameter and input into our work. but they're not at the stage where they can supplant human judgment.
Okay. We'll see, I guess. We'll see if there are any countries that that do decide to kind of trial this, and I guess there would be a way in which you could, an independent. Well, I guess you can't really, monetary policy has to be implemented for you to see whether it was kind of right or wrong, I guess. So it would be difficult to kind of do a rival without actually being in charge of the monetary policy. Okay, thank you. I'll move on to another question. Another one for you, actually, Dejin. So obviously, financial institutions are deploying AI in various ways. We've discussed some of them. There's, robo advice as well, chatbots, machine learning. How can they deploy these tools in a responsible manner? And what should the role of supervisors, financial supervisors, be in that?
Okay, so it's a big question. I may take a little bit of time with this, if you allow. So maybe just take a little step back. So I think it's absolutely important that financial institutions are able to deploy AI in a responsible, sustainable way. Supervisors and regulators have strong interest that they are able to do so without great mishap along the way. Reputations matter greatly to financial institutions beyond the financial impact of their decisions. So, it's all wrapped up into credibility and confidence, right? So I think there is the issue that they are able to do this well-governed, and in a sustainable way. I'll just say that, there's a long history of regulators and the financial institutions working together to ensure that the models they use and the data governance and policies that they have in place are sound, right? So data and models have been used for the longest time in financial institutions, right? They've been used to inform credit decisions. They've been used to model market risk. They determine trading, hedging strategies, liquidity needs. Of course, used in insurance a lot. And supervisors have engaged with financial institutions through all these years in terms of ensuring that their risk outputs and their model outputs are good enough to drive decisions. And this used to be fairly straightforward to do. The models used to be predictive regression based. They were reviewed, updated infrequently, limited number of parameters in the hundreds. Model performance was straightforward to measure. Right? And explainability, accountability, all the buzzwords now talking about AI, these were relatively easier to do back in the day. Things started to change about 10 years or so back. Machine learning became much more extensively used in the financial industry. And so they were used also to assess credit quality, price loans, detect suspicious transactions, put into AML processes. And then, of course, also in the marketing area, predicting customers' interest in products and so on. And then larger data sets started to be used in these models. And so explainability became more challenging with a growing number of parameters. Data governance became much more important. So that was the start. So about 10 years or so back. Now, I'm taking you through this history because just to show that, it's not that AI is a sudden onset of interest in this area. It's been a bit of a evolution of development of capabilities in this area. And so both the financial institutions and supervisors have had to step it up over the years. So I'll just take you back to 2018, and that was when the MAS had issued guidelines on the adoption of AI, but this was in the age of traditional machine learning, right? So this was back in 2018. But then we were already emphasizing principles then that were important then, but still are important now, even with Gen AI. First, fairness in the selection of data, fairness in the outcomes of models. Clearest example of this is that credit rejections cannot be discriminatory. We emphasize ethical decisions and outcomes. So whether or not they're model determined, they need to be consistent with values and ethical standards of the organization. For example, policies on diversity, long-term orientation of banks towards supporting customers through the ups and downs of a business cycle, maybe support of low-income communities, in some cases of some other countries where they have rural communities, maybe that, or small enterprises. Then, of course, accountability and governance. Models cannot be let out into the wild. They have to be kept on a tight governance leash. So supervisors would insist on this. They need to be constantly updated, check that they're performing appropriately and accurately and producing explainable outputs. And transparency is a point that is sometimes overlooked. So as AI becomes more pervasively used in decisions, there will have, I mean, I think it does benefit from more disclosures to customers that AI and models are being used to make decisions that affect customers. So one example, of course, is in credit scores. All of us know that our data is being used, and as this output called data score impacts our ability to access credit. So, you know, when financial institutions deploy more models in AI, I think this is an area that they do need to give very careful consideration to, how to engage with their customers to maintain trust and confidence by being very transparent about their use. Now, with Gen AI, with large language models, what I've mentioned, I think, is still relevant, and there's been an evolution, but there are certain risks now that are accentuated, and there's some new risks that we'll have to pay special attention to. Previously, data used to train models were generally collected by the financial institutions themselves. This was internal model, carefully selected, organized, tagged, and subject to very strict data governance. With large language models, these are very large, unstructured public data sets that are being used to train the models. And data governance will be much more challenging in this situation. Second area of change is that Gen AI now involves incredibly complex algorithms. They fit non-linear relationships involving billions, and I think with the latest iterations of the GPTs, maybe even a trillion parameters. So you can imagine that validating, benchmarking for accuracy, fairness, explainability becomes much more challenging. And there is also the added complication of dependence on third-party foundational models with relatively low levels of transparency. So this also adds to risk around legal liability. And third is now a need to address other areas of potential harm. You know, we talked about cyber risks earlier on. Eddie mentioned data privacy, and there's also consumer harm. So if these are used to interact with customers, you need guardrails and filters against hallucination and toxic content. So I would say that at this point, the banks have been cautious about deploying Gen AI autonomously or into key critical areas. In our interactions, we understand that they've been using it a lot in internal productivity uses, similar to how ourselves, you know, we ourselves as organizations have been using it for internal productivity. They've also been using it as co-pilots in terms of coming up with advice and services to customers. So generally kept on a leash, generally co-pilot, human in the loop, not autonomous use. And it seems generally not used autonomously in major credit decisions or market risk-taking decisions yet. But clearly the potential is there. I think they're working in deepening the capabilities. So it's a matter of time before the adoption becomes quite pervasive in many areas of activity in financial institutions. So maybe I'll stop there for a little bit and see if you've got
Thank you.
questions.
I have just one follow-up just on a definition. You said an intriguing thing, which was hallucination and toxic risks. What did you mean by hallucination in that context?
Well, so if Gen AI is used to interact with customers, say in giving financial advice or product advice, and we know from all our use of ChatGPT, and we know that this is quite well known that firstly there's a consistency issue. The the chat does not come back with the same answer every single time you ask the same question. There is the issue that some of the content is not factually grounded, and so that's hallucination. And then, of course, third, there's the prospect that some of that reply back is not, how would you put it, polite. And may violate or may be offensive to if you hold certain values, it may be offensive. So there needs to be some guard railing that it speaks with a certain tone of voice, speaks with a certain vocabulary, and speaks with certain values that guardrail it.
Okay, so hallucination wasn't you were using it in the kind of context of fake news, I guess. But I do think you bring up an interesting point there, this guardrails and values, because clearly we don't all share the same values across this, between different societies and within those societies themselves. So I just wondered, you mentioned kind of ethics and talking about diversity and inclusion and that kind of thing, and baking that into the AI. And obviously these are issues that are very contentious and that people really, really disagree on how best to manage. And that's just when it's human beings. So how do you think about, and either of you could answer this, but just because you brought that up, Dejan, maybe you'd like to, how do you think about that kind of ethical part of this? And do you work with, I know, for example, a philosopher of Oxford University who's working with the Prime Minister of Greece on applying Aristotelian ethics to AI, believe it or not. So I wondered whether you worked with any kind of people who are specialized on ethics, and how you can think about how you even begin to start thinking about those kind of questions.
Yeah, so I think diversity is the harder one here. But I gave a few other examples where I think financial institutions will be able to adopt that quite readily. As I mentioned, there is, I think for some banks, they pride themselves in a value system that they will stick by their customers through ups and downs of a business cycle, unless the sector or the company is fundamentally impaired. They will try to look through the cycle, and that's how they market themselves to customers. And so, if that is the value you espouse, and that is how you've branded yourself and how you have held yourself out to your customers, what we're saying is that supervisors, there is a reputational angle to this. And if you are starting to use models in making decisions, then how would these models be able to be giving you outputs that you use and decisions that you may use that are consistent with those values? So you have to check it for those values. Now, if the model is mechanical and is not able to embed or internalize these values, then you can't leave it autonomous. You have to have a human in the loop who will, of course, then apply that layer of values on it. So the same goes for diversity, right? Okay. So if the model is not able to, or you're not able to articulate clearly the diversity parameters for your organization that you want your model decisions to embed, then that may require quite a large element of human judgment. And then so in terms of your overall system, again, the model is a co-pilot, but ultimately judgment and decision-making may have to be in the hands of humans who will apply that value overlay.
Yes, okay, thank you. Thank you for clarifying that. Eddie, maybe I could come to you. What do you think the role of central banks should be when it comes to supervising the application of AI by financial institutions? And do you believe that if AI kind of grows to the extent that we're, I think, all expecting it to, do you see the role of the central bank becoming bigger, smaller, or kind of remaining the same, given the kind of huge impact that AI is going to have? And when I'm talking specifically in terms of supervision of financial institutions.
Well, in terms of supervision, I thought the important thing is really for the supervisor, just like Dejun said, is to set the guardrails so that the banks or the financial institutions will work within the guardrails. Dejun already talked about the issues that we should pay attention to. In fact, the HKMA adopts a very, very similar approach to the MAS, and we pull out an AI guidance about the same time. And we are also trying to update that guidance to include Gen AI. But I'd just like to say that when AI is more widely adopted, especially with Gen AI, one generic risk that we are seeing may become worse. I talk about concentration risk. And it's not really just about IT failures or cyber attacks or over-reliance on a few firms. But it's also about if all the financial firms are using similar AI firms and models, and if they're trained alike, these financial firms will think alike. And will there be a situation where the financial institutions relying on similar AI models will make investments or business decisions that can exhibit some kind of herding behavior, which is something that we've been discussing, or pro-cyclical behavior? And especially, again, in market stress, will that lead to outcomes like bank runs, fire sales of everybody, liquidity hoarding by everybody, because everybody is using similar models? So I think that's something that we might need to think about as AI is becoming more widely adopted. And I thought it's a supervisor's job to make sure that these issues are thoroughly considered.
Yeah, thank you. I wanted to come to that. So this idea of the kind of concentration of risk, and obviously if everyone's evaluating the same data, as you say, they're likely to be coming to the same conclusions. And that I can see presenting a systemic risk. So what would be the best way to mitigate that kind of risk, if there is any?
Well, one is, of course, if we're talking about IT failures and cybersecurity, for the individual financial institution to make sure that they have sufficient oversight on the third-party service provider, and that they have their own cyber defense, not only on their system, but on their linkage with the service provider. But in terms of the group think, I think the important thing is, again, human in the loop. You really have to put the humans into the judgment decision portion so that the AI model, whatever is churned out, is just giving you a reference, giving you an input. It's the humans that will be making decisions, and humans do not think alike. And I thought that's actually will be a very helpful way to avoid the herding behavior.
Humans don't think alike, but if all of the if the AI becomes so successful at projecting things, or suggesting rates, or whatever it is that the AI proves itself to be most good at, it's going to take a kind of strange or bold human to say, no, I don't. Do you see what I'm saying? If an AI has proved itself to be kind of absolutely spot on every time when it comes to projecting economic growth for the next quarter or whatever, and maybe that kind of groupthink doesn't matter too much, but I wonder whether it's possible to have that kind of human agency when the AI has become, we're talking about years in the future, but when it's become so intelligent that it's quite difficult to kind of disagree with.
Well, for now, what we're seeing is that they're good at predictions, calculations, filling in the blanks. The cognitive ability, the intellectual ability, they're not reaching there. But of course, there could be a day that they could reach there. But still, I still think that it's not. Well, it's very hard. It's of course very hypothetical in that whether AI intelligence can reach human. But I still think that human in the loop is ultimately the answer to avoiding some of the issues that I mentioned.
Okay, thank you. Do you see any specific services that are kind of promising candidates that could be improved in the financial industry by AI? What are the most obvious candidates for improvement by AI, would you think?
Well, maybe I'll start first, and again, I'll pass to Dejun. Some of the things have already been done by the financial institutions, like as we mentioned, fraud detection, AML, or some are putting them to use for client-facing functions like chatbots, digital assistant, stuff like that. Well, I think these are all quite safe applications, but of course, there's got to be safeguards here and there. And one area that I think more banks are using is coding, especially useful if you are restructuring the legacy code so that you can use AI to have more clarity, better performance. They can actually refactor the code without the risk of really crashing the system. So coding is another area that I think more people are using. But when it comes to trading decisions, credit decisions, like Dejun said earlier, I think banks are generally quite cautious in delegating these judgmental tasks to the AIs for now.
Dejun, did you have anything to add on that in terms of what you see as the potential most promising kind of candidates for AI?
So I think one of the promises that sometimes talked about for AI is that it's not yet at the level where it is able to replace the highest level of expert judgment and highly skilled expert trained skills. But it is able to level up middle skilled activities. So certainly, I think in the area of co-piloting, there is potential for productivity gains. So for activities that may be performed by newer officers, not the most highly skilled, require some training, and so therefore there may be, and then there's turnover, of course, in the industry, and therefore the delivery of services tends to be a little bit uneven. AI has the potential to even that up a little bit and level that up a little bit. So I think that's what sometimes we hear people talking about, how it could be very helpful in productivity and leveling up of some of the middle skilled work. I think we do hear about coding being a very promising area where there is a global shortage of software developers. And so actually this comes quite nicely in to fill up that shortage. So it's not the case that there's a replacement of jobs, but it comes in to plug a gap. And so that's quite useful too. I think in the potentially there is quite a lot of use case in climate, and I'm happy to talk about that later. But I've just recently heard about use of AI in climate modeling, and so that becomes quite interesting because they're trying to simulate the entire how would you put it system of the Earth. So atmospheric waves, land movements, everything, and how climate is going to affect this. So it gives you, again, a better read of what our actions today might mean for the climate and for consequences on all of us in the years to come. So
okay, great. I mean, maybe we could move on to climate actually, because I think that's a really important one, and obviously the financial sector plays a big role in the kind of movement. Are you still there, Dejun? Sorry, you've disappeared.
Yes.
Oh, you're still there. Your picture. So how can, and so as you say, AI is potentially very useful for there you are, for kind of looking at climate risks. But what about specifically financial, climate related financial risks, or are you kind of lumping those together? Could you talk a little bit more about that, about how AI could work with kind of sustainable finance?
Yeah. So I think we see great scope again for AI to support sustainable finance and also for generally transitioning the economy, because much of the gap in terms of access to sustainable financing is about closing data gaps, about reporting data, using data to drive change, right? So the stakeholders can make use of the data to drive change. And so if it concerns data, that's an area where AI can come in to try to plug some gaps and improve the situation, right? Both in capturing, and processing data, but also in reporting and making sense of it. So in terms of, maybe I'll speak first about closing data gaps, right? And again, this is about getting sustainability-related analysis done, data that empowers that, and helping corporates with access to sustainable financing with these data gaps plugged, right? So, for instance, I think it's still at an initial stage right now, but there's quite a lot of activity in this space. So I'll give some examples. So at the Singapore FinTech Festival, we have this in November every year. So at the hackathon just last November, we saw a solution that uses AI to help companies score and forecast their carbon emissions based on the purchases they make. So this is looking at the purchases and their bills across various categories and translating that into emissions. And one easy category, of course, is travel, business travel, and or shipping of products. So they can take that, they can estimate the emissions from shipping, from air travel, and then that inputs they can propose. The platform can also propose a path towards reducing this. They can propose alternative means of transport. And so on, right? So I think the more data that's ingested, they can help companies find a better path towards a reduction. So it may be that instead of this material, you could consider this other material. Instead of shipping it from country A, you may consider shipping it from country B, which could be closer. So the potential is there, but the need is to be able to pump in quite a lot of data.
There's a lot of sorry, I was just going to say there's a lot of skepticism, obviously, around sustainable finance and ESG, etc. And I know that the MAS also came up with this idea that AI could be used to identify greenwashing. I wondered if you could tell us a bit about that.
Yeah, so you could train an AI model to do that. So I think with any sets of standards, you could so there are various kinds, right? So from various organizations, there are all kinds of standards. Greenwashing has one of them. We know of some organizations that have come up with a checklist or a guide against greenwashing. So you could put that onto a platform. And then you can take the disclosures and statements from a company. You can cross-check it against the standard and match it. And you can, identify issues and non-alignments arising from that. So there are actually platforms out there that do that. So it is being tried. It will have to improve over time. So I think it is a case where here, of course, is as good as the standard or the benchmark that is being built. So over time, that should be improved. That's on the one hand. And on the other hand, of course, is that as corporates are assessed against this benchmark, there needs to be some reinforcement that certain things were picked up well, certain things may have been missed and should have been picked up. And with that reinforcement, the model should be improved. So I think it will improve over time.
Okay, great.
Well, in fact, Maima, I may supplement here. In fact, we have a green fintech competition as well, and the winner is actually doing something like what Jun said. The firm, the fintech firm, is looking at listed companies and assess whether they can really achieve the net zero target that they claim by both using the disclosed data of the listed companies and also using unstructured data from the social media news, and also look at the governance and culture through the speeches of different people. So it seems that there are use cases there. And I should also mention the other project that's being done by the BIS Innovation Hub. It's called Symbiosis. It's about disclosure. If you think about Scope 3 disclosure in future, it will be very difficult for SMEs to do it. And whether AI can actually fill some of the data gap and help them with the calculations is what Symbiosis is trying to do.
Okay, brilliant. Thank you very much. Clearly, AI is not something that, it's a kind of cross-border phenomenon, right? And it's taking data from the entire globe if it wants to. So given that, I just wondered if we could come to talking about international cooperation. And what do you see as the role of something like the Basel Committee and other such global forums when it comes to both kind of harnessing the potential uses of AI and also mitigating against the risk? And will this be something that requires more, kind of unprecedented cooperation between central banks and at a kind of global level? Either of you, sorry, Dejin, do you want to take that first?
Yeah, I'm sure. No, I think it's really important. I think for the regulatory community to be able to exchange notes on this. I think there's a long history of collaboration for international standard setters and for the community of regulators. It's now about AI, but we've been doing this for many things, right? So I think for climate-related issues, we've been doing this. For crypto, we've been doing this. AI is the latest, but I think it usually starts with just coming together and having an exchange of views. What are you seeing? What are we seeing? Do you have concerns? Talking to industry. So dialogue and exchanges usually is the first step that we find always very, very useful. The second stage, of course, then is to decide if enough of us in the community feel that there is a major concern developing in this area. Therefore, then deciding that maybe a further step has to be taken. Some principles and guidelines may need to be prepared and drafted, and this will help steer and give assistance to all supervisors about how they might be able to look at the issue and address the issue with their financial institutions in their jurisdictions. And of course, at the last stage is if it becomes clearly a critical need, then and there is agreement and it is an area that is suitable, say objective enough, then standards could be developed in that area. So at this point, I think we've benefited already from discussions in the supervisory community about AI, about the various concerns about the use of AI in the industry, and how supervisors should respond to it. I think the conversations have started, and it could develop from there. But I think we're probably at maybe the first or second stage at this point.
Okay, thank you.
Right.
We're running very close to the end of this. Eddie, what were you going to say?
Well, just on top of what Dejin said, one area that I thought we can again start some dialogue is again about the concentration risk. The third-party service provider is likely to be dominated globally by a few, and whether there should be some common broad parameters that supervisors around the world should ask their banks to do in a kind of consistent way to make sure that their common reliance on these AI firms, at least these firms are properly run with the right governance, with the right cybersecurity defenses, etc. So I thought the third-party service provider area is something that we might want to start more dialogue.
And I'll just maybe add just a quick one, which I think there will be a real good use case for risk taxonomy to be drawn up. I think this will be very helpful to all of us in the community to at least have the same reference to a comprehensive set of risks, and then from there we can develop our own engagements with the financial institutions in our jurisdictions about how financial institutions are addressing these risks as they deploy and use AI models.
Okay, thank you. Quick fire round, final minute. Is AI more of a risk or an opportunity? Eddie?
It's an opportunity, but we need to put proper guardrails.
So more of an opportunity?
Correct.
Dejun, what do you feel?
No, it has to be a risk managed opportunity.
Oh, come on, you're both hedging. You need to disagree. I thought you were finally going to disagree.
We're supervisors. We look at risk primarily, but we don't think that this is dangerous. I mean, that was your first question.
Interesting.
I mean, we're not in a doomsday scenario, but we recognize that the financial industry will do this. We see benefits to it, but the risks have to be addressed.
Okay, I'm going to wrap up. Thank you so much by saying that the people who are looking most at risk don't see this as a catastrophic risk, so we can all sleep well tonight. Thank you so much all. Our time is out, so that's all I'm going to really have time to kind of wrap it up with. Thank you so much. That was a really, really interesting discussion, even though the governor of the Bank of Spain couldn't make it in the end. Thank you both really very much. That was great. And thanks all of you in Switzerland. Sorry, I couldn't be there.
Thank you very much.
Thank you.
Thank you, Jemima, and distinguished panelists for this fascinating discussion. Thank you so much. We will now continue with a conversation on effective innovation within central banks, a topic that is close to our heart here at the BIS. Please join me in welcoming on stage Mr. Josh Lipsky, Senior Director of the Geoeconomics Center at the Atlantic Council, to moderate the session. Josh, the floor is yours.
Thank you so much. Good to see everyone, and welcome back to in-person conversation. And thrilled to be here in Cecilia. I just want to thank you and everyone at the BIS for hosting such a fantastic conference. So hats off to you. It's been such an engaging day and a half, and we look forward to this and the rest of the afternoon. So this session has a long title, which I won't read, The Blooming Landscape of Innovation. But what I really think of this as is the past, present, and future of the Innovation Hub. You're coming on the 5-year anniversary, and there's no one better to talk about the past, present, and future of the Innovation Hub than Cecilia Skinsley, head of the Innovation Hub, former First Deputy Governor of the Riksbank. So Cecilia, I'm going to jump right in. I have several questions. We want to get to the audience questions as well. But let's start with the past. Take us through a little bit the creation of the Innovation Hub, why we're here today. You know, if you step back, it's not something you would traditionally think the BIS would do.
Sure, happy to. It became more and more obvious in the years of 2018, 2019 that it was so much going on in the tech space that central banks could no longer ignore. And I happened to be at the Swedish Central Bank, alternating in the board and the other relevant decision committees here at the BIS. So when this idea came up, that you needed a consolidated effort to follow, understand, and ultimately also experiment with these new novel technologies, I have to say there was a sort of energy level in the room that was sort of increasing amongst, I would say, traditionally fairly cautious and conservative governors. It became clear that something needed to be done. Up until then, some of the more the larger central banks, larger institutions, especially in jurisdictions where there was also a large financial industry, which traditionally experiment with novel technologies, they had done experiments. They have been sort of trying to understand blockchain and crypto and the likes. But there were few sort of structured collaborations across central banks. And you know, if you're working in one institution, it's always the question of where should we put our money? What makes sense? So the idea of sort of consolidate a bit of resources a little bit at arm's length away from you, if something is not so to your liking, is a very good one. And the idea was to have it as joint ventures, and that's basically what I'm in charge of. It's 7 joint ventures. So each center is a collaboration between BIS on one hand, bringing in staff and economic resources, and then the central bank on the other side. And you just saw 2 examples of 2 of my host central bank governors, which is MAS and HKMA, who are sort of our counterparts on the Singapore and Hong Kong side. So that was the starting point, really. And I would say we did an exercise 4 years down the road with the same group of governors or their institutions some months ago, and they sort of agree that, yeah, it was a very good decision back then.
Oh, that's a good report card.
Absolutely.
Okay, so let's do grades. What were some of the successes? If you had to, you're talking to the board and everyone 5 years in, 2, 3 highlights.
So I would say just getting it off the ground is a daunting task, and I must reach out also to staff here at BIS because they really took this on, legal, finance, oh gosh, I'm going to forget important people now who's going to kill me afterwards, security, real estate, everybody sort of chipped in and said, okay, new department, okay, let's make this work. I think we've also been able to, I hope we've been able to demonstrate that if you have a sort of dedicated separate IT structure, state-of-the-art, if you bring in people willing to learn and take learning from the best, and when it comes to project management, you can get things off the ground and demonstrate the art of the possible fairly quickly. So a project or a phase of a particular project is about a little more than a year, but perhaps on the long side, but we try to work fast and then showcase our findings, and then we sort of discuss with our decision makers in the hierarchy. Okay, is it a good idea to continue with this, or should we leave it to the side and continue with other things?
I think a year's fast by central banking standards, and those of us consuming on the outside say, oh, how are they doing another one? So that's how we perceive it on our end. But this is an innovation hub, so obviously if you're doing it right, not everything's going to work out. We talked about that in one of the earlier sessions. So what have been some of the, I don't know if you call them failures, but things that didn't pan out the way you might have intended?
So I think what you're pointing out is super important. We do not want to be, or I certainly am very mindful of that, we should not try to be something that we decide or strive ex ante that everything should be ship-shaped for production, because then people will sort of, the incentives will align there and the experimental atmosphere will go away, and if you're not careful, you just end up being another IT department. And there's nothing wrong with IT departments, but we already have that, and they're doing a fantastic job. But we need to have allow ourselves to think a bit high and wide and experiment. And every time we do that, we create new knowledge. So when people say, oh, well, do you have any successes, Cecilia? I say, yes, because we create knowledge in all our projects. And that is the key to see, okay, what should we take further on? I think another great win is that we're actually too small, and this is not a pitch to ask for more resources, but I'll explain what I mean. But we have a lot of central banks coming into us and say, we would like to do something of the same. So we are happy to help and advise and share our best experiences. And I would say one of the things I single out, so that's about staffing, resourcing, project management, philosophy, things that we have learned. But if I would single out something that is more important than everything else, is to have a separate and dedicated IT structure. Because central banks are usually very cautious on being adopting to new things, and we are in the cloud, we have tremendous IT team building sandboxes for the projects, and that makes a huge difference in us being able to work quickly, but also work very well with sort of the partners and the vendors that we bring into projects.
So speaking of partners, obviously a lot of what you do, you work with the private sector, you work with commercial banks. The next session will feature that. But a lot of these projects are now going to move from pilot to implementation. And I'm wondering what kind of challenges you think that presents. I mean, this is a new dimension. It's one thing to build it, but it's another to actually deliver it to consumers.
Yes. And doing proof of concepts and prototypes, that's hard work, but that's still the easier part of it. But you have to do that first to see, okay, what do you need to, what can you actually take further? And here, I'm going to be very honest and say we're still sort of blazing out the trails for ourselves on how we take projects further into what we call a handover process. So a little bit of terms of references here. The BIS Innovation Hub doesn't have the mandate to take things to sort of launch, and it can be, a subtech tool that the central banking community might like and need, but we don't have the mandate to take it to their market and operate it. So if there is something that is promising, we need to line up or find a central bank or a group of central banks that is willing to take this over and run it. And I think one of the examples of this is, well, Helvetia. You heard Thomas Jordan talk about that they have been inspired and taken on some of the knowledge there. Nexus is another good example of how the hub staff is now helping, coordinating, advising this group of 5 central banks who are willing to sort of explore this further. But there are many other ways to take things to market, and that's hard work. It's one thing to build a prototype. Taking things with all the bells and whistles to a real life setting is more difficult.
And is there any tensions or overlapping issues, public and private sector, when you go to that phase of the project?
So first of all, we always try to bring in vendors, at least one, probably more, into each project, because we don't have all the skill set ourselves, but also we want to learn from, and the private sector has so much skills that we can acquire. Sometimes we're also making partnership. But to really nail your question, we are mindful that we are not supposed to take over what the commercial world can offer. So we are in the space where we are aiming for public goods. So things that the private sector cannot offer, or do not want to offer, or have not actually discovered that they should offer it. But we can be the sort of convening factor. But I would be very happy if we can push the private sector to offer some of the things that we are pushing for, because then I can take resources and do something else.
Okay, well, let me ask about one of the public-private sector projects we've heard a lot about the last day and a half, Agora. Did I pronounce it right?
Absolutely.
Because we've been saying Agora until yesterday
Agora.
when we got the official edict from the BIS. So we'll make sure we take that back to DC with us. We heard the briefing yesterday, which was fantastic from Morten, and there's a lot of questions, and I know a lot of work ahead. But I'm just wondering, the step back a little, the significance of this project, these central banks that are involved in it.
So Agora is based on the notion that tokenization is a promising technology. And if you really want to kick the tires of that, you have to bring, and certainly if you want to explore the feasibility in the cross-border payment space, you need more than one central bank. You need a couple of currencies to really test this on. And Morten Beck made a fantastic presentation yesterday, so I'm not going to repeat that, but I would like to build on it and say I think it's a great leap of faith, and I'm very proud to see these 7 institutions that are prepared to line up together with private sector that is now being lined up in the next couple of weeks or months as well. I've learned from the various projects and previous in my career as well that you need to sit down together and start working and discuss what different sides of the society wants to achieve, to really start to build the trust that is absolute key to reach progress. And I think Agora can be possibly, we'll start with this phase on cross-border payments, and we'll see if this coalition of willing that is now being formed want to take this further. But I think this could be one of the great leaps. But let me be clear that we are both in the area where we try to improve the current systems, but we're also in this area where we sort of try to run ahead into the future and say, okay, the future is tokenized. What do we need to do now to actually get to that future? And we are in both of these areas, improve the current, but also build for the future. And I think Agora is an ambitious approach that, we are very excited about the participants there.
I know one thing we were particularly excited back in the US, and I know our colleagues are here from the New York Fed, that they were involved in it. So that, I think that's a great signal, and I know we'll look forward to seeing the next phase of the project. So let me ask, this topic has not come up much so far. I think Dante Disparte mentioned it yesterday, but I have to ask about geopolitics because I run the Geoeconomics Center at the Atlantic Council. Some of these projects have come into the geopolitical debate. They've been talked about in national security dimensions. They've been talked about, I know in the US from our work, about the possibility of some of them eroding the use of the dollar or sanctions evasion. And I'm wondering what position that puts central bankers in. That's obviously not the natural territory for central bankers to be in. But currency is not just technical, it's not just policy, it's also political and geopolitical.
So before I discovered economics, my first intellectual love was actually history and political science. And if you combine these three subjects, which I did at some stage, you quickly realize that the whole concept around money and payments is sort of right up there with the sort of the business model of a state, if I may call it that. And history is is a long line of powerful, kings, lords, and then sovereign states being involved in this and thinking about how do we make sure it works or will not work. Sometimes that can be an objective. And given the fact that it's part of the sort of the business model of a state, everything we do, or a lot of things that we do, touch on sensitive issues. It's about sovereignty, independence versus how much should you be dependent, collaborate with others, what do you gain, what do you give away, unipolar, multipolar power structures. And then I haven't even mentioned the struggles between commercial vested interests and disruptors in the private sector and how that interchange and play out versus the public sector. So I'm not surprised in any way. I think this is a very natural situation. And I say to my staff, we are aware, but we are not deterred. And this is not, other gets to decide what to take on out of what we try to create. And I also try to, I say to people, look at life from the bright side. I say to my staff, look at life from the bright side. If you receive pushbacks, it means that you are, you're affecting something here. Someone is actually you're causing someone to react, and that's a healthy thing. So we are aware, but it doesn't stop us from moving on.
Yeah, we've spoken about this before. I mean, the history of fiat and government's role in fiat, and the politics and the policy that goes with it. That's just part of it, and it always will be.
Yeah.
So that was the hard one. Now for the fun one.
Okay.
It was brought up yesterday how much the BIS team takes enjoyment in naming projects. I want to ask you the question we all want to know. Take us inside the process of naming a BIS Innovation Hub project.
Sure. Buckle up. So let's start with the formality. So we have a pretty decentralized organization with the center. So typically it's the project manager or the team or the center head who gives the name. Sometimes I'm actually being invited to chip in with some names. And I had to conclude that there is quite a bit of disrespect for me because none of the suggestions I have put forward have ever been taken.
Not one?
What
was your best that wasn't taken?
Well, I'll give you one thing. That I wasn't. I can't claim credit for Agora, but at some point I said, "Oh, for Christ's sake, let's take an old name for a marketplace, shall we?" And that's what someone did then. I don't know exactly who, but that's the closest I've come, all right? But more seriously, we can use acronyms of FUSE, fully scalable settlement engine, or NEO, new economic observatory. That's one way to do it. The Nordic Center typically have names that allude to concepts in my part of the world. Raven, Polaris, Icebreaker. But it can also allude to what the area where we try to make improvements. So green finance, Genesis, Gaia, symbiosis. And there's power in the name. So I think mandala is a beautiful name. The ALM processes is not very beautiful. We want to make them a bit more beautiful, so why not use the mandala pattern as an inspiration? I think also Aurora, which is the northern lights or the southern lights, bringing light over the darker aspects of the financial system to fight ALM. Oh, you're laughing, but I think it's great. Making, go after the bad guys in an efficient way by shining light on these things is beautiful. But because name is powerful, there's also names we won't use. So, Terminator movies were a great thing when I grew up, but still, we won't use an AI project name called Skynet.
That's probably for the best, yeah. That wouldn't trigger any kind of...
And Project Robo-Governor won't happen either.
I'm disappointed to hear that, but thank you for sharing that. Someone on my team back in DC said, the BIS Innovation Hub has made central banking cool again. I don't know if it's again or just cool for the first time, so credit to that. We have just under a minute left, so this is a tough question with the very little time, but it's the forward-looking question. What's your vision, Cecilia, 5 years on for the Innovation Hub? What do you want it to be able to achieve?
So Yogi Berra, I think, said it's hard to make predictions about the future. So let's say what I think we're planning for. And then we need to be agile because things has a tendency to change while you make the plans. So I think tokenization is going to be a big thing. But I think AI might be even bigger. So I think across all projects and all our focus areas, I think is going to be AI. I think we're going to see an overhaul of forecasting methods, of supervisory methods, and I hope we can be helpful in that area. I think we're going to move forward, perhaps narrow it down a little bit, move forward with some of our more promising infrastructure projects, and that comes back to what appetite the world will have for them, but we are ready to assist. And last but not least, we hope to continue to be an inspiration and speaking partner for central banks to keep innovating themselves. And I say to people, it's okay to be risk averse, it's even okay to be conservative, as long as you have one part of the institution that is a little bit like us and have a separate IT structure and do the state-of-the-art project management, and you will see wonders down the road.
Excellent. I think that's the perfect note to end on. Please join me in thanking Cecilia Skinner.
Thank you.
Cecilia and Josh, thank you for this insightful and entertaining conversation. I would like now to welcome Ms. Francesca Hopwood-Road, head of the BIS Innovation Hub London Centre, to moderate a discussion on private-public sector partnerships. Francesca, the floor is yours.
Thank you very much indeed, Perdita. So I have to thank Josh and Cecilia for setting up this panel so beautifully with such energy and so many gems littered through that conversation that hopefully we will pick up this afternoon. But this has also been across the last few days. We have had themes around inclusion and innovation from our Deputy General Manager this morning. We've heard about the importance, not least in the previous panel, for the collaboration between the public and private sectors, and the need for pathways for dialogue and insight to support experimentation and implementation. And underpinning all of this across the last few days has been this word trust that has come up time and time again. And as we have heard, in the Innovation Hub, we have over the last 5 years completed over 20 projects with its wonderful myriad of names. And some of our pilots are starting to move towards becoming real-world applications. And this has reiterated the importance and the need for getting access to the broader set of skills and cutting-edge technologies that we need to bring in to enable us to deliver exactly those projects. So in collaborating with the private sector in an innovation context, it's slightly different perhaps to how central banks have approached collaboration in the past. It maybe necessitates a different approach and conversation that covers maybe in procurement and how we co-create and engage. So in this panel this afternoon, we would like to explore some of these themes in some more detail through the explicit lens of collaboration and what this has meant for us to date, and exactly as we look to the future, what might this mean as we move forward. And I'm delighted to be joined in this conversation by two very esteemed guests. Can I introduce to you Catherine Gu, who is head of CBDC and protocols at Visa. I'm sure she needs absolutely no introduction, but let me give you some of her highlights. Catherine heads Visa's global CBDC and tokenization program, alongside blockchain protocol research and development, building digital payment solutions with central banks, financial partners, and global infrastructure technology company. And she's leading Visa's engagement on CBDC projects with over 40 different central banks, alongside private firms and other financial institutions. And we're also joined by Bob Wardrop, from the CEO of RegGenome. He's a professor of management at the Cambridge Judge Business School and one of the founding directors of the Cambridge Centre for Alternative Finance, a research centre investigating new financial instruments and challenges that emerge outside of the traditional financial system. He's also a founder and CEO of RegGenome, a spin-off business that works on transforming regulatory information into a machine-readable format. And I think with both of you here today, we get such a diverse set of perspectives about exactly what we mean and want to unpick when we talk about public-private sector collaboration. So perhaps I can leap straight in. We talk about it a lot. I often say that collaboration is a doing word. It's not a passive thing. So can you, perhaps, can I start with you, Bob, and talk to us a little bit about, from your observations and from the kind of different perspectives that your experience has brought, what you believe some of the ingredients for successful collaboration are?
Thank you. And I'd like to first thank Cecilia in the BIS for the invitation. And Cecilia, just so you know, I'm teaching a course next year called Geopolitics and Financial Regulation to the MBAs. Yeah, well, can I call you? You didn't answer. So, but that's okay. I think, look, you heard my bio, right? And it's a bit tricky. Okay, so you've got this, you're a professor in the business school. Brian Zhang and I started the Center for Alternative Finance. You spun out this business, and it's a commercial enterprise, right? And so what's really been important for me, and both the university and the spin-out company, is really making sure that our incentives are really transparent. What are our motivations here, right? Because people, particularly central banks, are very concerned about conflicts of interest. Are the incentives aligned here? Are we all kind of in some zone of agreement, all the participants in a project, where we're all going to be able to get what we want, and are we prepared to give to get that? So, for example, on the university side, right, the university produces public goods. And the public good it produces that's relevant to us is public domain information structures about regulatory obligations, right, rule books. The spin out, I mean, to build the data set that uses that structure, boy, you're dealing with venture capital and investors. And so you're really producing a private good. And so to be able to articulate transparently how you're contributing to the creation of a public good, and what the cross-subsidization is as a result of also producing, in some way, a contribution towards a private good, I feel is really, really important to get right. Because if you don't do that, and everyone around the table doesn't do that, when you get to the contract discussions about, well, who owns the IP here? You're not going to get through it. And so some of the people in the room I've dealt with on these issues, and it actually wasn't a huge challenge, because right up front, you're very transparent about why you're doing, what you're bringing, what you want, and recognizing that there will be a cost, that we are contributing to a public good. And frankly, that's good for the world. And that matters to our teams. I mean, my job is to assemble basically human capital, financial capital, reputational capital, social capital. If you don't have those 4 forms of capital in what you're doing, running any enterprise, you're going to have a problem. And actually participating in these projects actually can be really beneficial in terms of the challenge of, say, human resources. Data scientists are like hen's teeth, but they want to contribute to purposeful things. And so if you use it right and articulate the benefits beyond just commercial edge, I think this can be a really valuable project for parties to contribute and participate with central banks.
Thank you, Bob. There are a couple of things in there that I want to come back to, not least around kind of this upfront discussion. And I think it picks up something, Mariam, you were saying earlier about the importance of communication and transparency in exactly this kind of contracting and surfacing, kind of the preparation that goes into a successful collaboration. But before I do, Catherine, what, from your perspective and your experiences, you've worked with a huge number of central banks. What would you offer in terms of your perspective on ingredients for making that collaboration work?
Absolutely. And, echoing Bob, thank you very much for Cecilia and your team for inviting me to come here and talk about these sort of like really, really interesting topics. I think starting with just reflecting on all the conversations we've had, I think it's important to acknowledge we have come a long way, right? We have had a pretty successful collaboration to date, because if I think about how the whole innovation started, particularly on the blockchain side, we started with the crypto, which is very much a bottom-up kind of movement, grassroots movement. And then comes the CBDC, which is clearly top-down. And I think clearly in this part of the work, it wouldn't have been achieved successfully without the leadership of BIS, of many central banks on that stage. And where we're at today is really, if I look at tokenization, that's really kind of the convergence of the two, because clearly we're leveraging a lot of the technology stack, but with the help of the financial institutions and central banks to support us doing that. So I do think we have come a long way. And of course, having gone through this journey and working with many central banks, they all have very different personalities, I suppose. And I think some of the really important thing, Bob, you mentioned as well, it does come to incentives, right? It's all about the incentive mechanism design. And I think from the private sector, the thing we think about every single time when there's a project, an RFP, is about what is my return on investment. It's really as straightforward as that, because resources are finite. We can't, engage in all the different central bank pilots across the world. It would be a lot better if we can understand, what are the clear objectives that could be coming out of it. It doesn't necessarily have to be a product, but, we can measure that in terms of impacts it can have, what's that future trajectory could look like down the road, 3 years, 5 years. I think the benefit, at least from a Visa perspective, is we can think much longer term, right? Because we don't have to realize the gain as of the end of this year, but it would be, what does it mean for us in 3 years, 5 years down the road? So that's really important, just sort of defining what the objectives and the goals could look like for us. And I do want to touch base on a little bit on the IP thing, because talking to many people here around at the conference, I think lots of people nodding their heads when we're mentioning, IP has been a difficult thing. I think, it's important to sort of differentiate the part that should be open source, that should be public good. But I do believe for any project, there's always opportunities for the private sector, and that's thinking about what areas of IP could turn out to be private good for us in the future to commercialize. So if we think about it from a tech stack perspective, right, that bottom layer, maybe the infrastructure side should be the knowledge creation, the open sourcing part of the world. But then on top of that, private sectors can bring along different applications, different sort of products and innovations, and that's the opportunity that we would love to be able to capture. So,
yeah, can I just pick up on something Catherine said? I think is really important. Where we've had effective collaboration, the use case has been super clear. The problem you're setting out to solve. I'll use a real example of this, right? So we have a project with IOSCO called Machine-Assisted Capacity Building Standards Implementation, or a long, right? Short for MASI. And the challenge that the emerging and developing economy regulator members of IOSCO had is how can they efficiently benchmark their regulatory frameworks to the principles and standards set out by IOSCO. Super clear, okay? And so it became very clear of what we were going to build as a pilot. And that worked really well. Now, it took a year to define that super clearly and how that would actually evolve. Mm-hmm. But from the point that was nailed down, it went really well. And that will come into the public domain in third quarter. Okay? And we've got another project with a bilateral with a very large central bank. And I would say we took 6 months to refine just exactly, you know, what those project deliverables are really going to be with precision. So the more you invest up front to nail that stuff down, whether it's nailing the incentives, whether it's really clearly defining what you want to achieve and how you're going to achieve it, it's really worth that front-end investment.
What I'm hearing is you know, there is that real desire, isn't there, of going straight to the thing. I think it was Lukasz earlier who sort of said, roll his sleeves up, get your hands dirty, start the building. But I think what I'm hearing from both of you is actually the really successful collaborations, the ingredients, is actually not rushing the fences maybe, and taking the time to really understand the specificity of the use cases. What are we coming together around? Taking the time to understand which bit are we contributing to here in the tech stack, and what does that mean in terms of how we all might come together around this. Sort of building out sort of a set of rules of engagement. And I want to tap on that a little bit further, if I may, Bob, because one of the things we were talking about in preparation for our discussion today was, you know, that sort of zone, you call it ZOPA? Yeah.
Okay, so, you know, in a business
I will let
you take a negotiation course and you talk about ZOPA, right? How do you get into, you know, the zone of, of possible agreement? That's the ZOPA frame. And basically, it's the same thing here, right? Mm-hmm. Everybody has to understand what the boundaries of the ZOPA frame are and trade their way into getting into it, and then you're there.
Yeah. Easy.
And paper.
So one of the things there are many strands that I want to pick up on and kind of get your reactions to that we've heard from the last few days. But one of the things that before we get to that, and before we also come to the audience for questions as well, so please start thinking about your questions because we will have time, I will make sure we have time to get to them, is what can we learn from each other? You know, we have a depth of experience, whether it's from academia, the startup world, much larger commercial enterprises. What do you think central banks and that wider ecosystem can learn from each other in starting to make those small steps, those giant leaps, and how we start to support? I think it was a point that Cecilia just made in the previous session about this knowledge sharing and how we enable others to come up that curve of experimentation and learning as well. Catherine, please start.
Happy to start. Yeah, I think actually to categorize that, it's sort of learning about each other's business model, so to speak, right? Because I think it's also quite a learning curve, and especially dealing with different central banks. As I said, they have different objectives, different time horizons. It's really understanding what's, from their perspective, you know, what's a success metric look like, and therefore what could be the business model for a central bank to achieve, and therefore how can the private sector to contribute towards that dialogue. And the same thing, I think, from the central bank to get more familiar with us. And I think, you know, Visa, of course, have worked with different central banks in different products, but when it comes to specifically on CBDC and tokenization, that's a whole very domain-specific subject. So it always takes that new learning curve to kind of get to know one another. And I think one of the good examples that I could use is, for example, well, actually two. So with the Central Bank of Brazil, we worked on the Lift Challenge for a whole year. And that was by far the most fun, the most sort of like engaging sort of experience I've ever had. I remember, you know, we're having meetings once every 2 weeks, really engaging, really talking in a very open and trusted way in that forum to talk about, okay, how do we really ideate about a specific use case? we were looking at a really futuristic sort of use case in around tokenization of factoring finance, and that's like back in 2022, and this is just way off, right? But it was very interesting to engage in that conversation because we understood each other's sort of goals, so to speak, and therefore we can collaborate successfully. The other example actually is closer to heart is the Project Rosalind, where I was personally as the advisor to that. And I think that was also a different but also very intimate sort of learning experience, because for that is rather representing the company per se, is from the combination of the personal and professional level to be engaged in part of that, and how we can contribute the dialogues in a meaningful way from a sort of a technical expertise, I would say, to bring to the table, and what kind of outcomes we can see, which is quite satisfying. So I think having the very close association dialogues is, clearly it's going to be very important. So yeah.
And again, it's the trust that underpins it.
Absolutely.
Yeah, I think the partners in these projects can really help propagate very powerful spillover effects. And I think there's two that I would reference. I think one, I've heard a lot about inclusion and user-centric and the 8 billion people. How many members? 62 here, central bank, 63? Where are the other 100? Because there's a lot of the 8 billion that don't live in the jurisdictions of the 62. And I know that we certainly, from the university side, I gave a series of, I was with central bank governors in the COMISA region in November. They're really working on the cross-border payment problem because they're trying to figure out how to integrate. They're struggling with the correspondent banking system. And yet I look at these projects and they want to know, they're trying to figure out how to learn from this. They're trying to figure out how to plug into this. And that's how you get to the 8 billion. So there are certain partners can help that reach and help disseminate that learning, especially if you're in the project. You know that project. And that can really inform the thinking of another 100 countries. Okay, that's the first thing. The second thing, so I deal with also, tier 1 banks, systemically important banks, right? You'd think that it would kind of be a no-brainer to come up with a common standardized way of representing regulatory obligations, right? Because they've all got their own, it's a Tower of Babel. Okay, they've all got their own taxonomies internally and everything else, and they've tried to self-convene to solve the problem. And it's failed, because one bank's a little more ahead, and maybe they want to charge the other banks for the access to their data. They can't do it, but they love to herd, and these projects can sort of reference where the herd should be or where the herd should go. And that's really an important spillover effect because of the convening power. And that can make a big difference to get the other side, I'm going to call it the other side, to move in a collective unison that they actually, in many cases, have difficulty kind of self-convening. So partners can help that. I will tell you there's a tier 1 bank where that tier 1 bank wants to know and they see the regulator, and it really matters a lot to them. And they listen, So
I want to kind of steal, if I may, from something that sort of Josh was talking about, but I want to kind of spool forward. So, we've talked a lot about, how your insights from how collaboration has worked and worked really well. I want to kind of ask you, sort of for the counter, if I may. First of all, ask you where your experience of what are some of the speed bumps, the blockers that challenge that. Because I think what this panel is doing is starting to create a set of lessons learned for how you might think about this in your own practice. But then I also want to pick up a question, if I may, from a panel that came up yesterday, and I think it was Stella, who mentioned this sort of notion of, fatigue potentially creeping in around experimentation and what that might look like. And I noted, my ears pricked up because obviously I knew I was convening this panel this afternoon. And so I looked around the room to see how the audience, how you responded to that. And I saw a few sage nods, and I saw a glimmer of recognition that went across faces. So if we think about kind of some of the really challenging questions that we have exposed over the last day and a half, that warrants even more focus and attention and more collaboration. But is there fatigue creeping in? But before we get to that question, I know I bamboozled you with two at once. I'm sorry, I was getting overexcited. But before we do that, maybe you can talk about some of your experience, without naming names, of speed blocks or bumps in the road that maybe inhibits collaboration.
I think maybe starting with a really tactical one, some of the RFP, RFI we receive is very short time length. It's like you have to respond in 2 weeks. That sort of thing is actually a real speed bump for us, because just getting all of the legal and everything sort of approved, that, it's very rare to happen that quickly. But I think outside of that, I think my answer is probably quite predictable, because it does just go back to understanding exactly where, IP structures lies, and, as said, we're developing product that could be commercialized one day. We do want to collaborate very closely with the central banks and the public sector. Now the question is, to what extent is that boundary is defined? And I go back to emphasizing, I don't think it's kind of a 0-1 sort of thing, in the sense it's either IP owned by one entity altogether or the other. I think that can be more finely sort of defined, such that then we understand the area that we have the freedom to operate and to innovate. Because otherwise, there's always a constraint from the private sector to say, do we really want to bring our ideas forward if this is just going to be, given away? And hopefully the answer is not. But I think this is where we can do better. Projects specifically for each one of them, exactly what that scope looks like. I think that will help a long way. So yeah.
Thank you.
Yeah, a couple of comments. One, procurement. Because the procurement, it's not built for this, what we do. Mm-hmm. It's not fit for purpose. And so what you, I look at certain people and So you just have to, you deal with it. But boy, it's a friction. Mm-hmm. I think that's one. And the other one is an education. So, a lot of central banks would like to do a research partnership with the University of Cambridge and with MIT but they don't sometimes understand to those universities what research is. Because actually what they want to do is development. But development isn't interesting to top academics that want to really contribute to what they call the academy, with papers and top peer-reviewed journals. And so I've had to go through some different education exercise to parse out what is the true research kernel here, because there usually is some. Because they're used to dealing with, financial economists, and we do a paper and it's going to go into the, the review of finance. I've done one with John Frost, right? That's the traditional way research collaboration would work, but that's not technology research, right? That's a different world. And so there's an education thing there that takes some time, because unless Paula Buttery, who's runs a computational linguistic research group in the computer science department, if she doesn't have a really knotty problem to deal with that's going to drive papers, I don't even think that would get through the research office of the university if it's too applied. And so you have to figure out how you're going to take the kernel of what's research, and then there's that development piece, because frankly, the banks, they want to apply this stuff. It's nice it gets into a paper, but they want to do something with it. And so you have to figure out how to educate and put these things together to create that combination, again, that works to deliver what everybody wants. That just takes time. So that's a speed bump. That's a time bump.
And that's interesting, isn't it? Because you referenced it in your remarks as well, Catherine. There is a degree to which we want to keep pace, we want to move quickly, and we want to share learnings. But I think what you're both counselling for is the investment of time up front to understand different perspectives, understand the kind of outcomes that maybe different groups want to achieve, is a hugely important and maybe necessary investment that ultimately will enable you to move more quickly. And I think it picks up on actually the quote that Andrea Mechler made this morning about, it's the outcomes rather than the speed. But I will now come to that second question that I tucked in at the end before I come to the audience for any questions you may have. So we did hear yesterday from Stella around, and I've name-checked her a couple of times, I hope she doesn't mind, about this sort of creeping sense of maybe, a fatigue coming through. What are your observations or reactions to that? Does that resonate?
Well, I admit I nodded my head when that was being mentioned yesterday. I think yes, because I think as we're doing more projects, again, talking specifically in the CBDC, right? I think a lot of the banks, a lot of the sort of the payment providers have been doing experimentation for the past 5, 6, 7 years. So that's a decent amount of time we've tried to just innovate and experiment. At some point, we need to have a much clearer sort of like business, as I said, ROI that we then need to present to our board and to really convince that there is something real to that. So, and it's not just for, I think, central bank related pilots. It's actually any sort of conversation right now we're having with even the private sector ourselves that they just directly ask the question, is this for real value, or is this just another POC? And I think it's a good thing, right? Because it does put kind of more pressure and sort of to really think what is the real value add you are bringing to the world, if any, through this particular exercise or experimentation you might be doing. So I think fatigue to some extent probably is a good thing, and we can then focus and more narrow, at least from the private sector, to think about where best we can put the innovation efforts on. Now, having said that, I think that's probably different from a central bank perspective, because from the central bank, I mean, I could imagine this is more from the public sector, public good perspective, how we can create a much bigger kind of a platform for knowledge sharing. So I think this is where different type of participants of the ecosystem can help to all join together. And this, I think there's a level of diversification as well, because it's not expected the same type of actors have to be involved in every single different type of projects. It's really like, depends on the specific use cases and the scope. This is where you can get different value adds, I guess, from the private sector. So yeah.
Yeah, I'm going to stick my neck out a bit. I think it's going to be really hard to implement a lot of these POCs. And I think it's really hard. So when we were in the Cambridge Center for Alternative, we see this problem. There was no global repository of structured regulatory data representing regulatory obligations. Doesn't exist. And there's a need. And so I went and I talked to philanthropic funders. Could you fund building that? And they said, well, what's that going to cost? $25 to $50 million. And it'll be $5 million plus a year will be the run rate to maintain it, because the regs are changing all the time, and blah, 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 blah. And they said, are you kidding? We can't fund that. So when I see what it's going to take from a funding perspective to go from the POC to implementation, and what the real price tag is likely to be, I really wonder whether a central bank or even three are going to club together and write the check. So that means you need to think about an alternative implementation model, ideally where the central banks or the BIS, whatever that can, where they have some control and influence on how that is implemented. But that's a different role than saying we're going to do it. That's more nuanced, because that's a model design. It's not the technology model, it's the implementation model. And that involves finance, and that involves a whole bunch of stuff. And we did hear about the geopolitics, and we did hear, I think you got to come up with a model, and I'm just being honest, I haven't seen that model.
And maybe I can just add a little bit, because I think the fatigue is not necessarily because of POC, it's more the fatigue to uncertainties to a large extent. Because if it's becoming a guess game, right, and we don't know where the future could be, but we're just going to experiment across different paths just so that we can sort of shop around and get all the flavors, I think that's where the fatigue comes in. But I think, again, certain companies, hopefully the more resourceful ones, have longer term perspective. But if you do inject a stronger sense of certainty in, say, I'm doing this in phase 1, phase 2, like in a very methodological approach, then I don't think that's a problem, actually. It's if we know what that kind of long-term future could look like, so yeah.
Thank you. We have 6 minutes before I will bring us to time for our final session of the day. So do we have questions in the room? Oh, now I've got a quandary. Do I go to my boss or do I go to a guest in the room? I'll go to Nick and then I'll come to Cecilia.
Thank you, and thank you very much, Cecilia, for give me the floor on this. Yeah, exactly. So, so Nick from Swift. I guess I see innovation slightly differently, and I'm keen to get the panel's reaction because I kind of almost view innovation inherently as a collaborative sport, and in a way, therefore, that kind of really needs two ingredients. One is a challenge that people really want to solve, and two, a group that wants to solve it and wants to come together to do that. And in that, I also think there's therefore also a bit of an article of faith because you want to get somewhere, but you don't necessarily know whether you'll get there or how you'll get there or even whether you'll actually get there in the end. And so I'm just wondering whether the panel agrees with that as an approach to innovation and how we instantiate that.
Thank you, Nick. Catherine, Bob, who'd like to take that?
I would say 100%, Nick, and I totally agree because without the spirit of collaboration, I don't think we can really get far. I do think it depends on the stage of that development in the sense, again, maybe 5 years ago, we really don't know anything and you need a lot higher faith factor in that collaboration versus where we're at today. I think it's a combination of faith and, as I said, I think a level of certainty would be preferred, in where we're going with it. And I think, throughout the 2 days, we've heard lots of things on tokenization example, and that's a very good direction, right? Because we know that there is certain demands from different sectors. There's still uncertainties, but now we're narrowing down. So I think that collaboration can become more effective because of that, so yeah.
Yeah, and I would also agree. And I think what the projects are doing is that they are informing the participants. And so they're getting a sense of maybe where their roadmap should go. Like the innovation isn't ending when the project ends. I think that's really important, right? There's a continuing, and that's really, I think, a lot of the incentive. If I'm you, probably informing the shape of where things or what people are really thinking about and how is really valuable, and that's driving some decisions internally after those projects end.
Absolutely, yeah.
Thank you. Cecilia, if she has a moment, or yes?
I have a question about short-term versus long-term incentives. So my question to you, Catherine, is, and feel free to speak not about Visa particular, but sort of from a private sector perspective. How far do you think the private sector is willing to participate in something that is probably good for the private sector in the long term from a profitability perspective, but may not be so great in the short term, and it might sort of reshuffle the landscape a bit. So I'm interested in the sort of the appetite for taking some pain to the profitability short term versus creating something good long term. And I guess my question to you, Bob, you gave a sort of sobering message around costs and building things that is important, but the money is not there. I've seen wallets open up when there's a real crisis, and the question to you is, do you think we need some sort of crisis in this field before we get what we need?
Great questions. I like mine. Go ahead,
Me too, I like mine too. That was a very, very good question. I think hard to quantify, but I'll try my best. I speak from, let's say, our Visa's blockchain experience. We started back around 2018. Good news is we're still here. So, we definitely do take a long-term perspective. Reason being, what does it mean, right? If we don't do anything and if we just give up on that innovation, we know it's still going to happen, whether with or without us. So it becomes a much more strategic question for us to just figure out exactly what we need to build versus whether we should or not. And I think the same maybe can be applied to AI, quantum computing, things like that. So depends on the complexity of different specific domain. I think that timeline stretches, can be significantly. Hopefully for blockchain, we're close, right? Hopefully that we're getting some real use case, some real convictions. That's my hope, at least, that we can bring to fruition. And I think it also depends on if you are a big company like Visa versus a fintech. And I give a lot of kudos, actually, to fintechs doing exactly this, because I keep thinking about a lot of the use cases which requires a lot of resource and scale. And hence, for startups to really stuck the neck in this and keep on doing things, I think it requires a lot of conviction, and that's great to see. So.
Yeah, I'll just answer, because that conviction, by the way, is hard to maintain if you have very impatient venture capital money funding your business. Because you take VC money, the second you put it in your bank account, the clock starts on the ROI. So you just got to know the game. And it's a tough game. With respect to the crisis, yep, the crisis will do it. The question is, what will get everybody to move and open up the wallets? Like, how close do you have to get towards the crisis? And it's not unique to this situation. I mean, I'm dealing with a very large bank for a long time, with a team that understands that the infrastructure they've got, I won't say what area of the business, but you can imagine if it's the deals, and they are wrestling with, do we do tactical patches, or we do kind of foundational, like get rid of the DC-9, okay? They might actually buy the new jet, but it's in the balance. And they know if there was a crisis, they'd get the jet in a heartbeat. So they're trying to figure out how close can they get to the point where the DC-9 falls out of the sky without it actually falling out of the sky, and that's the tricky bit.
Okay. Oh, I've got time for one more question, because I do want to keep us to time. So gentleman right at the back, Mark, I think.
Thanks. It says takes two to tango, and Bob, you spoke to this a little bit, but I was wondering what's, if any, is the role for universities and research institutions in this sort of innovation environment? What are the challenges? Is there any value, or are they just a third wheel?
No, I think they're very valuable. Again, I think that they can help with spillover effects, because again, they're dealing often with emerging and developing economies, for example, right? But in terms of, it's about finding the kernel of real research that university can produce. Remember, that a good research university is very focused on that, but they're also focused on societal impact. So if you can combine those two things in these projects, I think it's very, very powerful for the university and then their stakeholders and communities around them. And often in different countries, you'll see the governments can be quite close to some of those universities, and that can provide another linkage of collaboration, indirect, that these projects can drive. So I really think it's also good for the researchers themselves to get closer to the real use of this stuff, because it does inform, in many ways, ideas about their own research, right? I mean, the idea of generating social capital, serendipitous encounter, and how do you arrive at new research ideas and strands is very, very valuable.
Thank you. So I'm going to attempt to wrap up this conversation. I think we've heard in the first half a huge amount, actually, about a bit of a playbook, really, for fostering the right kind of conditions for innovation and collaboration, whether that is with private sector, whether that is with research and academia. And I think it comes through to really understanding each other, taking the time for communication, surfacing that, and really getting this sort of the space in order to then move really quickly to execute on those things. We also, I think, heard about the importance of thinking about how we move into the future and what experimentation needs to look at into the future, not just in terms of the bill, but I think, Bob, you've talked about those spillover effects as well. And we've had some amazing questions from the audience as well. So thank you very much indeed thank you to Catherine, thank you to Bob, and thank you all. Thanks very much.
Thank you all. Last but not least, I am very excited to announce the last session of this year's summit. This is a conversation on AI with our special guest, Professor Yuval Noah Harari, historian, philosopher, and best-selling author. The discussion will be moderated by Ms. Cecilia Skinsley, head of the BIS Innovation Hub. Before proceeding to this last session and to Cecilia's final remarks, I would like to extend my personal thanks to all the speakers for the thought-provoking discussions, to all of you for being such an incredible audience, and to my colleagues for making this event possible for you. Now, without further delay, I will leave the floor to Cecilia.
Thank you very much, Kudruta, and it's a great honor and pleasure to be moderating this session with Professor Yuval Noah Harari. I don't think he needs actually a presentation, but still, I'll do it. Historian, philosopher, best-selling author of books like *Sapiens: Brief History of Humankind*, *Homo Deus: A Brief History of Tomorrow*, and *21 Lessons for the 21st Century*. 45 million books sold in 65 languages. That's a tall order to try to reach. He's considered one of the most influential public figures of our time in today. Listening to Professor Harari is fascinating. I promise you will have some chances to ask your questions and thoughts directly to him. But I sit in this chair, so I get to start. He has a wonderful take on history, I think. He says that history is not the study of old things, it's the study of human change. And I think we have alluded to that a lot this afternoon, that the artificial intelligence and also other technological changes or possibilities really lead to possible changes. So who else would be better to give us some thoughts, food for thoughts as we wrap this conference up and go to our respective homes again. So you all, great to see you here. We have discussed at this summit where AI is going, where financial firms and central banks are planning to hope to do with AI, but also how they're planning to manage risks that they can see stemming from AI. And I hope we can have a discussion around sort of zooming out from the world of AI and the financial world and think about more opportunities and threats for our broader society. But if I may, I've heard you say that you don't see any serious attempts to regulate the financial system as we see it in the world, to actually be at a level where humans can understand it. And given that starting point, and given the issues around AI, it's not looking like the financial system is going to get any easier to understand. If you think that this is going to play out, how would you think that regulators and supervisors should think about AI in the context of the already complicated financial industry we're operating in?
Well, that's a very important question. And I think what we should understand is that people need to understand finance. At the present moment, I think that maybe 1% of the population really understands how the financial system works. What happens if this number goes down to 0? No human being, no president, no prime minister, nobody in the central bank understand finance anymore because AI has made it too complicated. This could lead to a political and social crisis of a kind we've never encountered before. It could lead to power shifting from humans to algorithms, to alien forms of intelligence. And maybe I'll start by saying what finance is. What does the financial sector do? You know, farmers grow food that we eat. Workers produce the textiles that we wear. What does the financial system do? It creates trust. This is the product, ultimately, The product of the financial system is trust. Money, for instance, is a mechanism to create instant trust between millions of strangers. I go into a shop, I meet a stranger that I never met in my life, I give them this piece of paper, and they give me food in exchange. And bonds and shares and so forth. People have invented so many different financial devices over history, but what they really do is create trust between millions of people so they can share their resources, their knowledge, and work together towards common goals. Now, until today, the only entities that could understand financial devices like money or bonds or shares and could invent new financial devices were human beings. Horses did not understand money. We bought and sold horses for money, but the horses didn't understand money, which is why they couldn't, for instance, unite 1 million horses together. Now, AI is the first tool that we created that can actually understand finance better than us. Because, finance in the end, it's the easiest thing for an AI to really understand. It's only data. It's only information. To wash dishes, AI needs to do something in the real world, in the physical world. That's difficult. But to understand finance, it's only information in, information out. Now, the danger is that AI would be able, on the one hand, in the hands of bad actors, AI could destroy trust between people. And on the other hand, the main trust will be between different AI systems. So just imagine a scenario when most of the financial activity in the world is being done by AI. Humans have lost the ability to understand most of the financial system. It's too complicated for our brains. And there is a financial crisis, and no human politician is able to understand what is happening. We have to rely on the AI to tell us what is the crisis and what are the potential solutions. The political implications are dangerous on different levels, but most clearly, it's really giving control of a very important part of the world and a very important part of politics to a non-human intelligence that we cannot regulate and supervise.
So I take from this that this is a very sobering message. So let's unpack that a bit further. You can say that, okay, well, only 1% perhaps understand the financial system. I would claim that most of us happily step into an aeroplane having very vague understanding of how that works. But we trust that people who don't even know each other, we certainly don't know them, take us from A to B without the plane crashing. But it sounds from what I hear you saying that this last percent, if that goes down to 0, then we are all in deep trouble. And one way to create a catchphrase from what you're saying is no further AI without further trust. And I would say that we might be in a lucky situation that we are at the early phases of exploring AI, or at least for the moment assume that. You have warned that if we're not careful, decision makers in the future might sort of be reduced to puppets and the real decision makers are just algorithms. But if we don't want to get on that path, history is not sort of, or if the future is not sort of predetermined, we can actually decide where we want to go. What do you think we need to do now with the tools we have at hand to make sure that we don't end up in that situation, neither in the financial system and certainly not when it comes to decision making as a whole in our countries?
We need to prevent AI from becoming completely unfathomable. That if we give it a lot of power to make decisions about human beings, about human society, we need the ability to understand it and to regulate it. This is the crucial condition, and there is a very big difference between a situation when 1% of humanity understands something and 0%. That's a very big difference, and your example with the airplane is perfect. I mean, yes, this is why we have experts. We trust experts in many different fields, with airplanes, with medicine. It's the same with finance. We don't need everybody to understand everything. This is really impossible. But if you think about, for instance, the one of the last big financial crises, the one of 2007, 2008, it started with a failure of regulation over new financial tools, new financial devices, the CDOs, that some very, very bright people invented, but almost nobody understood, and therefore there was an oversight of regulation. Now imagine a situation maybe in 10 years when AIs create a new financial device which is orders of magnitude more complicated than CDOs. You need to go over trillions of data points to understand this financial device. We can't do that, but the AIs can. For a couple of years, it works perfectly well. It generates a lot of trust. It generates economic growth, profits, and then something goes wrong. And nobody knows why. And again, we can ask the AI to tell us what has happened and what to do about it. But this is a very dangerous situation. And also, even if it gives us good advice, it raises a question about whether the public will continue to trust the political system. Like, you vote for politicians who are supposed to make these decisions, but they are no longer able to understand what is happening. We already are in a situation when the public is losing trust in experts, in politicians, in democratic institutions. This could really exacerbate this crisis of trust between the general public and the supposed experts and politicians that hopefully understand what is happening and regulate it.
So going to your role, your day job as a distinguished historian, I mean, I get that there's risks around artificial intelligence. We could possibly be the greatest transition that the world has faced. But as an historian, you know, this is not the first big transition we have seen in the world. Perhaps the biggest, but certainly industrial revolution, general purpose technologies, the advent of modern democracies were pretty groundbreaking shakeups. A couple of revolutions thrown in and wars, pretty serious shakeups. So I guess my question to you is that what can we learn from the past here to try to avoid having to land in that sort of situation that you're warning from? As an historian, are there good examples from history where people actually manage to avoid getting things too wrong and that we can take inspiration from?
Yeah, I think humans are extremely adaptable. And, you know, everything we invent has both negative and positive potential. You invent a knife, you can use it to murder somebody, or to save their life in surgery, or to cut salad. So there is always both of these potentials. And over time, humans learn the dangers, and they understand how to employ the technology or the new structure in the best way. The problem is the transition period. The problem is the path. Even if in the end we get it right, on the way there, we often have to go through dangerous and failed experiments. So let's take the Industrial Revolution as an example. That when machines started to transform the economy and society in the 18th century, the 19th century, there are a lot of doomsday prophecies about what the machines will do. And looking back from 2024, we can say that in the end, we got it more or less right. We learned how to use steam engines and electricity and trains in order to build more prosperous and even more peaceful societies than in the 18th century. But the big problem was the failed experiments on the way. Modern imperialism, for instance, was a very big failed experiment in how to build industrial societies. There were a lot of people in the 19th century that argued that the only way to build an effective industrial society was to build an empire. Because unlike previous agricultural societies, which were more or less self-sustaining, an industrial society needed a lot of raw materials and global markets, and the only way to do that was to build an empire. So imperialism, with the millions of victims and the terrible things it did, was really a failed experiment in how to build an industrial society. Communism was another failed experiment in how to build an industrial society. And that a lot of people in the 1920s, 1930s, even later, thought that the best way to build an industrial society was what the Soviets were doing. And it took decades and tens of millions of victims to realize that no, this is not the best way to use electricity and steam engines and trains. Nazism was another failed experiment in building an industrial society. Now, if we had to go through these kinds of failed experiments with imperialism and totalitarianism and world wars in order to learn how to make the best use of electricity and the internal combustion engine and trains and things like that, what will happen in the 21st century when we have to learn how to use far more powerful technology? Now, AI is, again, potentially orders of magnitude more powerful than anything we saw in the Industrial Revolution, because AI is the first tool in history that can make decisions by itself and can create new ideas by itself. Steam engines could not decide how to use themselves. We decided what to do with them. Even atom bombs could not create new ideas. But AI can make decisions by itself. This is the very definition of an AI. It's a machine that can learn things we don't know and can make decisions independently and can create completely new ideas that no human being ever thought about. Learning how to use these tools in a good way is likely to be more complicated than learning how to use steam engines. Now, we can say that in the end, it will be okay. We'll get it right. As a historian, I'm concerned about the way, not about the end result. If we have to go through another cycle of empires and totalitarian regimes and world wars based on AI, this is very, very bad news. So,
well, it sounds like to see a silver lining in this. We will get it right after we've tried everything else, imperialism, communism, Nazism, and maybe to give a further positive spin is that we and our children, grandchildren, etc., will have knowledge that they didn't have back then.
Yeah.
So let's hope that we could sort of fast forward through that period or avoid it altogether. And I think one of the ways to do that is to be mindful of the risks. Technology is fantastic, but used in the wrong way, it can be very dangerous. I think I have some people in the audience who might disagree that it's inevitable that AI will take over decision-making, but it will certainly influence decision-making. We have discussed whether monetary policy decisions is possible to automate. The answer is yes, but as human beings, we always want to have someone accountable or someone to blame. And that's a deep human feature in us that we ultimately we want to interact with one another rather than a machine. Machine is helpful, but we are still human enough to want to interact with one another at the end of the day. I think I know the answer to your question now, given that your view about what the financial crisis, the upbringing of the financial crisis some 15 years ago, but still, I'll have a shot at this. So the mission of the Bank for International Settlements is to support central banks through international cooperation to pursue monetary and financial stability. I think personally the beauty of central banks is that they are not as dependent on short-term political decision-making as many other parts of the public sector. So central banks, if they operate well and has a well-working mandate, they can actually take the longer perspective. Do you think that there could be a role for central banks in sort of drive international cooperation where AI is used with care, that the central banking community can sort of show good practice, if you will. And sure, there will be others who has another different agenda, but that is something that, well, we will have to leave to the law enforcement agencies and ultimately military defense. But do you think there is some sort of way out of your rather dire forecasts?
Yeah, absolutely. Again, if it was doomed, there was no point having this conversation.
That's reassuring, thank you.
History is never deterministic. Yeah. We always have options. The same technology can always be used in different ways. Again, looking back to the 20th century, you look at industrial technology, it was used to create totalitarian regimes, but also liberal democracies. You look at North Korea and South Korea today, they have access to exactly the same technology, using it in a very different way. Now, how to make sure that we are using technology wisely, I wouldn't trust some technological gadget to do it for us. We need to have humans in the loop. But I wouldn't trust any individual geniuses or charismatic leaders either. The solutions that we again and again see in history is institutions. I know that people often find institutions again, complicated and bureaucratic, but this is the best thing that humans have managed to come up with. And we need to build good institutions. This is the only thing that can really protect us from the most dangerous potential of AI and also other technologies. I would say that two things that are very important for a bank when coming to think about the regulation of AI is, first of all, to make sure that the AI remains accountable and understandable. If we reach a point when we can no longer understand it, then at least in democratic societies, this is really the end of democracy. If a democratic public can no longer understand and hold someone accountable for financial decisions, this is a very large part of what politics is about. It is about finance, it's about the economy. And we, of course, will need to rely also on technology to help us understand AI, but we'll need to keep humans in the loop. And for this, we need to build good human institutions. The other point is to keep the focus on the issue of trust. And going back to what we spoke in the beginning, money is really trust. Money is not made of gold or silver or paper or anything. Money is trust between people. This is the goal of the financial system. So when you come to regulate the financial system, the key question is, how do we make it easier to create more trust between more people? If we achieve this, then the goal is achieved.
You said we should keep humans in the loop. I think we should be more ambitious than that. And let me, before I open the floor for questions from the audience, just point out one thing that is, I think, strong characteristics humankind, which is that we have dreams, and some things that we do are not entirely rational, and some things can be outright a bit crazy or be revealed as a pure accident. Let me take some examples. The idea to put a man on the moon wasn't entirely rational, would probably not have survived today's budget committees, but it worked in the 60s, thank God for that. Accidental discovery was the discovery of penicillin, or Alexander Fleming was a very good marketer, but certainly a very inspiring example. I don't think personally that AI could replicate these sort of events that are not entirely rational or sort of happen by accident. So from where I see it, humans will still play an important role to create these sort of quantum leaps that these two examples give. Or do you think that AI will take over those as well?
I think that a lot of people say that AI will never be creative, but it is already very creative. You look at examples like the game of Go, which was one of the first time that really the world woke up to the age of AI. Go is a board game, a bit like chess, but much, much more complicated. People have been playing Go for 3,000 years in East Asia. It has been considered for thousands of years one of the most important art forms that every cultured person should know. Entire schools of thought about how to play Go and different strategies. Then AlphaGo came along, and within a few weeks or months, revolutionized the game. It started playing Go in a way that no humans ever thought of playing for 3,000 years. What became clear is because we are organic beings that evolved by evolution, our imagination and the way we think is limited to, let's say, a certain area within the landscape of playing Go. And for 3,000 years, we only explored this limited landscape, this limited area. AI is not organic. It doesn't think like a human or a chimpanzee or a dog. It makes decisions in a completely different way. And within a very short time, it started exploring completely new or alien areas within this landscape of Go. What's true of Go is true of more and more areas in science, in art. You know, AI is now composing music. So people say, yes, but it only learns from previous human symphonies and poems and songs. That's true for now, but this is true of us as well. A human composer also relies on previous experience or previous exemplars. But already now, AI is beginning to explore new areas in the landscape of music. And maybe most important to understand is that AI is just a tiny baby. The AI of today is just if you think again in evolutionary terms, it's like we are 10 years from the beginning of organic evolution on Earth. If you go back 4 billion years ago to the beginning of organic life, so think that you are 10 years from the emergence of the first life forms. And can you even envision dinosaurs or human beings? Now, AI is just beginning, but its evolution is much, much faster than organic evolution. It is millions of times faster. So if the AIs of today are like amoebas, we might encounter the AI Tyrannosaurus Rex within a decade or two. And we have no idea what it will be capable of doing. Again, all these discussions of AI, 10 years ago, nobody except a very small community of experts was talking about AI. So think about the previous 10 years and try to imagine where we will be in 10 or 20 years. And in terms of creativity, I have no doubt, given what we already know, that AI is capable of maybe a different kind of creativity, but precisely because of that, it's really going to be a game changer in so many fields, because the initials AI, people think it stands for artificial intelligence. But there is nothing artificial about the new forms of AI. They are developing on their own. It's better to think about AI as standing for alien intelligence, because it really thinks and creates in an alien way, a different way from us. And this is even true of finance. Again, I think about financial devices as a kind of art form. The first person who came up with the idea of a bond or of a currency or of Bitcoin, this is a sort of art. It's very creative, very imaginative. So I think we'll see AI creativity also in this field coming up with new types of financial devices that no human being would ever imagine creating.
I would say that those financial products that you pointed out to, they came up because they satisfied someone's need. And I think that is something that is hugely important among human beings, that we are very good at figuring out, what needs do we have, do we want to satisfy? And sometimes we don't know that we had needs that we wanted to satisfy, with Steve Jobs with his iPhone, the Explorer. But I'm more optimistic than you, and I'm going to stick to those institutions, actually, because I think I agree that those are our best way to organize and coordinate sort of AI development in a responsible way. Not everybody will join that journey, but if enough people do it, enough institutions are on that journey, I still think we have a good shot. I certainly like being an optimist more than anything else. But let's open up the floor for questions from the audience, and please state your name. And I think we have a new record in the number of. So let's start with the gentleman up to the left side, and please state your name first, and then your question to Professor Harari.
Thank you, Cecilia. My name is Hiren. Thank you very much to Professor Harari as well. It's been really privileged listening to you. So my question really goes in the same vein of our recent discussion is about human versus AI. The human is more intelligent, ingenious form, right? I mean, it's an organic form. We know how to sustain, and we sustain over last years, the climate crisis, so where we are today, and if you look at the future, we cannot look at the AI in isolation, right? There are other external factors to play, and in particular, the climate, right? The sustainability aspect. AI is feed on electricity. Electricity then feed on these sort of natural resources which are depleting and these kind of things. So how do you sort of see that, AI is sort of surviving, or AI is sort of overcoming those challenges which humans have, and humans still have the ability in sort of to go through those kind of another round of challenges, So just wanted to get your perspective on this.
That energy consumption is going to hold back on the AI development?
Well, energy consumption, as we move slow, right? As we actually increase more capacities, there will be more consumption, right? And if we actually start feeding more energies and electricity, I think it's going to have the sort of downside effect on the environment and the natural resources and all of these things.
I see.
So somewhere actually it's going to come to the halt, right? Now, human can survive without electricity, but AI would not, right? I mean, that's a crude example, probably.
Your
I would just
question again is?
Well, I think I understood the question.
Okay, good.
And on this, I maybe have something more positive to say. And I'm not against AI. I don't think we can just stop developing it And I think it has a lot of positive potential. One of the positive potentials is to help us deal with the climate crisis and with the energy crisis. I don't think that it's given the current political and economic situation around the world, solving the climate crisis by stopping all economic growth is impossible and unwanted, because there are billions of people around the world whose living conditions need a significant improvement. And you know, if every person in India, in Africa, in South America enjoys the same living conditions as the average person in Europe or the United States, with current technology, the ecology will collapse. But on the other hand, we can't say to people in India or in Africa, no, you cannot enjoy what the Europeans have. So we need to develop better technology, more eco-friendly technology, and we need to do it fast. And this is something that AI, when it's used correctly, can certainly help us with. The basic understanding is that there is no shortage of energy in the universe. We just don't know how to tap it and how to use it in the best way, in the most eco-friendly way. And I think this is one field where AI can be extremely helpful.
Thank you. Let's take a question on this side. So why don't we take one over there? Yeah, you get to choose. If you need to hold your hands up, otherwise you will lose the chance. That's nice.
So thank you very much. It's a pleasure and an honor to be talking to you. Your books are fantastic. So Gemini happened. Google's Gemini. This was a couple of months ago. Many would argue that there was a decision to put the finger on the scale so that the outcomes that individuals would see when they were using Gemini were much more PC. I don't know if everybody in the room is familiar with this, but you would put in, show me pictures of the founders of the United States, and you would see an African-American woman. I was in Silicon Valley when this just happened, and I was talking to different people out there, like, where does this go? Because in the end, these are individuals that are prompting, seeking information, and getting feedback from algorithms. And some of the libertarian points of views that were shared with me are, in the end, individuals are going to see what basically the AI has been trained that they want to see. It's the human bias, that this is going to be almost like a reinforcement loop. And I'm trying to, and so then the next question is, so, okay, in the United States, we have the Southeast, where we see lots of people of a certain race, and other places, right? Like, where does this go? And so I continue to poke at this question, and I'm trying to reconcile it with what you're saying about its trusted institutions, because I'm having a hard time seeing how this sort of plays out in a way that isn't what we're all afraid of, you know, humans attacking each other.
Yeah, I mean, you know, we had these kinds of debates and problems throughout history. Every time a new information technology comes along, there is a big discussion about censorship. And, you know, when the printing press was invented, the big bestsellers of early modern Europe, they were not scientific books. Hardly anybody read Galileo or Copernicus. The big bestsellers were witch hunting manuals, how to identify and kill witches, very popular. Also popular were these extremist religious literature. The printing press was to some extent responsible for the scientific revolution, but also for the European witch hunt craze, which was a modern, not a medieval phenomenon, and also for the wars of religion. So they had a big issue with what kind of things you're allowed to print, and we have a big issue with what kind of things AI is allowed to say. The difference is that AI has agency, unlike printing presses. The printing press printed whatever you told it to print. AI is learning by itself. Any attempt to try and kind of in advance determine what these AIs will say down the road is ultimately doomed to failure, because they are learning and developing. This is a huge issue for democracies. It's even a bigger issue for dictatorships. One thing that people often miss is that dictators are terrified of these AIs even more than democratic governments. Because think about it. What is the most dangerous thing for a dictator? The most dangerous thing for a dictator is a subordinate more powerful than the dictator that the dictator does not know how to control. Dictators usually control their subordinates, their agents, by terrifying them. But you cannot terrorize an AI. Think about a chatbot, let's say in Russia. Now, a human is afraid to say certain things in Russia because he or she could be punished. But you cannot send a chatbot to the gulag. So how do you make sure that the chatbot doesn't start to say all kinds of things that it is not supposed to say? And there is, in essence, it's a new challenge for all kinds of human regimes, because it's the first time in history that regimes, either democratic or dictatorial, need to figure out how to control agents, entities with agency, which have no emotions, which cannot be terrorized or punished or whatever. So it's going to be a very interesting ride for all governments around the world, how to deal with this issue.
No doubt. Let's have one last question on this side. Vincent, you get to choose again. Or if you can combine your questions, maybe you can coordinate there. Yeah, we'll see. But these two are your last chance.
My name is Fabio, and I make it very short. I liked what you mentioned. Money is trust among people. And the goal is to have more trust with more people. Could you elaborate a bit? What would be the best next action to reach that goal? And maybe as a side remark, is this maybe the chance to overcome the concept of nations?
I don't think we need at this stage to overcome the concept of nations.
Gentlemen at the front, do you have a related question or something completely different?
I do. Actually.
Yeah, all right, fire away.
Because nations, I think, in your terminology, on your thought, would be fictions. On a related note, the space that the human Go player can operate in is limited by its evolutionary biology and so on, right? Whereas an AI is not. The fictional constructs that we can come up with as human beings are limited by our evolutionary biology as well. But an AI is not. Could there be fictions that could result in human flourishing, which far exceeds that which we could come up with on our own? And are we morally obliged, therefore, to give up to our robot overlords and allow them to determine what the fictions should be that we are then pursuing to maximize human flourishing?
All right. The end of nations and, well, sort of end of humans. You all have a shot at this, please.
The short answer is no. Very dangerous to just trust the AIs. Yes, they can create completely new kinds of fictions, but fiction, again, it can be helpful, it can be very dangerous. Nations are a good example. Yes, nations is something that we created in our imagination. They exist only in our collective imagination. They can be very dangerous if we don't know how to use them, leading to wars and conflicts and so forth. But they are also, so far, one of the best inventions, one of the best creations of humanity, because nations enable us to go beyond the immediate circle of friends and family that we know personally and care about millions of strangers that we never met. You know, patriotism, in its best form, what patriotism means is that I'm paying taxes so that strangers on the other side of the country will get good health care. This is patriotism. And people who imagine that without nations, we would be living in some kind of utopia, no. At present, we would just disintegrate into tribal chaos, with people caring only about their immediate friends and family. Yes, we need to find ways for nations too to cooperate between them, but this is the key, not to abolish nations. We are not there yet. in terms of what we are capable of historically. The question is, how do we make them cooperate instead of fighting each other? And here, yes, we need new imaginative creations also in the field of finance, which again should focus on building trust. So to take one famous example, when I look at Bitcoin, as a historian, I don't like it because this is a money built on distrust. The central idea of Bitcoin is basically electronic gold, that we don't trust the banks, the governments, so we don't want to give them the ability to create as much money as they like, so we create this Bitcoin. It's a currency of distrust. I do think that the future belongs to electronic money, but what we've seen over the last centuries is that it's actually a good idea to give banks and governments the ability to create more and more money in order to build more trust within society. So I'm not sure what money would look like in 20 years or 30 years, but I hope it will be a currency of greater trust and not a currency of distrust.
We'll get it done. And it's also reassuring to hear that institutions has a future and countries has a future. That will be happy dreams for me tonight. And we're going to talk to you at some point in the future and hope that we are still here in flesh and bones and not in our algorithmic forms. Thank you very much, Professor Harari. I can say that I have a very happy audience in front of me, and we're giving you a hand from us. Okay, it falls upon me to try to give you a very high-level summary of this adventure we've had over the last day and a half. This is like working in the BIS Innovation Hub, long days, hard work, but with a sense of spirit and humor. I will also tell you about what I have learned about expectations management from watching James Bond movies. That will come at the end. It's not about his tech gadgets, but you will want to hear that, so stay on. So what we have learned is that innovation without stability will lack trust, and stability without innovation will lead to sort of dying societies. We heard from the MAS Managing Director, innovations like AI are opportunities, need to be well risk managed. I think our previous speaker would underline the same. Central banks doesn't innovate for the sake of innovation. We're there to provide and develop further public goods. And a word from the HR perspective is that in the future, central banks will probably have less economists and more data scientists and cryptographers. Tell them that to your children when they think about education going forward. Interestingly, even if we talked extensively about technological innovations, many speakers pointed to the human factors, we're still around, how we should excite and engage people about novel technologies like AI, importance of not getting excited without the trust, keeping the human in the loops, I would say, behind the wheel. And this is a marathon, and we will not get it done anytime soon, but we need to pay a lot of attention because this is moving fast. Chairman Thomas Jordan, said there are 3 options for central banks grasping these quick changes. You can either wait and see novel technologies like tokenization and AI adopting to scale. Second, adopt them fully at an early stage, or take the middle road, proceed in stages, work together with the private sector with proof of concept and see pilots and see what we want to take on and not. We're here to help. The Innovation Hub is here to help. We agree with that approach, and we look forward to work with all of you, but also with the innovation units that are opening up in central banks outside the remit of the Innovation Hub. We will keep experimenting. with multiple, could you give me that pointer there from, sorry, talk amongst yourself, that's the one, exactly. We will keep experimenting, thank you Francesca, multiple central banks, partners from public sector and the private sector. And on this journey, let me give you a bit of expectations management. When I grew up, I loved James Bond movies, but I was always very sad when I saw the closing credits, until I got a little bit of comfort in the end. It said, James Bond will return. So, in that spirit, the Innovation Summit will return. And not only that, these are the dates you should nail down. And the last thing I say is my great thanks and admiration for my fantastic staff. They're not only incredibly capable, competent, and creative, doing their projects, as you've seen over these 2 days, but they can also pull off things like this summit. Thank you. This session is now closed.